So, good morning. Very good morning to all of you. Of course, I want to start by welcoming everybody to the first board meeting of 2024 of the IESBA. Even if it's already a little bit too late for that, I wish you all a very, very happy and successful 2024, since this is the first time that we meet after the new year started. So it's a bit late, but it's never too late. Happy 2024 to all of you and to the IESBA as well. Thank you to all those who made the way to New York to attend this meeting. I heard that a substantial number of you already arrived a few days ago, so I hope that nobody is suffering from jet lag anymore and that you will have your eyes wide open for what's going to happen over these next 3 days. I want to welcome, of course, also those who are attending virtually. Sadia Adam, board member, who unfortunately this time could not make it to New York, but you are here with us. Thank you for making an effort to attend virtually when we know that this is always very difficult. Robert Buchanan, good morning or good evening, Robert, I suppose to you, PIOB representative at this meeting, and staff and all those participants and also observers who are here with us today observing the meeting. Some familiar faces of people who in one way or the other make part or have made part of this family. Thank you all for making it with us. This is going to be an important meeting, and we have the spring in the air, which sets the perfect environment to lighter and shorter meeting and agenda. The fact that this meeting is going to be shorter and apparently lighter than we are used to does not mean that it is less important, but I'll come back to that in a few minutes. So I want to welcome as well the PIOB. I have already greeted Robert Buchanan. We will have 2 PIOB observers in the meeting. Unfortunately, Chego Modise, who was supposed to observe the meeting in person, couldn't make it due to personal reasons, and the PIOB kindly solved this problem by appointing 2 PIOB board members, Robert Buchanan, who is also the chair of IFEF, the foundation, and Dave Sullivan. They will share the burden of observing virtually because the time zones are actually very difficult for someone in a different time zone to observe the meeting all the time. So they will share this, and Robert Buchanan will observe the meeting today as well as tomorrow's tax planning and executive sessions, and Dave Sullivan will observe tomorrow's technology and CIV sessions as well as Wednesday sessions. So thank you very much, Robert and Dave, even if he's not with us yet. I also want to extend a warm welcome to Yohei, our official observer from JFSA, Japan Financial Services Authority, and a very special welcome to our new board members who are attending the board meeting for the first time. Tomoyo Imura from Japan, Amarjit Singh from India, and David Ray is there from France. Very welcome. Thank you very much for making yourself available to join the IESBA, and we are very much looking forward to work with you and to count on your contributions to make our important projects advance. Let me also take this opportunity to bid farewell to Carmen Pendest, technical advisor to Sadia Adam. Carmen is pursuing other and different career opportunities. We wish Carmen all the best of luck for the new chapter, and thank her for the contribution and for the support provided to Sadia over the last times, which is of course also support provided to the IESBA board and to our projects. Observing virtually alongside Robert, that I have already mentioned, and Sadia, we will have a number of familiar faces and people to us, like it is the case of Caroline Lee, former IESBA deputy chair, Richard Fleck, also former IESBA deputy chair and who is working with IESBA currently as a consultant. Former IESBA member Lisbeth Austerman, who is supporting Luigi currently due to Martha Camirius temporary leave. Denise Canavan, former IESBA technical advisor. Tone Maran Saxhau, former IESBA technical advisor, and Gina Maldonado, former technical advisor. I'd like to take this opportunity to extend a warm welcome to other international observers who are here in person. I have already mentioned that, and as well as those who will follow this discussion virtually or in our YouTube channel. So with this, and after these greetings, let me move to some comments and words about the agenda for this week. But before referring to this week's agenda very concretely, let me briefly allude to the work related with the Sustainability and Experts ED, even if it's not on the agenda of this meeting, is on our agenda of us all currently, because the exposure is out for consultation and the efforts of the staff and the board to make this consultation to be successful are extremely important and are meaning a lot. So it's not in the agenda of the board meeting, but it's in the agenda of the board in a very significant way. It's keeping us all very busy, and it means a lot of effort. The board may have seen, and I hope that you have seen, the launch of the exposure draft or the exposures involved a significant amount of work and efforts for which I consider that we are being rewarded. There is a significant impact already being made. We don't have an idea about the concrete reactions about the proposals, but we know at least that many stakeholders, and not necessarily only the usual ones, are aware of the exposure draft, which is the first objective, is to spread this consultation as much as possible to make sure that we will receive meaningful, representative responses from different stakeholders. It's not only a matter of number, it's a matter of quality and a matter of diversity of the respondents. So all the efforts in this respect are very welcome and very important until we reach the end of the consultation period. A word also about the recently approved ethics standards for tax planning that we approved in December. The PIOB has these standards in its agenda for the 10th of April to hopefully certify the standards, and the IESBA, the staff and the board is already planning a comprehensive and significant rollout program and outreach program to make these standards, after their approval and certification by the PIOB, known, understood, and impactful. We will have time to speak about these outreach initiatives. I'm not going to mention them at this stage, but we should not forget that this is going to happen, and that is meaning also a lot of focus and effort from the board and the staff. Now, this one promises to be a very critical meeting in spite of the very different, being very different from the usual ones. It's shorter, as I said, and even the structure and the content is a little bit different from what we have been used over the last months. We will not have big decisions to make or critical decisions, big pieces of paper to discuss. It's more about making the board think, reflect, discuss about critical topics and strategic topics that we will have to work upon over the next times, namely based on our strategy and work plan 2024-2027, about which we will, we are starting to work. The fact that the three exposure drafts on sustainability ethics for sustainability reporting, ethics and independence for sustainability assurance, and experts are now out for consultation allows us a very rare and an important window to think and to discuss strategically about the work streams that we have decided to embrace by the end of 2023. And we should not at all neglect or waste this opportunity for reflection, for a little bit quieter discussion, conversation among the board members about these topics. As we are kicking off the firm culture and governance working group's first session with the board, we should not by any means waste this opportunity to stop and think, which is something that we all need to do, about how we will address one of the burning platforms that we chose and that we decided to identify as one of the strategic topics for the next strategic cycle. This work stream is already raising some curiosity and attention, which probably confirms that at the minimum, it is relevant and that stakeholders have expectation in this respect. So we have to work to meet those expectations, and the expectations is that we work honestly and hardly to provide the best that we can within our competencies and our responsibilities in that respect. The task force, the work stream will present its vision to the board. It is my conviction, though, that the first part of the work, which is to know and understand the problems and ideal responses, will determine the success of the future work of the IESBA in this respect. I, therefore, will encourage the board members to focus on the most that they can on the board session on firm culture and governance and engage in the discussion. The fact that we will have a number of presentations, a significant number of presentations, doesn't mean and should not mean that we are not asked to discuss, contribute, make questions, and make this a more dynamic session as much as possible to start having some ideas about what we are going to do. The work stream has prepared a substantial agenda, with, as I was saying, of presentations. There will be an impressive lineup of speakers. We will be hearing from Imran Vanker, Director at IRBA and Chairman of the Independent Audit Committee of the United Nations, South Africa, Claire Lindridge and Ellen Gale from the UK Financial Reporting Council, Professor Kartik Ramana, Professor at Oxford's Blavatnik School of Government, and Jeremy Hirschen and Rebecca Sand from the Australian Tax Officer. So academics, regulators, people from different origins who will provide us with insights, ideas, provoke our discussion with insights on firm culture and governance. The objectives of these presentations, the main objectives are to provide the board with additional information from different perspectives on what could be or not culture and governance issues leading to failures in accounting firms, or helping, seen from the other perspective, improving the quality of accounting services, and offer us some thought-provoking facts and questions for the board to reflect upon. After that, on Tuesday, we will receive a presentation on technology from Jason Bradley, who is the Director of Standard Setting and Oversight at the Accounting and Financial Reporting Council in Hong Kong, along with an update on the Technology Working Group's activities. And this will be followed by the first presentation to the board from the project team on collective investment schemes, collective investment vehicles, pension funds and investment company complexes after the discussion and the decisions that we have already made in December in this respect of this new work stream. This will be followed, and the last session on Tuesday will be a brief update on the initial planning to promote the launch of the tax planning standard that I mentioned before, anticipated on April 15th, and related engagement with stakeholders. On Wednesday, we will begin with an update from IESBA staff on the feedback received on the ISA 5000 exposure draft, as it relates to matters subject to IESBA and IESBA coordination. And I raise your attention for the importance of this session, because if it has always been important to keep a close coordination with IESBA, reaching this phase of the exposure draft and progressing towards the approval and implementation of the standards this coordination and this close relationship is becoming even more critical and more strategical. So it's not only for us to listen in a passive way, it's to listen and understand what's in it for us, both IESB and IESBA, to make the best out of this coordination between the two boards. So this will be followed by an external presentation from Mrs. Anne-Marie Vital, Chair of the IFAC's International Panel on Accountancy Education, who will provide a presentation on the proposed revisions to the international education standards. Lastly, we will conclude this week's meeting with an update from the PI rollout working group. Let me take this opportunity to thank all the task forces, working groups and staff for their hard work in preparing the agenda materials, but also the task forces, working groups and staff for the work which is not visible in this agenda and that has been keeping everybody extremely busy. With respect, moving to another topic, with respect to recent outreach and related activities, this is one of the topics that is keeping us busier. As you can see from the schedule of outreach that has been distributed to the board under agenda item 1B, the first quarter has been extremely busy for the IESBA. And the highlight was the intense level of activity surrounding the launch of our sustainability and exposure draft. We received important, extremely helpful, valuable support from our communications consultant Brunswick Group, and we will receive, therefore, a comprehensive account of our communications and outreach activities on our sustainability ED launch at the June board meeting, not today and not now, as we are still in the midst of engaging intensely with stakeholders during the public consultation public. So we will wrap up on these initiatives in July, but we will provide you with some more information about the most important or more relevant initiatives so far in that respect. And for now, and for that, let me take this opportunity to invite Dave Johnson from the IESBA Communications and from IFAC Communications team to provide a brief update on the highlights of the launch activities so far. Dave, the floor is yours.
Thank you, Gabriella, and thank you to the board for allowing me to take just a couple of minutes to share some of the highlights from the recent efforts to promote the sustainability reporting and assurance exposure draft, as well as the exposure draft on using the work of an external expert. As you're aware, since January 29th, when we launched the exposure draft, we've been strategically engaging with diverse stakeholders from Davos to Nairobi. It's exciting to see just how well our messages have resonated with a global audience. I can't thank the board, the TAs, the IESBA staff, and our partners at IFAC Comms, and especially our consultant friends at Brunswick for the help pulling all of this together. Through these efforts, we've earned significant media coverage in publications and news outlets around the world, many of which covered us for the first time. At the top of the list was, of course, Reuters. With its worldwide network of media outlets and millions of monthly webpage visitors, our featured piece in Reuters at the launch of the consultation period brought our exposure draft to a significant, diverse global audience. Of course, Reuters wasn't alone. Over 30 separate publications worldwide with a combined reach of over 1 million readers covered our global release in the first few weeks. Our efforts resonated within the accountancy profession itself, as demonstrated by Accounting Today's feature of our own Ken Seong, an in-depth articles in the Accountant, Responsible Investor, International Accounting Bulletin, and an upcoming interview with our chair, Gabriella, in Corporate Disclosures. Our message also resonated in global publications that we typically do not find ourselves in. Publications like The Actuary, which is a primary source for the actuarial profession worldwide, ESG Today, which focuses on global environmental, social, and governance issues, and Business Green, a leading voice in global sustainability for the business community. As you're aware, we also hosted 3 global webinars, which attracted significant attention. Next slide, please. Over 1,100 individuals from more than 60 jurisdictions registered to participate in these interactive discussions, which provided detailed overviews of the proposed revisions to the code. One of the 2-hour webinars facilitated an engaging and innovative dialogue with nearly 300 live participants from 57 countries. Recordings of all 3 of these webinars can be found on our website and our YouTube channel. Beyond our own webinars, our team also highlighted our work at the recent IFRS Foundation Sustainability Symposium here in New York, as well as the UNCTAD United Nations Conference on Trade and Development, UNCTAD's African Regional Partnership, at the UNCTAD's International Standards of Accounting and Reporting, and before the South African Institute of Chartered Accountants. Turning to our social media efforts, in the first 50-day period surrounding our launch, we witnessed a remarkable uptick in engagement, with over 1,000 unique visitors to our LinkedIn page, marking a 25% increase from our typical traffic during that same time period. The surge in interest translated into significant growth in our community, with over 725 new followers in the 50-day post-launch, effectively doubling our previous 50-day gain of 300 followers. Notably, in that first 2 weeks after the release, we attracted nearly 500 new followers, surpassing the growth of our peers at IFAC, IESBA, IESBA during the same period, demonstrating the compelling nature of our content and the growing interest in our mission. Thank you all for lending your voices to this important effort, and I look forward to continuing to tell this important story.
Thank you very much, Dave, for this presentation. As I was saying, this is not supposed to be a full list of all the outreach and press initiatives, but to just highlight the general picture of what has been done and what we have achieved. Let me remind the board once again that communications and outreach is strategic to the IESBA work. It's always strategic and important, but at this stage more than ever, it is important that we communicate the value and importance of our work in the public interest as broadly and impactful as possible, but also making it as understood as possible. It's not only about communicating the existence of the exposure draft, but also explain where we want to go and how we want to go. So I encourage all board members once again and TAs to be ambassadors for IESBA in your respective jurisdictions or other international opportunities and within your networks and circles. And I would also encourage and kindly ask all the board members to, as much as possible, coordinate or sign on any initiatives that you may be undertaking to the staff and chair, so that we can have a consistent approach to communications, outreach, etc., avoiding any kind of overlap and ensuring consistent presentations, language, and etc. Thank you very much to all board members, to the staff, of course, who has been having a hectic time with all these seminars, webinars, etc., which is not only participating but organizing, which takes a lot of work. And thank you to the board members who so far already participated, some of them in a very significant way and allocating a lot of time to these initiatives. Thank you for your generosity and for your availability, and we will keep counting on you all as we move forward with this exposure draft. So a brief update on the planning committee activities. The planning committee met in February 2024, and we discussed the updates on the various work streams on the SAC, the IESBA SAC agenda planning, the Stakeholder Advisory Committee. We considered the potential collaboration with the Observatoire de la Finance with respect to the Global Ethics and Trust Finance Prize, which is still under consideration. And we planned a little bit the September and December board meetings, as well as the recent outreach initiatives. With respect to the Stakeholder Advisory Committee that I have just mentioned, as you know, this Stakeholder Advisory Committee is replacing the CAG, the Consultative Advisory Group, which were two groups, one for each of the boards, IESBA and IESBA. This new SAC not only replaces the two CAG, it's one SAC, one Stakeholder Advisory Council, for the two boards, but it also has a different agenda and a different mandate, which is to provide strategic advice to the boards and not that much to discuss the technicalities and the technical parts of the projects. the Stakeholder Advisory Council launched at the beginning of this year, and on February 6th, the PIOB announced the composition of the SAC, which comprises so far 27 members from diverse professional and geographic backgrounds and two official observers, with Alan Johnson, that I think most of you know, who was the former president of IFAC, will chair. The SAC, the first meeting of the SAC, will take place on the 29th and 30th of April. It's inaugural meeting, and the agenda is already available on the SAC website. The second meeting is scheduled for October 10 and 12, 2024. With respect to the NSS, the National Standard Setters meeting, it has been scheduled for May 2 and 3. This is going to be the first in-person meeting after a long, period where the NSS was meeting only virtually. I think that after the pandemic, it's the first in-person meeting, and it will comprise a joint IESBA and IESBA NSS session on May 2. And with this, I will invite Ken now to speak about other matters, namely the staff Q&A publication on sustainability AD, but Ken may have other topics to address with you.
Thank you, Gabriela, and good morning, good afternoon, good evening to everyone. Before I have some administrative matters to update the board about, I just wondered if I could turn to Jean first, maybe to speak about the status of our efforts on the electronic international standards platform, where our code resides online. Jean?
Thank you, Ken, and good morning to everybody. It's with great pleasure that I can inform the board that the electronic handbook, the EIS, International Electronic International Standards, has been released end of last week and is available currently on the web page. It is the PDF version that was released in September last year. This is now available for you to access. I just wanted to inform the board a little bit of the challenges that we experience in getting to the point that we are having this handbook. Currently, the ingestion process of getting the electronic handbook involves the full Word version to be imported into the platform. And interesting, since January 2023, where Microsoft Word has updated their program about 15 times. So this creates a lot of havoc when you import actually this document, and results in a lot of manual changes in the background. So as you ingest, there's a lot of changes that happens, and the service provider had to invest a lot of time and resources to getting the handbook in the format and in the way that it needs to be understood and interpreted correctly. So this has taken away a time from the service provider to actually to come to a solution, besides just digesting and getting the electronic handbook to a usable state. But we're very happy to have the handbook as is, and is 100% in the sense of in the understandability. Just around the 2024 handbook as well. So we're in the process of updating the 2024 handbook. That would include the provisions of the public interest entity, as well as the technology revisions that will come into effect at the end of this year. The handbook would be available in PDF, so we're in the process of getting that handbook ready. Because of the challenges that we explained regarding the EIS, there might be a little bit of delay in getting that format as we pause and actually see engaging with the service provider and getting a better solution. Thank you.
Thank you very much, Jean. If I may turn to Cam for an update on a staff publication that's going to be released imminently.
Thank you, Ken. So today, as Ken mentioned, there will be a staff publication released. It is on the prohibitions in the code, prohibitions in relation to the interests, relationships, and circumstances focused on PI audit clients. So this publication is intended to be a useful reference when the board or staff speak with, for example, regulators, governments, policymakers, academics, firms, etc. It's meant to be a quick guide Within each prohibition listed, there will be a footnote referencing to the exact paragraph in the code, and the code meaning the 2023 code as is, but assuming that the technology and PI revisions are already effective, so possibly the 2024 code as I say it. Recognizing though, however, there will be questions around, which of these prohibitions might also be applicable to all audit clients? So therefore, including non-PI audit clients, the footnotes also indicate where this is applicable to also all audit clients. However, there is a disclaimer upfront, also knowing that this is a summary of prohibitions. It is not a replacement for reading the code, and the stakeholder must go back to the code to understand the detail of how each of these prohibitions apply. Thank you, and back to you, Ken.
Thank you, Cam. And just for the board's information, there is already an extant document that lists all the prohibitions in the code. So essentially, that is an update to the document that's been on our website for a number of years and was in dire need of being updated. Another development really for the board's information and heads up, and that is that staff has been working on a set of questions and answers, FAQs, relating to the sustainability exposure draft. The intent of this document is really to facilitate stakeholders' understanding of the board's proposals in the sustainability exposure draft. We will also leverage this document as we go out on outreach to stakeholders, and in particular through the seminars that the board has been apprised of by Gabriela that are coming up in April and May. So that is a document that staff intends to get to a good draft with a view to circulating to the board for fatal floor review next week after the task force has had a chance to review the document. A couple of administrative matters before we close off the opening session, Gabriela. First of all, there is a board photo session Tuesday around lunchtime. It's in your agenda. It is going to be taken upstairs in the I believe it's in the lobby area, Astu, if I'm not mistaken. Yes. So if you could make your way tomorrow at the beginning of the lunch period with clearly some a proper business attire for that session, that would be very helpful. Secondly, in relation to the board social activity on Tuesday evening, information will be circulated later today to the board, so we're just a little bit behind on this one. But as you will be circulating information to all, and I would encourage all of you to sign up so that we can all get together and really connect on a sort of more individual basis. And finally, from me, just a reminder to all board members to speak close into the microphones because we do have observers in the room. And sometimes if we're not really speaking in the microphones, it can be challenging for those at the back to hear the conversation. So I'd encourage all of you, if necessary, to bring the microphones closer to you and speak directly into the mics. With that, Gabrielle, I'll turn it over to you.
Thank you very much, Ken, John, and Cam. I'll be brief. Just mentioning that the draft minutes of the December IESBA public session have been distributed to the board for review. These are important minutes because, as you know, we made some significant and important decisions, and it's important that everything that is there is all the board members are comfortable. So if you have any comments, please email them to us2 by midday on Tuesday, so tomorrow, March 19, and the board will be asked to approve the final minutes on Wednesday, the last day of our meeting. And with this, unless anyone has wants to raise any question or any concern, the opening session will finish here, and we will move immediately to the next topic, the first substantial topic in our agenda, which is the firm culture and governance. And before I give the floor to Chana, who is the chair of this task force, just to introduce the next presentations that we will have. Let me very warmly welcome Imran Vanker, that I see already on the screen, and who very kindly offered to make a presentation to the board, taking into consideration his experience and his knowledge on the field. Imran, I have already introduced him, but I must mention as well that Imran is a former member of the IESB, so quite familiar with this system. And you're very welcome, Imran. Thank you very much. Chana, the floor is yours.
Thanks, Gabriela. Good morning, everyone. So the firm culture and governance project is one of the key projects for IESBA in the 2024-27 strategy period, as Gabriela mentioned in our opening remarks. This is going to the PIOB next month for approval as well. Last year, during the external consultation process on IESBA's future strategy, we heard from various stakeholders that there are recurring ethical lapses in firms in multiple jurisdictions, and that this has eroded public trust in the firms and the accounting profession. In the last 5-6 years has been particularly challenging. We had issues in the UK that resulted in various reviews, such as the Bryden and Kingman reviews. In South Africa, which I'm sure Imran will speak to, there were cases such as the Gupta brothers case. And then we had incidents of exam cheating in USA, Canada, and Australia, and some of them were ironically on ethics exams. And then more recently, we have had confidentiality and conflicts of interest breaches in Australia that has led to multiple parliamentary inquiries which are currently running and due to report in the coming months. So the IESBA came to the view that the persistence of such unethical behavior in firms called into question the broader issue of firm culture and governance and how they might impact PA's ethical behavior and compliance with the code. Given the significant public interest consequences of unethical behavior in firms, IESBA determined to take a leadership role as a global ethics standard set in addressing firm culture and governance as a strategic priority. I want to note that the PIOB also strongly supported the firm culture and governance project in its comments for the December 2023 meeting. The comment made by the PIOB is that it is in an overarching theme that has assumed more relevance in the most recent scandals and unethical behavior evidence in firms. The project may help change professional accountants' behavior across the full range of professional services provided by firms, including audit, consulting, and tax advisory. I note that in the stakeholder outreach activities for this meeting that IOSA Committee 1 had also commended IESBA for commencing this project. While the support from the stakeholders is very welcome, this is going to be a challenging project with many obstacles. However, it is in the public interest for the board to consider whether there are underlying themes in these recurrent ethical lapses that have occurred over the last 5 to 6 years in UK, South Africa, US, Canada, and Australia. Subject to the work yet to be undertaken by the working group, because this may involve developing NAM or changes to the code. So this is very much a work in progress at the moment. We have a great team for this challenging project, and I would like to thank them all for their contributions to date. Rich over here, and I think Hector and Rani, everybody's on this side, so it's difficult to see. Then we have Jeff and Carla from the IESBA staff, and Richard as a consultant. I hope he's online. Okay. So in today's case studies, we will examine some audit and non-audit scenarios. The board needs to remember that this project focuses on the whole firm rather than just the audit part of the practice. It's also important to focus on the ethical and behavioral aspects of the conduct rather than the particular service that has been delivered. At this stage, we are in the information gathering stage, understanding the issues, conducting research, and engaging with stakeholders. We don't want to discuss potential solutions today. So please keep an open mind as we go through the various presentations and case studies. I'll now hand over to Jeff to go through the agenda for the day.
Thank you, Chana. Next slide, please. And good morning, everyone. A special welcome to our new board members. Next, there you go. Just very quick rundown with you what we are wanting to I guess work with you today and what we want to achieve today. We do have a full day of material on firm culture and governance on day one. As Chana has mentioned, really today is very much just wanting to socialize with the board some of the concepts and issues that the working group has been working on. And of course, as Gabriela has mentioned, that we do have the luxury for this board meeting to spend a bit more time and be able to organize a few more external presenters, so you can hear from different perspectives, different jurisdictions. So we're really fortunate to have all the speakers that we have today, and Carla will introduce them as they're due to present. So as Charles mentioned today, we're not looking for answers today. It's not the purpose of today's meeting. As you would appreciate, the working group is still very much in the information gathering stage. But today we want to give you a sense of some of the issues and the questions that the working group's been working on. And as Chan has mentioned, that some of the cases you hear today from some of our presenters, they might be talking about audit cases, but there'll be others that are non-audit related. And if I can bring the board back to a few months ago, as we looked at the SWP, we made it very clear that this is about a whole of firm culture issue, a whole of firm governance, and not just an audit related or just one particular business line. So the order today, we will first have we will hear from two regulators this morning, and then after the first break, Richard Flack will come and speak with us on some of the fact findings that the working group's been looking at, and some of the concepts and issues and how it all fit together in that sense. And then we will hear from Professor Ramana from the University of Oxford just before lunch. And then after lunch, Chana will speak to us and give us a bit more of an update of what's happening in Australia. And then we will talk a little bit more about what is currently in the code. And we feel that at this point, then there'll be quite a bit of discussion going on with the board, and there'll be a good time for us to get into the terms of reference. And hopefully then at that point, we will get the board to approve our draft terms of reference. And then at the end, we will then have our representatives from the Australian Taxation Office. Of course, it's very early for us, and it's very nice of them to be able to join us this afternoon and speak to us about the PwC case that they've been working on. And then at the end, we'll give you a sense of what our proposed timeline is. So without further ado, I'm going to pass to Carla, who will introduce our first external presenter. Thanks, Carla.
Thank you, Jeff. As mentioned before, we have an impressive lineup of external presenters joining us today who'll be sharing insights, thought-provoking insights into the topic of firm culture and governance. As introduced by Gabriela, the first speaker is Mr. Imran Venka, who's the Director of Standards at IESBA, which is a regulatory body in South Africa. He's a friendly face to the board, and he was previously a public member of the IESBA, and I personally had experience of working closely in one of the QM standards. Mr. Venka is also a chair of the Independent Audit Advisory Committee, IAAC, at the United Nations. His experience include providing advice on audit, assurance, internal control, governance matters to expert committees of the United Nations General Assembly, the Parliament of South Africa, private and private sector audit committees. So Imran, the floor is yours. Thank you.
Just a sound check. Can you hear me?
Yes, we can.
Thank you, Ken. It's a quarter to the hour. Thank you so much for the kind introductions, Chairman Gabriela and Carla. I've really been getting excited about this presentation today. And the reason is that it's been promoted so much on LinkedIn that I found myself starting to look forward to hearing what I was going to say today. And that really put a lot of pressure on me to make sure that my message was as good as the interest that has been generated on social media about it. So speaking of social media, Carla, there'll be a few opportunities for some social media posts, particularly as the slides go up on the screens around you there in the boardroom. So good morning, Chairman Gabriela, and good morning, distinguished members of this board, all your technical advisors, our program and senior director, Ken, and the hardworking and brilliant team, Jeffrey and Carla, ladies and gentlemen. I must say this on behalf of standard setters and regulators. We really appreciate the work that you do. What you do is irreplaceable to us as national standard setters. So thank you very much for all that you do, especially on all of these projects that you've accelerated in the recent past. We really appreciate them. We have not hosted an IESBA chairman in South Africa in the 10 years that I have been in this job. So I hope, Chairman Gabriela, that we'll be able to break that drought soon with you and bringing you with Sadia's encouragement to visit us here in South Africa. Thank you for inviting me to join you on this day as you kick off your board meeting discussions on this topic of culture and governance. I have a feeling, Chana, that this is going to become known as the CNG project in future, as our projects tend to take on abbreviations. And so I'd like to, in doing so, acknowledge the firm culture and governance working group of this board, led by my old friend and colleague, Chana. I appreciate very much your terms of reference. I acknowledge its contents, and I'm excited about the prospect of your report in December this year. But in coming to this meeting, I decided to come with a few gifts. And the first gift I had in mind was to help Chana and his working group design a poster for your working group. Now, I'm no artist, so I turned to an AI tool to help me. I gave it a suitable prompt. I gave it the prompt a couple of times. And then I said to it, let's see what you've produced. And I thought, let me just do this in a sincere way and share with you the poster that I've created for this project. I'm also going to share a movie with you and a few other little bits, but they're all the gifts that I have brought. So next slide, please. What you will see on the screen now is the poster I created. And the first thing you're going to notice, because of who we are, you'll notice that governance is spelled wrong. Well, the AI tool, despite me asking it numerous times to spell it right, it insists on spelling it wrong. But you can imagine the prompt I gave it. I said, we want to start a global project in the realm of ethics for professional accountants. The project relates to culture and governance. Help me design a poster. And I couldn't imagine a more confusing landscape for a poster to tell the story of culture and governance. And I think that in some ways describes those opening remarks that you just made, Chana, that why would we have 4 elephants on a poster of culture and governance? And of course, they're not African elephants, so I really don't understand where they come from. But also what I observe on them is that there are these buildings, landmarks, some icons, some symbols, some mosaics, and really a mismatch of things that somehow this AI tool thinks represents culture and governance. So you can imagine as you hear each speaker today, we're all going to come with perspectives of what we think culture and governance represent. As you do outreach and further research, you're going to hear more of the same. And Chana, one day you can put up this poster with your working group and say, well, how do we make sense of why we have elephants and temples on the same screen? And what, in fact, if anything, are we going to do about this in the code? So, as I said, that was my first gift to you at no charge. But I also realized that you're going to hear probably some very tough stories today as people bring to you their case studies. There's going to be very little for you to smile about as we encourage you to do work through the code to address issues of culture and governance. And usually when I speak nowadays, there's always an opportunity to smile and to give some uplifting anecdote. And I thought that you were not going to enjoy me as a guest if I didn't give you something uplifting to remember me by, or at least something positive to start the conversation with. So what we decided to do was do a search of some popular culture icons. And I decided that we would turn to the Star Wars movies for some inspiration for this project. So having studied all of the movies ever made, I discovered that there was a movie made exactly about this topic. Now, this may come as a surprise to you. Next slide. I'd missed this movie before, but in fact, there is a Star Wars movie which is titled Legends of the Galactic Republic and the Rise of the Ethical Alliance. So this is an entire movie being told about the work that this working group is undertaking and some of the challenges that you are going to, you have in store. And indeed, in the next slide, Kala, the story is being told about the project that you are going to be undertaking in a universe far, far away, where the financial order teeters on the brink. A new hope emerges, the Ethical Alliance, a group of accountants sworn to uphold the integrity of the cosmos, battles the shadowy forces of fiscal irresponsibility. As the guardians of governance, they navigate the treacherous realms of compliance and regulation, wielding their culture and calculators like lightsabers against the dark side of accounting. And I'd love to play that for you with a Star Trek musical track, but I think you get the idea about how grand and a project this could become, and the type of questions and answers that you are going to be dealing with. But the story doesn't end there. During this fictional Star Wars movie, there is a particular scene where conversation takes place between two parties. On the one hand, there's Luke Skywalker, everyone's favorite character, and there is the wise old man of the Star Wars movies known as Master Yoda. So in the next slide, you are going to see this conversation unfold. So Luke asks Master Yoda a question, and this is a great social media pic. Luke asks Master Yoda a question. In the world of ledgers and credits, what truth about ethics stands firm and forever? Master Yoda, who may be disconnected from things on earth, in his wisdom says to us, and of course in his unique style, he says, solved. Most ethical dilemmas of accountants have been. Yes. Now, if you're not a fan of Star Wars, you may not understand immediately what that means, but what it means is summarized on the next slide in ordinary English. What Master Yoda is saying that in his view, most ethical dilemmas of accountants have been solved. Now, we could have a poll in the room, and I could ask you to raise your hands whether you agree with this or not. But in the world that I come from, where we read the newspapers every day, at least in some parts of the world, and you read what regulators regularly say, then if I ask you to raise your hands, 2 hands if you disagree, we'll probably have quite a few people raise both their hands. And my view about Master Yoda's claim is that despite all of our best efforts, standard setters, regulators, practitioners, and everyone else who's part of a multi-stakeholder standard setting model, we have not yet solved all the problems, and many problems remain to be solved. That's why you are exploring the topic of culture and governance. You want to see that whether within this topic there are problems that indeed can be solved through the code or solved through standard setting. Let me give you this acknowledgement though. The code solves many problems. It in fact solves hundreds of problems, and I have some statistics about that a little later. But it's some of the big ones that somehow escape the attention of the code, that I hope within the scope of what you think about and what you do further research on in this working group, that you may decide to take on these challenges to solve. So a little bit more about myself and our professional work. By doing so, I hope that it'll help you reflect a little bit more carefully about the South African experiences and how this could be relevant elsewhere in the world. So together with Sadia Adam, your board member, I work for the audit regulator and standard setter here in South Africa. We are called the IRBA. The next slide reflects our logo and where we operate. Some key statistics about the market for professional accountants and auditors in South Africa. Kala, next slide. Yeah, thank you. That's great. We have about 70,000 professional accountants in South Africa. That's a fairly big market, the size of a mid-sized economy. We have about 4,000 registered auditors. We have 2,000 audit firms and many more other accounting firms. And at any one time, we have about 10,000 trainees preparing for one or other professional qualification. The South African profession enjoys mutual recognition agreements in about 20 countries. And in one trust survey conducted last year, the profession enjoyed a trust level of 83%. So this is fairly significant. And in a few years ago, prior to COVID, when the World Economic Forum still did its annual rankings, for 6 years in a row, it placed South Africa as #1 for the strength of its reporting and auditing standards. Some key statistics about South Africa, though. South Africa as an economy is a member of the G20 nations. We are also a founding member of the BRICS group, Brazil, Russia, India, China. This group is rapidly expanding. We are amongst the largest economies and stock exchanges in Africa. We have about 3,000 pies in South Africa. And importantly, which sets the scene very well from what I'm about to say, we have a strong corporate governance environment, with the King 4 Code very well known throughout the world, and a corporate reporting environment which makes mandatory reporting of integrated reports for publicly traded entities. But despite that, what you gather from these statistics is that South Africa is not an outlier. And hence what I'm about to share with you is it's possible that this is relevant in many other economies around the world. So what happened in South Africa that could easily happen elsewhere in the world? That's what this slide says. Did I really actually just say that? I don't wish this on anyone, that it should happen elsewhere. It's just a fact. And I guess this fact gets proven time and time again. But what's useful today is for me to reflect on what did we learn from what happened in South Africa, and how could I share that with you? And crucially, if you go back a slide, please, how did the profession react to what happened in South Africa? And how did the public react to what happened in South Africa? So I want to paint a picture for you. We have a very iconic weekly financial publication in South Africa called the Financial Mail. Regularly, when it is published in the middle of the week, it extols some great investment opportunity, some great risks that the economy is facing. And as the next slide will show you, this is what a typical montage of Financial Mail covers would look like. And this is why why those of us working in the financial field will take an interest in what they have to say. But one week, a little while ago, when we were at the peak of these accounting issues facing our country, we all woke up to a copy of the Financial Mail that landed on our desk. It seemed like the barrage of scandals were never ending. We had scandals that no one could have ever imagined, and we had scandals in areas that we hadn't even defined as a service before. That firms were getting in trouble in things that the code hadn't covered. We had the reputation, we found that the reputation of some major players got hurt overnight. And it placed a lot of pressure on everyone, investors and the public who had lost money. So then we woke up to this headline. Next slide, Carla. And this headline really was a moment for pause. When the most authoritative weekly publication in South Africa decided to put all of us on its cover. And in the memes around the headline are just the names of all of the entities in South Africa that had created all of the problems. And so the Financials Mail makes us this question. It asserts that auditing is broken, and it asks who broke it. And then it asks whimsically, can it be fixed? This was devastating because the story quoted heavily from our IESBA publications, and others who wrote about this quoted heavily from our code and your code. It described how bad things were. Of course, there was a lot of exaggeration. This is the media after all. They mixed up the technical issues. They mixed up accountants and auditors. They mixed up local auditors and foreign auditors. But I think what is relevant is that they saw a trend and they drew a conclusion. And at the heart of the trend, they said that the profession faces familiarity threats, independent issues, and that the culture of our firms and the governance of our firms were threatening the work that they did. So the question is, now that the dust has settled in South Africa, could the same still be said about the profession elsewhere in the world? And could this happen again? Sadly, we think it's possible, that this is the case. And so in preparing for this presentation, I reflected on a message that I brought to this board at an NSS meeting a few years ago. At that time, we asked ourselves, what were we learning? And I concluded that speech then with the following slide. Next slide. So I call this my Vienna slide because we said at that time to each other that there are some questions that we ought to be asking for our next standard setting meeting. And I would like to just highlight 3 of them. One of them was that in relation to the matters that we are now facing, was our principles or rule-based approach the right approach to dealing with them? We asked ourselves that we faced a profession that was not very transparent. And we asked whether steps in the area of transparency could make an impact on how the audit profession and the accounting profession are perceived. And then we asked ourselves, in light of what had happened at the time, whether we as standard setters and those who regulate truly understood the public expectations over the accounting profession. Of course, you all are dealing with the same questions. It's part of what the think tank that has been set up now will deal with here at the IESBA. But in researching this last week, I came across 2 headlines, the first of which I'll share in the next slide. This one came out of Australia, and it was an interview with the relatively new PCAOB chair, Erica Williams. Next slide, color. And this is a story that appeared in Fortune. And the storyline reads, the accounting crisis that everybody seems to ignore and the regulator fighting to fix it. I think that's probably a half-complete description. I think that this board is fighting to fix it. I think that standard-setting bodies around the world and regulators around the world are trying to fix it. And certainly what your board has done as a responsive board is certainly not ignoring this, but there's a perception in a very well-known publication that this is the kind of challenge we're facing, and this is now March 2024. The other headline, which comes from everyone's favorite Australia in the next slide, is yet another shoe in the PwC Australia matter. And this one that appeared in the Financial Times a few days ago says that jobs are being slashed after the tax leak scandal. Sadly, we understand how hurtful this must be both to the firm and to those who are losing their jobs, especially at the time when the world is not experiencing any kind of great economic growth. These kinds of blows to confidence are not good for our profession. But having spoken about those, I've promised you some case studies about South Africa, and that's what I'm going to do next. So we have 10 or 12 really good South African case studies. And in the next slide, I'm going to spend just a few minutes, a sentence or 2, on these first 6 case studies. I think why I'm going to leave this here is that as the work of the working group progresses, I think Sadia would be interested in connecting you to the firms involved in these. And now that a little while has passed, also connected to our investigators where investigations have been completed. I would argue that South Africa is probably one of the richest sources of practical information this working group may be looking for. And I may even suggest that you undertake a trip here to meet firms and regulators face-to-face to talk about these things. So the first set of case studies, the first 3 are linked because they all relate to one firm. And it's a fascinating story about a family from India which decided to host a destination wedding in South Africa and landed a private plane at a military airport. The public outcry when news about this reached us was, how dare they? How is such a thing possible that a private family can land a private jet at a military installation coming to a wedding in South Africa? And serious allegations of corruption were attached to this. What was really interesting, though, was that the leadership of a Big Four firm were invited to attend this wedding. And somehow they attended the wedding, and it later transpired that the expenses linked to this wedding were claimed as business expenses. And the audit partner responsible for the audit helped the client to change their financial statements to claim that invalid tax deduction. IESBA has taken strong action against the practitioner in this case. He's been disbarred. He no longer is allowed to practice. But the issue that comes up here in the realm of culture, in this and in the Linkway trading case, which is the entity through which these transactions happen, was that what kind of client acceptance procedures played a part here? How did the firm's risk and independence procedures permit such engagements from continuing? And what kind of RITP tests were applied in circumstances like this that would allow a firm to be associated with this kind of activity, which was universally condemned by the public and media in South Africa? The third case, unfortunately linked to the same firm, involves the tax authority in South Africa, the South African Revenue Services, where the firm was engaged to undertake some kind of a report into some alleged covert unit that was operating within SARS. That report was used to dismiss some very well-regarded leaders of SARS in South Africa. And in fact, the most senior leadership was dismissed, and also implicated the Minister of Finance of South Africa, who was previously the Commissioner of the Revenue Service. The firm then makes a statement after some doubts are raised about its report, that after its international network had reviewed its report, it concluded that its report was not in keeping with the global standards, and that it was decided to withdraw the entire report. And for the first time, we saw in South Africa the firm offering to repay all the fees that it had earned on this engagement. Needless to say, an enormous amount of damage was done, far greater than the fees paid. So the firm pays back the fees for audit and NAS and everything else. And interestingly, at this moment, the firm commits to transparency reporting long before the regulator makes this requirement in South Africa. But the culture issue here, of course, is how, when faced with allegations, did the firm deal with the allegations? And also, how does the firm accept an appointment in an environment which is known to everybody to be a politically hostile environment? What kind of threats were seen and how were these threats responded to? The next one involves an actual audit, an audit of a lender, African bank, specializing in the low-income market. Sorry, not next slide, go back to the previous slide. This lender experienced some liquidity problems. It was placed under administration by the Reserve Bank. But there were warning signs everywhere. For months, there were warning signs that all was not well with this bank. And so there was some public disappointment with the role of the auditor. IESBA investigated the matter, and we found the audit partner guilty on 5 charges. And there were very substantial sanctions that we meted out. The question, of course, was asked that what happened within the engagement team and the firm that let the auditor not see and respond to the red flags. And so this is a unique case study that you'd want to deal with, especially since the investigation is completed and the IESBA has published findings on this. The next one affects an audit firm. The firm is called Inkonki. It was an up-and-coming black firm, very important in the South African context where diversity and inclusivity were being encouraged. The founders of the firm decided to sell the business, and the CEO bought the business. And the CEO went out and secured funding to take over his own firm. But it turned out that the CEO kept the funding arrangement secret. And so he made like he was the owner of the firm, but it turned out he wasn't the owner of the firm. And in fact, the real owners of the firm were some very unsavory characters associated with the same characters in the first 3 cases. The CEO was charged, and within a matter of days, this mid-sized South African firm closed its doors for business. So many substantial clients walked away that it was impossible for them to meet payroll in just 1 month. And so the CEO of the firm was found guilty by the IRBA on a suite of charges. And one of the largest fines that we ever levied was levied under these circumstances. And he too was disbarred from the profession. Of course, this is a significant governance issue that has evaded us up to now. And that is who owns firms and the transparency around the firm's corporate arrangements and the impact that that can have on the subject of quality, independence, and the threats that firms face. And then lastly, because this has been mentioned in the introduction twice already, SAICA is one of the professional bodies in South Africa. It is the largest. It has about 50,000 members. And it has a profession, the Chartered Accounting qualification is extremely well regarded around the world. A few years ago, thousands of students sat for a major exam This is the exam which allows them to get the designation. They've already been working for 18 months. And over 300 cases of cheating were encountered and investigated by SAICA after these exams. The hurt that this caused to the country, that this was our future generations, our future accountants, how could they not see that the case study and sharing of information in this way was just a really bad idea and should never have been done? And indeed, a whole lot of these trainees, charges against them were eventually proven, and a whole lot of severe penalties were meted out to them by the institute. So how do you survive this? How do you deal with this much happening in one country? And as I said, there are probably another 5 or 6 big cases that I could have dealt with you, that I could have shared with you. However, I think we need to look at this through the right lens. And that is actually in the next slide. The bulk of the matters that come to us as the regulator are not these. Our most recent annual report says that we have 192 investigations in progress. But all I have to share with you is 10 case studies. And why is that? Well, the remaining matters tend to get dealt with very easily within our rules and the IESBA code. The bulk of the matters the public takes no interest in. They may relate to procedural issues, compliance issues on files, and they can be dealt with through consent orders, through a formal process, but can be dealt with very quickly. Similarly, at the Institute, with 50,000 members, there are a lot of cases that get reported to it, some of which are founded, some are unfounded. But the Institute, too, is able to dispense with a maximum number of its issues through conventional means. But the question that arises for you and the board is, why do some cases get your attention? Next slide. And I'll share with you why I think some cases get our attention. Next slide. There are probably 6 or 7 reasons. When these things happen, they shift the government landscape overnight. Regulators don't even need to get involved when these things happen because firms take it upon themselves to do something about it. And they do things that we never envisaged in the IESBA code to do. Firstly, when there's politicians involved. When it's exposed by the media or social media, when it involves household brands and personalities. Everyone likes a little bit of scandal. And so with a scandal associated with it, it gets everyone's attention. Of course, when the losses are huge, when expectations of trust are broken, and when shareholder representatives demand it, from it becoming a local one-town issue, the next thing you hear about, actually people are discussing this throughout the world of accounting, even in other countries. In other words, I'm asking, what makes an issue material? And this is a very unusual set of indicators that makes a matter material and reflects in some way about what the working group could think about in relation to the subject of materiality. Now, one thing you may think about here is what I put on the screen is not an RITP test. This is not whether an RITP thinks a matter is big or not. As you can see, the assessment of impact is not being left to RITPs to do anymore. Social media influencers, members of the media, they are the ones commenting on the culture and governance of our profession. And our own standards don't seem to be meeting what their expectations are about where we are. So when these things happen, how do firms react in those cases? Let us be clear, next slide, that these are not merely speeding fines. Firms realize the impact of these things and they decided that they're going to do some big things about it. So you will recognize this. It's not on a slide. They fight back. Sometimes they rebut the issue and they stand by their work. They may end up making some small concessions in the first days. And as the days progress, the firm may make bigger concessions. Then they relent. There's a pattern. Then they relent and they commission investigation. Ask a firm of lawyers, someone independent, to come and do an investigation, or the international firm arrives on the scene. Then the regulator or government makes some threats about regulatory action, or there's some call for regulatory action. And then the firm takes drastic action. They start losing clients, they lose staff by the hundreds, as we saw in one instance in South Africa. And then they have to deal with the reputational harm that comes from this. So how do firms deal with this? What are the types of drastic action that they take? And this is in this next slide, this is a flavor of the kinds of things that a culture and governance working group at IESBA may want to think about and research what this means across the world. I think it falls generally into the realm of consequence management. We have this great example of the issues were so bad that a firm chose to close its doors or was forced to close its doors. But we have a range of issues that can be described as governance interventions, an independent chairman, introduction of non-executive directors, change of the CEO, bring an outside CEO to take over the firm, firms re-evaluating client relationships, fees, services, establishing new governance committees like a public interest committee and ethics committee. The kinds of things that firms advise their clients to do, the firms start doing it themselves. And so things like transparency reporting and integrated reporting, now commonplace in South Africa for South African firms. And then as an act of goodwill, besides for paying large fines or legal settlements, also making big donations of fees to social causes. Thankfully, Chana, all of these matters are not yet on your CNG agenda because you may need more than a year to get to the bottom of all of this. But I want you to notice something about these reactions and responses because I've described examples, but there is a trend. The first of them is that changes in the corporate world around governance are influencing the governance of the accounting profession. Where the accounting profession resisted NEDs, the corporate world influence is changing the accounting profession. Secondly is that things that we thought were impossible to do happened overnight in an unprecedented way. And if we as standard setters tried to regulate these things, we would have been told no, we would have encountered huge opposition to it. We also know that these things that are being proposed are costly, but they deal with this priceless thing, and that is confidence of the markets. And so when confidence is at stake, then actually very large interventions are possible. And all of these, of course, aim either to fix broken culture or deal with a change in governance. And as we understand from many of these interventions, many of them were really just ultimatums from clients saying, actually, we had enough. We don't think your code goes far, and we're waiting too long for IRBA to do something. You should do something about it, and this is what we demand. And so we saw firms responding this way. So let's summarize where we are here. The market says that auditing is broken. Some major cases get the attention of the public more than others, and we've explained why that happens. When this happens, firms experience unprecedented pressure, and then they are forced to make these massive changes. And they focus then exactly not on the little provisions, but on the big culture and governance issues that seem to satiate the market's desire to see something happen. So what then, of course, is culture and governance? Because culture and governance gets the credit and gets the blame for everything. It carries a responsibility for a lot. Many things contribute to culture, and culture influences many things. And as your own paper says, the code deals with culture in a very limited way. But to your credit, your strategy makes such big commitments about culture in this project, and you really must be applauded about this at this stage. So what I try to do in the next slide, Hala, is I try to summarize what ISQM1 says about culture. And I tried to put it on the slide in the smallest possible font, and you'll be happy to hear that I couldn't fit it all. Actually, it runs beyond this one slide. So I summarized it for you by saying ISQM actually says a great deal about the subject of culture. And of course, I was with the IESBA when these elements were being developed. However, I think what comes out of it when you read it carefully again is its focus on some elements of culture. It's focused on the firm, its people, and its clients. And also, in some ways, its limit to the impact of quality on a particular assignment. And just with the paying client in mind, not with a broader group of stakeholders, which is what these case studies and others you will look at are going to demonstrate. So I think that what you'll find in the code, and of course I was responsible for coordination between IESBA and IESBA a few years ago, is a handy starting point, but certainly your job as IESBA seems to have the potential to have greater impact than what the code set out to do. So I appreciate, of course, in the next slide, that the code deals with culture and governance in a limited way, Your own issues paper says that, and there are good reasons for it. The reason, of course, is our code is evolving. And our code may be reactive sometimes. There are places where, of course, our code is groundbreaking, like the work we're doing on sustainability at the moment. But there may be places where we're catching up quickly, as this project aims to do. And in other cases, the way the world is waiting for needs to be made clear. Well, it was a South African problem a few years ago. Now it may become a more general problem. There's some consensus developing. And of course, because we're a multi-stakeholder board, there's a strong influence naturally from firms and public accountants. But as we've seen in India and elsewhere, when those charged with governance and legislators get involved, they may ignore the limitations of the code. The regulators may simply demand more and place prohibitions in places that we never imagined, or ask for safeguards in ways that we never designed, with the consequence of those things that you and I who work in standard setting understand how serious that can be. So what happens is that my stakeholders that I interact with say to me that the code has probably avoided legislating firm governance arrangements, and that the code has ceded some aspect of leadership issues to local arrangements. Because up to now, we've used the argument that norms and local customs drive culture. And maybe some of these topics previously couldn't have proceeded with the scope that it is being envisaged now. But I think that what the public says to us when they say governance and culture, they're talking about a range of things that may not currently be catered for in our code. So let me give you some example of what those things are. When the IESBA faced all of this, naturally we adopt IESBA code, we offer some enhancements to it in South Africa, but we needed to do three things. We needed to restore confidence. In the next slide, we needed to promote audit quality. And we thought that it was extremely important as one of our objectives to empower decision makers. We felt that if we gave the right information about audit to those charged with governance, they would be better placed to do the right thing in relation to the appointment of auditors. And of course, as a fourth measure, we also wanted to recognize some local needs when we made these interventions. So what were they? We required disclosure of audit tenure in audit reports. And this, of course, is in an environment where it was typical for firms to have 50 and 70 and 100-year associations with clients. We legislated mandatory audit firm rotation, and I'm going to speak about that just now. We have made big changes in what audit reports need to disclose in South Africa regarding scope and materiality and other measures. We updated our legislative tool, the Auditing Profession Act, to give us much more power regarding searching for documents, sanctions, and stuff like that. We worked with the stock exchange to improve access to inspection reports for audit committees, so audit committees could see what our inspectors were finding in individual audit files. We produced guidance to strengthen joint audit arrangements. We thought that if joint audit arrangements were better, it would enhance audit quality. And then on the back of the quality management standards, we took the opportunity to make many local changes, and I'll highlight just two of them. One of them, we decided to regulate the appointment of the firm's CEO, and we decided to make mandatory transparency reports for firms that audit publicly listed entities. So this is the kind of culture and governance interventions that we've taken, but we're happy, of course, to share this, but also catch up with the kind of ideas that may come from the global work that you're undertaking. And as is common in when these things happen, we enhance our own monitoring of firms. I want to just come back, and I'm almost at the last slide, to talk about mandatory audit firm rotation, because there was a time, and this is an example of the kind of, it's a great example of what happens when you try to do something big. When we tried to do this, we argued at the time that mandatory audit firm rotation goes directly to the culture of familiarity, cushy relationships with your clients, and governance. And partly the governance here was governance within audit committees and boards, and we said that MAFR would help to address that. We encountered immense pushback. I guess the word used to describe it was that what we were trying to do was impossible, that you couldn't do this in a large and sophisticated market that South Africa was. Needless to say, it fell short of disrupting the market. The threats didn't come true. It happened. It created a lot of work, no denying it. But as at a few days ago, about 95% of listed entities in South Africa, by one measure, had already completed their rotations, and 75% of non-listed PIEs, by another measure, had also done their rotations. We've encountered, as you may know, if you follow development in South Africa, some legal challenges to our rule. And so further implementation of the rule has been suspended in South Africa. But importantly, until that legal notice came out, not a single exemption or carve-out was granted in South Africa. That however the rule was set, whatever the categories were that were determined, in every instance, we said that if we are going to see a seismic shift in the culture and governance around how firms are appointed and reappointed, then this is what we need to do. Which brings me back to Master Yoda and his original advice to us, the last slide. Master Yoda, in his wisdom, said to us that most ethical problems have been solved, Kala. I'm afraid I fall into that category of people with the evidence that I've presented to you today in these few minutes, that rather argues that more has to be done. We recognize the journey that we've come on. Hundreds of matters are being dealt with successfully through applying the IESBA code. But in a world that is connected, increasingly complex, issues of culture and governance really are the things that make headlines, not the missing working paper or the sample size that was too small or incorrectly applied. Not that those things are not important, but those things fit in the realm of the technical issue best left to the EQR and the RITP to resolve. So I'm so happy to see the momentum in your board that you undertook to do this first discussion during the first quarter of your new strategy period, and that you're already doing this, and that we undertake to support you as a national standard setter and regulator in any way that we can beyond this meeting and over the life of any work that you may eventually decide to do. As they say in the Star Wars movies, may the force be with you, Kala, Chana, and Chairman Gabriela, and may this working group start the rise of the Ethical Alliance. Thank you very much.
Thanks, Imran, for that great presentation. I think we can learn a lot from the South African experience as we start this journey, and there seems to be a lot of case studies. I mean, I was aware of some, but seems like there are many more. So thank you for your assistance. Nice to see you as well, although we don't meet as regularly now for the national standard setters. I think this gives some rich information for the task working group as well. And it was interesting, the consequence management, Imran, one of your last slides, because we saw how fast those things actually happen with PwC in Australia, where they brought in a new CEO and agreed for transparency reporting. By 2026, they'll do full general purpose financial reports. So everything just turned overnight. That was difficult to do previously. So thank you very much. Questions from the board members? Sorry. Okay. Paul?
I think first and foremost, just great thanks to you, Imran, for the way you covered that. But if anything, the sentiment is for the gross majority of situations, it is the very fact of the politicians, the personalities, and the scale of the scandal that makes sure they never come to the light of action and things don't happen. It's almost a situation of if they're 60 to 65% of this number, they get brushed under a carpet and never see the light of day. But it's only those that cross the 85 and up that then become an action for moving forward. So very much, it's why the work you have as a WG is that much more complicated, because there's so much that never sees the light of day. Thanks.
I'll take that as a comment, Paul. David?
Thank you. So first of all, to Imran Vankar, thank you very much for that presentation. It was very interesting. I do have a question in terms of the conversations that you've had as a working group. Did you get a little bit more sense on the dynamic between means, motive, and opportunity? So as we think about standards and developing those, thinking about some of the mechanisms that underlie that, do you have a little bit more color on what those were? And we don't have to answer today, but I think that would be helpful to understand as we go forward.
I think one of the things that we have identified is the incentives. Incentives drive behavior, and that could be with respect to promotions or remuneration. So that is a theme that we have identified, and I think later on in Richard Fleck's presentation, he will cover that. David, thanks. Andy?
Thank you. Yeah, a fantastic presentation. I thought there were a lot of very intriguing items. I appreciate just a request. You had a Financial Mail headlines there, and one was the article about who broke auditing, and I appreciate your warning us that there are technical deficiencies and inconsistencies in it. I don't know if that's an article that can be shared with us somehow, because I went online to look and I see it's behind a subscription wall. So I don't know. I'd be interested with all those caveats in mind. But the significant aspect that I found in terms of our agenda is the maybe it's kind of a retrospective look on what it is that made the particular issues pop. And you had a slide that had 2, 4, 6, I think 7 items on it. And what I found interesting for our future development is drawing the contrast between what it is that made these particular items pop versus the reasonably informed third party, which is a lot of what we rely on. And I'm drawn to what we're calling the stand back test in our tax standard, which talks about the commercial, reputational, and wider economic consequences. And it seems to me, Imran, that this list you have developed of the post-mortem or retrospective look of these 7 items seems to be a lot of the gestalt of what we're, the essence of what the stand back tests that we're asking professional accountants to look at. So in the whole firm governance and corporate culture, culture aspect, is this contrast between reasonably informed third party and consequences as to why things can really be the ones that could go. Anyway, I responded well to that, and so thank you for sharing that list.
Thanks, Andy. So it seems like that's also an observation, and I think, Andy, the stand back test, we discussed it yesterday in the working group as well. So that also resonates, although there was a lot of, I think, debate when that was put into the standard. It's a good assessment and test. Amarjit?
First of all, I'm excited to be a part of this board and look forward to making contributions. This was a fantastic presentation. I quite liked your, going to the Star Wars world, and I'm myself a fan, so it was very nice to see how you projected it there. So I think it's a very, very fundamental issue, the culture and the conduct. In India also, we've been struggling with a lot of issues, and we are trying to deal with it. If I may say, we are moving more towards a rule-based approach over the years. I had 2 questions actually for Imran. And as I said, this issue needs a lot of deep thinking. So 2 issues at that level. One is that how do we address the bias of the payment model? The auditors are hired and fired by the companies. So that is one. I know it's not an easy one, but any thoughts around that? I mean, could we ask Master Yoda to give us his views on this? A. B, as we've seen in the last, many years, I would say, that speed is becoming more important in society, and reflection takes a back seat. So, and I think that also leads to a lot of compromises in the work that is done in the organizations, be it commercial organizations, audit organizations, and so on. So how do we resolve this speed over reflection kind of dilemma? I'll pause with that. Thanks.
Imran, do you want to respond?
Chana, yes, thank you very much. The best part about responding to these questions is Sadia is here, so my work is now half. And she'll correct me when I get wrong. I just want to say this, that these questions have been very thoughtful. I thoroughly enjoyed preparing for this. I think a reflection and telling your story is so important. And in a similar way, I enjoyed these questions. I thought the questions are extremely helpful. So I'm going to actually reflect on all of them, but I'll do so quickly. I think, Paul, your point is well made and well proven, that many cases are hidden away. But what is interesting and not reflected in the presentation I made was, how did the bulk of these issues make their way into the public realm? We find that whistleblowing, leaked emails, and investigative journalism are a massive source of these high-profile issues. That almost exclusively between those three categories, we find that these things are being reported. And so I think that to the extent that they flourish in your society, as they do in an open society like South Africa, that it's possible that these things get reported in this way. David, I would like to encourage that, in fact, about the three things you asked, Chana, means, motive, and opportunity, looking at what the working group will do in that area, this is probably something that our investigators have now traveled many miles on and probably know a lot. Last year, we published our very first regulatory report. So not an inspection report, insights from regulatory work. And that report's publicly available. So I already have a little bit of an idea that I'm going to ask Sadia's help with, is that we'll make a little document bag for you during the course of this week. We'll send you all of the associated reading material. I have all of the newspaper clippings ready, together with that Financial Mail article, to give context to all of these cases and others, and share with you our regulatory report. I think that that combination of things may whet your appetite to speak in greater detail with my colleagues who work in the regulatory division here. And so I think in doing so, I've answered the first part of Andy's question. Andy, in respect of the stand-back test, this one, I am going to use the word, the popular stand-back test. I agree with what you've described, but I won't say anything more about that at this time. My Indian colleague's first question is the only one I have a meaningful answer to, not much reflection on the speed versus reflection dilemma. But the question of how do we address bias in this current payment model is something that the IRBA recognizes is a red herring. We think that had we gone down that route, it was probably a route that we would never have been able to solve. And instead that there was a different way to tackle the same issue. And that way was through changing the nature of the relationships between the old boys clubs that audit committees had become and the appointment process of their auditors. By disrupting that market through mandatory audit firm rotation, we think we brought a lot more rigor through the subject of tendering, reassessment of auditor relationships, determination of fees, and we're hoping to achieve the same or similar outcome doing that. Of course, the jury is out. Over years, we'll get to know how successful we've been at that. But there will be great research as people over the years to come consider the impact of this mandatory audit firm rotation on the payee model that you described. However, we supplemented with two other tools around transparency. And so you'll see that this is a very strong theme in the IRBA approach to deal with this. Transparency of the length of tenure, transparency in relation to a whole lot of additional items in the audit report, but two further transparency tools that we have in South Africa. One of them is an annual report on audit quality indicators. We collect them as the regulator from a selection of firms, and we share a feedback report to the market around a dozen indicators, and we say to the marketplace, Use these indicators to differentiate between your firms during a tender. Don't look at the color of the sign on the building and say, I like a blue sign versus a green sign, or I like this person over that person. Look at some qualitative measures. Here's some great data to work with. And so we present that data. We have 4 years of such data now. And so I'll ask Sadia to include that in the bundle piece for your board, our most recent audit quality indicator feedback report, and then transparency reporting. We have a rule that's made this mandatory in South Africa. And last week, we published the exposure draft on introducing a standard on transparency reporting for the South African marketplace called SARP 7. So we can make that available as well as part of this package of things that we hope your working group will consider. Chana, thank you for the opportunity to respond to those very thoughtful remarks.
Sorry, Imran, I think we have a few quick responses from Laurie, our deputy chair.
Yeah, I was just going to comment briefly on Andy's comment, and I agreed. I had the same reaction, and it brought to mind the stand back test. But one thought for the group, the working group working on this, throughout the tax standard workforce, the task force, we saw the discomfort level with the stand back test, and I think one of the challenges for us as a board is how to get people comfortable with the fact that while we have many rules, sometimes you can't write a rule for every possible permutation of behavior that could take place. And that is why culture is so important, because firm culture has to step in to guide behavior. And I think that is the challenge. And this is partly a question for Imran. Thoughts around how else we can drive behavior and expectations for the professions? That's a big question, so we might not answer that here, but I think that's the challenge to the group. There may be some rules that can be put in place, but there has to be something else, because if it's just rules, we'll just keep writing rules, and we know we already have a big code. And so I think it's the something else, and this presentation made me really think about that, because a lot of the scandals we talked about and the ones we see, they are either violations of ethics code, law, or existing rules. So what else? It's just more of a comment than anything.
Very, very quickly, and thank you, Imran, for the presentation. Loads of food for thought there. I suppose one of the challenges for the working group and for the board more widely is that many of the examples that you've drawn on in your presentation today could be described as almost extreme scenarios. The fact that a lot of them happened is, of course, deeply concerning, but they're nevertheless still extreme. So how do we balance the need for something that provides high levels of protection from ethical wrongdoing, from something that is not completely driven by extreme examples that just all happen to string together into a narrative that we listen to?
Thanks, Mark. I'll take that as a comment. Imran, thank you very much for your time. And I think you have given a lot of work for Sadia as well to collect documents. So anyway, thank you very much for your time. And we'll look forward to receiving that material from Sadia.
Sarah, can I say
Let me just
something?
thank you, Imran, as well, on behalf of the board, for your excellent presentation. Thank you.
Can I say something as well? We really appreciate this opportunity. You're inviting us to speak on this topic, and I'm sure you're going to have inundated with other great content during the course of the day today. And it's a reflection of the open nature in which standard setting is being done, and Gabriella's leadership of this board to be responsive and sensitive to rapidly emerging areas. So really appreciate that. Of course, happy to see many old friends and faces, Robert Buchanan on the line here as well. And in a few weeks, see everybody or some of you at the joint NSS meetings or at the NSS meetings. Look forward to seeing you then and maybe hearing what the outcome of today's conversations were. I thank you very much for your time and attention.
Thank you, Imran. So now I'll hand over to Carla to introduce our next guest.
Next slide, please. Next, we have Claire Linrich, Director of Audit Market Supervision, and Helen Gill, Head of Culture and Conduct, joining us from UK FRC. So my sincerest apology to Claire and Helen for running behind. As you can tell, this is a very riveting and interesting topic. And we're very excited to hear from you. But before that, a quick introduction. Claire was appointed to the FRC's Director of Audit Market Supervision, having developed the FRC's audit firm monitoring and supervision approach during 2017 and 2018. She has been with the FRC for 15 years, and prior to her current role, she conducted and led the audit quality review and inspections and was a member of the AQR. Prior to the FRC, Claire qualified as a chartered accountant with Deloitte, specializing in the audit of media and entertainment companies and professional services firm. Claire has a degree in natural sciences from Clare College in Cambridge. Helen Gale leads the FRC's work on culture and conduct. In the last 4 years in this role, she has developed the strategy for the FRC's supervision of culture and a framework for assessment of culture. She has led and delivered all projects within this framework, including a culture conference, reviews, conducted reporting, and annual assessment audit firm culture. Helen was previously an audit partner at Deloitte and was the statutory audit partner of several FTSE 250 companies and entities with financial services. Welcome both to this presentation, and the floor is yours.
Thank you very much. Can I check that you can hear me?
Yes, I can hear you, Claire.
Brilliant.
You can hear me
Good.
too.
Yes. Super. Well, thank you very much indeed for inviting Helen and myself here today. We're going to assume we've still got roughly the same amount of time that we had before, but do stop us if you need us to go more quickly, or if you just want to cut us off and then go straight to questions. And I'll just say next slide, please, as we go along. So I think next slide, please. Thank you. So firstly, I thought I'd talk briefly about how our work on governance and culture relates to the FRC's key purpose to promote high quality audit and a resilient audit market in the UK. Our approach has 4 faces: system partner and facilitator, which enables us to be an improvement oriented regulator, combined with supervision and enforcement where that is necessary. And our supervisory approach aims to be forward-looking and identifies with and prioritizes with firms what they need to do to enhance audit quality at their own firm and their resilience, which in turn enhances the resilience of the audit market as a whole. Next slide, please. Thank you. So I'll talk a little bit about the UK's approach to audit firm governance, and then Helen, who leads for me on culture, will talk about the cultural aspects of our work. But obviously, these 2 angles are inextricably linked, so we will end up using some of the same terminology as we go along. So why do we focus on governance? Because high quality, reliable audit depends on well-governed, stable and resilient firms that consistently deliver high quality audit work. And we introduced the Audit Firm Governance Code in the UK when it's intended to enhance trust and confidence in audit. Governance, as I'm sure you all know, and tone at the top, are key drivers of culture within a firm. When thinking about culture, a focus on governance and leadership is essential. They are inextricably linked. So the code that we have in the UK therefore contains requirements for audit firms to promote and monitor a suitable culture. And the framework is not sufficient on its own. It needs to be able to support monitoring, and I would hope that any IESBA changes to the code are designed with the idea of monitoring in mind, monitoring outcomes. Next slide, please. So what's the evolution of audit firm governance in the UK been like over the last 10, 15 years or so? Well, the initial impetus actually for the decision to focus on governance arose from work that the FRC did on competition and choice in the audit market. and noting the strong preference that there was then and still is now for FTSE 350 audit committees to have a Big Four audit firm, leading to the high concentration of listed entities amongst a handful of audit firms. And we hoped that providing some comfort on how audit firms were governed, not just the largest audit firms, but the middle tier as well, would encourage entities to appoint auditors outside of the Big Four. So this led to the development of the Audit Firm Governance Code in 2010, which was then and is now applied on a voluntary basis. So in order to make this happen, we had to secure the cooperation of the firms before we introduced it, and only the largest firms had to apply it initially, so about 8 firms at that point. So trying to expand the market from 4 to 7 or 8 firms that it could be have some guidance on how they were governed. And the objectives of our Audit Firm Governance Code are obviously to promote audit quality and to ensure that firms take account of the public interest in their decision making, particularly around audit, and also to safeguard the sustainability and resilience of the audit practices and of the firms as a whole. And this, despite being called an Audit Firm Governance Code, it's important to be really clear that the code spans the whole of the firm, all of its service lines and the entire legal entity. So at the heart of our code are the independent non-executives. I think you may have gone on one too many slides. Just pop back one for me for a moment. Oh no, sorry, apologies. Come forward. So at the heart of the Audit Firm Code are the independent non-executives. Firms appointed them for the first time as a result of the code being introduced, and these independent non-executives, INEs, are critical for bringing an external perspective and also driving the right culture in the firm. The code is principles-based, and the firms apply those principles and can comply or explain against certain provisions in the code. And that provides the flexibility that we think is important. Flexibility is necessary, partly because the code's voluntary. So that makes it easier to get buy-in from the firms that it applies to, but also, probably more importantly, in recognition that one size doesn't necessarily fit all in audit firms. They've adopted a range of structures and approaches and value the flexibility to be able to do this. In the UK, over the implementation time of the code, we've observed 2 dominant models and actually concluded that both of them seem capable of delivering the desired outcomes, so we're not seeking to codify one in particular. So the code had minor updates in 2015, and then in 2022, it underwent a more substantial revision following the introduction of the principles for operational separation in 2021, and also to reflect some substantial changes that have been made to the corporate governance code in the UK, which the Audit Firm Governance Code seeks to mirror is probably not quite the right word, but they look to each other and make sure that they are thoughtfully different and consistent where that's appropriate. And I'll talk a bit more about operational separation a bit later. So I think the board was interested to hear what the challenges are or were in doing the various aspects of our work. So what were the challenges of introducing the Audit Firm Governance Code? Well, firstly, significant early resistance to the appointment of independent non-executives. Firms were really concerned about what having independent people, non-partners in there would mean for their governance structure. Culturally, a really big change for the firms. However, once that initial nervousness about having INEs was overcome, firms tell us that they really value their INEs and the external perspective and challenge that they bring. Many of the firms have more than the suggested minimum number, and they would continue to have them even if the Audit Firm Governance Code went away and it wasn't required anymore. So I think that's a real testament to overcoming some of the initial difficulties. Another big challenge is the independence rules. There's an issue about how to carve INEs out from the personal independence rules, so they're not treated like partners, subject to the same financial restrictions as partners are. It is difficult to find INEs, particularly for the largest firms with big audit portfolios, who are willing to forego board level appointments to the whole of the firm's audit portfolio, and even for prospective audit clients, having full financial restrictions on investments would make that problem close to irresolvable, I think. So we overcame this by agreeing that INEs would be advisory and not involved in making operational decisions, and therefore not in the chain of command. And in this way, they're not subject to the full restrictions on their financial investments. And we later amended the UK standards, and so it's now explicit that INEs are not in the chain of command. But the IESBA code would need to think about that, and it would be easier for us, certainly, if the IESBA code was also explicit that INEs are not in the chain of command. Another challenge is the different approaches taken by firms. In the UK, most firms are limited liability partnerships, but each firm has its own partnership model and partnership agreement, and thus firms have met the expectations of the code in different ways. We've come to the conclusion that flexibility was necessary to make it work, and I think flexibility is certainly likely to be necessary at an international level, particularly because some firms are already used to that, and globally the firms have quite different structures, certainly in terms of the degree of integration at a regional or global level, and the fact that firms do tend to be quite wedded to their particular model. So that network integration, which has really accelerated since we first started having the code in the UK, has also caused some challenges, particularly when the UK, in our case, firm almost gives up some of its decision-making power to a body that sits at a regional or global level. It means that they're outside of those decisions are sort of almost outside of the jurisdiction of regulators. The INEs that are based in a local jurisdiction don't always have, or may struggle to get sufficient insight and information about and visibility of the firm's decision making, and it makes it more difficult potentially for the INEs to influence at the right level within the firm. So that's something that it would be useful, I think, for IESBA to think about when deciding what changes you might make to your code. Next slide, please. Lovely. So I'll talk a little bit about the current version of the code. The left-hand column shows that most definitely is applied on a voluntary basis. As I said, in the UK, most audit firms are limited liability partnerships, not companies. That means the partners are the owners of the business, and that's a key difference compared to corporate governance, where the owners of a business typically don't work within the business of a listed company. So because those owners are in the business, and some of them are running the business, incentives are better aligned between the owners and the managers, and partners have access to more information about what's happening in the firm than an external shareholder would typically have. So in this latest version of the code, we expanded the scope to firms that audit 20 PIs rather than 20 listed entities, just partly to align with the more typical use of definitions these days. And that brought some smaller firms into scope for the first time, because also we expanded the scope to include firms that audited just one FTSE 350 company, because we were finding that a number of smaller audit firms were picking up one or two quite significant audits, didn't have a large portfolio, but it was important. We thought it was important that they came within the scope of the Audit Firm Governance Code, because they're auditing a handful of really quite important firm entities for the UK. As I said before, the code applies to the whole firm, the legal entity, not just the audit practice. So in a multidisciplinary firm, the code sits across all the service lines. And I think the reason that's important is kind of almost why we are here today. Activities in the other service lines can have a big impact on the audit practice, particularly by damaging the firm's reputation, as we saw from the problems at PwC in Australia. So the INEs need to understand the risks created in the other service lines, whilst also maintaining a primary focus on audit quality and the operations of the audit practice. So it'll be important, again, for you in your work to ensure that the governance thinking that you do and requirements that you set apply across the whole firm, not just the audit practice. So middle column shows some key principles around governance. I won't go into those in any detail in the interest of time. But then I wanted to talk a little bit more about independent non-executives and how to make them effective. They're not directors, it's not a company, they're not partners, and they have no official decision-making power. They work by influencing the firm's leadership. So their effectiveness really depends on them being appropriately positioned within the firm, being properly embedded in the firm's governance structures, and crucially being respected and valued by the partners at large, as well as the partners in leadership and management roles. They need to have access to the right people within the firm to be able to deploy that influence and have enough time to do the role within their portfolio of other jobs, and have enough access and information to people to think about what their influence should be, and also getting that information early enough to enable that influence to actually take effect. So we find that the INE's areas of activity and interest are wide-ranging, and actually the roles have grown and evolved quite considerably over the 15 or so years that this has been in operation. Next slide, please. Thank you. So I'm just going to talk very briefly about operational separation, which is newish for us, 2021 it started, and only for the largest 4 firms, the big 4. Again, voluntary application, but well, because we do believe in the benefits of a multidisciplinary firm. But we found that by ring fencing the audit practice, creating separate governance with an audit board, with an INE majority for the audit practice, has brought greater focus and oversight on audit quality initiatives and improved accountability for audit quality. And we asked the firms to run a separate P&L for their audit practices, and do arm's length prices for the specialists that naturally sit outside of the ring fence. And that brings quite a lot of transparency and audits being more realistically priced. And then finally, what actually sits within the ring fence, we set some principles around that, making sure that all the audit work is conducted within the ring fence, and crucially that the people who sit within the ring fence spend the majority of their time on audit or similar work to facilitate the development of an audit practice culture that drives the appropriate behaviours. And so on that note, as I start to talk about culture and as well as governance, I'll hand over to Helen to talk a little bit more about that area of our work.
Brilliant, thank you, Claire. So if we could move on to the next slide. Excellent, and one after that. Perfect, thank you. So yes, I'm going to talk about the work that we've done on culture. I'll first talk about the strategic drivers for our work, and then I'll talk about what we do and how we do it. And then finally, I'll reflect on the challenges and the learnings that we've had that I hope will provide some insight for IESBA's own culture project. So firstly, why we do what we do. Well, we decided to look at culture because we're seeking to address the root cause of poor quality audit or unethical behaviour. And we call this a predict prevent approach compared to our other detect correct approach to regulation. We know that the culture and environment of an individual is working in will strongly influence their behaviour and their mindset. Therefore, by understanding the culture at the firms, we can start to predict the behaviour that could arise as a result of this culture, and then prevent it to the extent that that's possible by intervening to improve the culture rather than waiting until a poor culture leads to poor outcomes. So our root cause analysis is the basis for our work on culture. We explored the root causes of audit inspection and enforcement cases, and noted that the majority actually of poor quality audit was from behaviour or mindset. In particular, a lack of scepticism and challenge came up a lot. We also looked at the root causes of poor ethical conduct and why they came about from a cultural perspective, for example, exam cheating, and more recently, the PwC tax leak. And we concluded that these recurring poor quality audit and unethical behavior issues raise broader and deeper questions about the culture within the firms. We know that the mindset and behavior of an individual is highly influenced by the culture of the firm they work within. People are products of their environment. And where we identified this poor quality audit or unethical behavior, in the less extreme cases, we noted that in those cases, individuals were often only behaving based on what the culture expected of them. So based on this analysis, we decided to focus our work on two main aspects of culture. Firstly, we look at how the audit practice creates a culture that promotes behaviors correlated to high quality audit. In particular, we expect firms to have a culture that promotes an exceptionally strong commitment to audit quality, a focus on the public interest, and this mindset of skepticism and challenge. And that work is just relevant to the audit service line. We also expect firms to have a culture that promotes the highest ethical standards. So we monitor ethical conduct matters, including non-financial misconduct, and we assess the speak up culture at firms to ensure that when misconduct occurs, people feel able to speak up about it, and it can be dealt with appropriately. This is in line with our root cause analysis, where we've identified problems with speak up processes and culture, and this part of our work is firm-wide. We also know that the culture not only impacts audit quality and the reputation of individual firms, but is key in attracting and retaining the best talent. Now, we don't directly supervise the employee experience aspect of culture. However, our culture work does cover people and purpose aspects that are relevant to the attractiveness of the profession. So if we could move on to the next slide, and I'll go through how we supervise culture. So firstly, we considered the existing regulation and guidance and what it says about culture and ethical behavior in order to understand our regulatory remit and also to develop a framework for supervision that's aligned to the regulatory requirements. So the main provisions come from ISQM1, the Audit Firm Governance Code that Claire's spoken about, and of course the IESBA Code of Ethics. I heard you talking about ISQM1 earlier. I've extracted one of the requirements, but as you know, there are a lot of cultural references throughout ISQM1. And the Audit Firm Governance Code also requires firms not only to have an appropriate culture, but that those charged with governance oversee and monitor the culture of the firm. However, as there's no one culture code, if you like, with requirements in one place, and many principles are audit firm specific, it's hard for us to point to requirements for a firm to establish a culture that promotes ethical behavior outside of the audit practice, and that's a challenge that I'll come to later. So we therefore created our own framework based on the existing regulation and the results of our root cause analysis, and that's what I've summarized in the diagram on the right. So our framework covers culture design in the middle, drivers of behavior, and then culture assessment. Under culture design, we look at the culture ambition of the firm. We look at their promoted purpose, their values and behavior, and we assess whether that is an appropriate culture ambition. We then consider the 6 drivers of behavior in the diagram, and this is what we believe really drives the culture within any organization. And you'll see that leadership and governance are 2 such drivers of behavior. And as Claire said earlier, and as I know you recognize, given the role of leadership and the importance of tone at the top in setting culture, we believe that any consideration of firm culture must also take into account firm leadership and governance. One other that I'll pull out is reward and recognition, because we think that's a really important driver of behavior. And we talk to firms a lot about the importance of aligning incentives, reward and recognition to their desired behaviours. So for each of these drivers of behaviour, we've actually created our own principles of good practice underneath these, which give further guidance of what we would expect firms to do in this area. Around the edge of the diagram, I've got continual assessment, and this is how firms assess their own culture and how they use that insight to drive continual improvement, because that assessment part of it for us is really key. So that's our framework. If we move on to the next slide, I'll now provide you with an outline of what we've done, so you can see where it overlaps with the IESBA project objectives. And in the next slide, I'll draw out what we've learned from these projects that I hope will be some useful insight for you. So firstly, back in 2018, before I started, we did a culture thematic review, which outlined why culture was important, and it gave the firm something to think about, as well as some key recommendations. Then in 2021, we did a conference. The objectives there were to influence and educate, as well as to obtain buy-in from stakeholders. We really wanted to stress the importance of culture in promoting the highest standards of ethical behaviour and audit quality, because looking back nearly 4 years ago, there wasn't the same awareness of the importance of culture as there is now. So we debated topics such as, why is culture important? What should firms be doing in this area? And, what's the regulator's role in overseeing culture? It was important to us at that stage to get a wide range of academic voices involved, not only to increase our own knowledge, but also to provide further support and weight to the messages we wanted to give that would further increase our influence. One such voice that I've been dealing with a lot is Karthik Ramana, and I know you're going to be hearing from him later, which is great. And we also, at this point, published a collection of perspectives from a wide range of contributors, not only academics, so other standard setters and regulators, other audit firms, directors, and other influencers. Then in 2021, we created the framework for culture assessment, as I explained earlier. And in 2022, we did our first thematic review, focusing on skepticism and challenge being a key mindset correlated to high quality audit. And then also in 2022, we did our first annual assessment of firm culture using the framework that I've described. That looked at culture in the audit firm, but in 2023, we expanded this to look at the wider firm. And we did the assessment particularly on how firms encourage ethical behaviour and how they promote a speak-up culture with processes in place to deal with any issues as they arise. Then finally, last year, we ran the first ever cross-firm audit firm survey with over 2,000 respondents from all of the largest firms. And this covered all aspects of the audit environment, including some important cultural aspects. For example, the culture and tone set by leadership, awareness of expected behaviours, questions on speak-up culture at firms, and also the extent to which people have actually witnessed inappropriate behaviour. That was to provide evidence for us as a supervisor. The results of that survey are private, though it's just for our supervision work. So if we move on to the next slide, I've pulled out a few challenges and learnings that we've had from our work. I think the first challenge we had going back 4 years ago was we had people asking us why we're looking at culture. And so we really needed to increase the awareness of the importance of it. And I think looking back, there That was because there was a lack of understanding of what we mean when we talk about culture. Some people only saw it through the lens of the employee experience. Therefore, we needed to be clear that we were looking at behaviors, and specifically those linked to high quality audit and ethical behavior. So when we got firms to understand why it was important, we needed to get their buy-in to invest quite a significant amount of time and resource on culture initiatives. And we did that by explaining the value that they would get from this investment in terms of improved audit quality and mitigating reputational risk. And firms have invested a huge amount, certainly in the UK, since we've been talking to them about this. I think the learning is that we needed to tell this story and go through several stages in order to get the right focus and the right maturity. And this all takes time, but it's a really important first stage of the project and something that IESBA might want to consider when planning the timing of your work stream. The second challenge we had concerned the limitations of the current regulatory requirements. As I said before, as there is no one code, if you like, that sets out all the principles in one place, we needed to look at several different regulatory requirements to draw on. Also, the IESBA code puts the onus on the individuals, but what we are asking the firm to do on culture requires a firm response as well as an individual response. We do look to ISQM1, but then this only covers predominantly the audit practice. So one thing that would have helped us is if the IESBA code had within it some more expectations on the firms, how they create a culture to promote the highest ethical standards, for example, through governance and leadership as drivers of behavior. But in the absence of the specific regulatory requirements, we need to be very clear to firms about what we expect. And that's the reason we created the framework with principles underneath each one. And we were very transparent with the firms what those principles were. We couldn't be too prescriptive, though. I think somebody had said previously, you can't change culture through rules-based approach. And we need to recognize that all cultures are different. And it doesn't align to this checklist approach. Instead, we needed to promote what I used to say was more of a commitment mindset rather than a compliance mindset. The third challenge we had relates to the supervision side of our work. I think unlike checking compliance with auditing standards, culture is hard to assess. And given it's quite intangible, it is tempting to put it into that too hard category and wait for the poor outcomes. However, we do recognize the challenge with assessing culture in order to supervise it effectively, which is why we created our framework in order to guide us, but also to ensure that we can fairly and effectively do this supervision. I think some other changes we've experienced, just to mention, is first, we all know that our work will not eliminate all conduct matters occurring. And whilst these cultural change programs improve the culture overall, most issues occur at the extremes. We've also had a challenge regarding the remit of our work, the challenge that our work shouldn't go beyond the audit practice. However, we need to consider ethical behavior throughout the whole firm as behaviors of everybody in the firm, whether they work in the audit practice or not, or whether even chartered accountants or not, will impact the reputation and resilience of the firm and the profession. And finally, because culture is hard to assess, it's not only difficult to supervise, but it's difficult to see the outcomes of our work. However, we have seen many success factors, and we're starting to see some more concrete evidence for these outcomes. Firms have undertaken many initiatives. The investment in culture in the UK has been huge, and our assessment and the firm's own assessment is starting to demonstrate some important cultural change. So that's a summary of our work on governance and culture. as you've seen, we've performed work under those two separate pillars, but given the fact that they are so intrinsically linked, there's a lot of crossover between the work we do on governance and culture. We're focused on why we do this work, what we do, and how we do it, and highlighted some challenges. So hopefully it's provided some useful insight for you before embarking on this work stream. I must say personally, I am delighted that you're starting this work stream. When I saw the announcements from IESBA, I was absolutely delighted. I started this work 4 years ago, and I felt very strongly about the importance of culture. It's great to see initiatives like this really stressing it. We are very appreciative of the opportunity to speak today, so thank you. And we are certainly happy to support IESBA in any way we can with this project going forward. So I will hand over, and Claire and I will answer any questions.
Thanks, Claire and Helen, for a great presentation. It's interesting how the UK started off with the audit firm governance code in 2010, and now it has gone through several versions and revisions. So congratulations to you all for leading the way. So I'll ask the board members if you have questions. Laurie?
First. Well, I thought this was fantastic, by the way, and I guess I knew that the FRC was very involved in this, but I love to see that you've been able to put a framework around it, because this is, like a tiger by the tail. It's very difficult, I think, to get your arms around. So I'm sure that was a huge struggle. One of the questions I had for you is just sort of a thought process around on the speak up culture. How do you look at the effectiveness of a firm's speak up culture? I mean, what are the indicators? Not any particular firm. I think this is a challenge throughout, how to both develop those and create the safety for that. And I think it'll be particularly important for our working group here in IESBA to be thinking about.
Yeah, that's an excellent question, Laurie, and one that we've been debating internally, because obviously the first thing we could look at is, well, how many speak up reports are there at the firms? And the firms are required to report those to us. So, to your question, how do you assess the effectiveness of the speak up culture at the firms? We could say, well, if there's a higher number of speak up reports, that could indicate that actually the speak up culture is very good, or it could indicate that there are no issues. So, we can't just look at the number of speak up reports. It could be seen either way. What we've done is create a framework for a good speak up culture, very similar to the culture framework that I've shown you, which looks at the processes that the firm has in place to deal with speak up matters, from whistleblowing all the way down to just general challenge within the team. So what they do, what actual processes they have to deal with that and promote that culture. And then we've looked at the cultural aspects as well. So we can assess, have they got the right processes? We can assess, are they doing the right things to drive the right culture? But that still doesn't tell us, is it therefore a good speak up culture? The other thing we do is look at firms' own surveys. And as I said, we ran our own survey, and we had a number of questions on speak up culture within that survey, like how safe do you feel? How confident do you feel in raising matters? Those types of questions. So that gives us some more evidence. So I suppose we have to look at all of those different aspects, bring it all together, triangulate it, to come up with a view on the speak up culture. Unfortunately, it's not an easy, there is one metric that would tell us. tell us, but it's
Thanks.
no, it's
That's
possible.
super helpful. I mean, that's sort of what I thought, but it's great to hear it articulated that way, and it feels like that's a good pathway into that. And actually, one point you raised that I think is really interesting is it's not just the complaints, but it's the challenge within teams on issues, because that's where things can really go wrong, long before
Yeah.
you get to something to complain about. So I think that gives us some food for thought as well.
Absolutely. And even when we've looked at, root causes, say, of the recent PwC tax piece, we've looked at, well, to what extent do people feel comfortable to challenge those in a position more senior to them? To what extent was it raised? How was it dealt with? It all gives us more insight into the culture at the firm on and lots of other firms on these matters.
Thank you. Sunam?
Chair, thank you for remarkable presentation. I have one question about one of the expected benefits of operational separation. It says audit practice people are enumerated and promoted based on audit quality, not based on cross-selling other services. Is this law applied to audit partners or audit partners to cross all audit staff? We have similar rule in our code currently, but I'm curious to see how we can just improve our code requirements. Thank you.
Thanks for the question. So what we've really tried to do with the remuneration aspects of operational separation is get the firms to focus remuneration on a balanced scorecard, including and making sure that they prioritize not only audit quality and the audit quality metrics that an individual partner or member of staff can have. Like, are they attending all the compulsory training that they should be doing? Are they contributing to audit quality initiatives as well as their own scores, perhaps from inspections, be it internal or external, but also what the leadership behaviours that they demonstrate that are important for audit quality. So running a team that enables speak up, getting feedback from their teams that suggests that they are open to challenge. We focus mostly on partners or the people leading engagements, whether they be partners or the most senior directors who lead engagements, but that it trickles down into the audit staff as well.
Thank you. I think we will quickly move through because we are sort of behind time. Hector?
Thank you, Chair. Thank you for the presentation. I was wondering if you could spend a minute sharing your wisdom with us regarding how to influence the non-audit part of multidisciplinary firms, and how are you reaching out to the culture and governance on those parts of the business as well.
Good. Shall I answer that, Claire? Culture. I mean, it's an absolutely excellent question because it is really hard, and I'll be honest. We have struggled with it. When we started to look at the wider firm, and ethical behaviour, we were challenged of, is this your remit? Why are you looking at the wider firm? I think what makes it easier for us to influence the rest of the firm are the headlines at the moment. We'll say, that these things seriously impact not only the firm, but the profession as a whole. And, the more we see these sort of key matters, then the easier it is for us to influence the firms and explain why it's important that we're looking at the wider firm. So, we have been able to, and that's why we were able to do the thematic review this year on the whole firm rather than just the audit practice. But it's an excellent question because it's certainly not easy, and it's one of the challenges we've faced.
I think it's about getting the buy-in from the most senior people at the firm, to the chief executive, who he, she sets the tone at the top for all of the service lines. So part of, I guess, what the audit firm governance code does is make sure that the most senior people in the firm, not just the audit practice leadership, are focused on audit quality and the resilience of the firm, and thus how that then needs to permeate down into the other service lines. You've got to win over the people at the very top who can then influence the other service lines.
Thank you, Helen and Claire. Amarjit?
Yeah, thanks for the presentation. I noted you talked about several approaches. So I had, questions on two approaches specifically. One is on the voluntary comply or explain model. And we've seen it in India, it doesn't really work. And that is why we have a mandatory approach towards most of our regulations. But I was just wondering, how has been your experience in terms of what is the extent and level of pickup of the code? And have there been any challenges and how you're dealing with it? So that is one. Second is, I thought you mentioned about, that was very interesting, developing commitment versus compliance mindset. I mean, it's excellent. But how does FRC inculcate this approach on the ground and contribute to implementation of this very laudable approach? Thank you.
Shall I take the first bit, Helen?
Yes.
So comply or explain, it does seem to work reasonably well in the UK. The firms, we supervise the firms on their audit firm governance code compliance, and ask them to explain to us how they are complying with each of the principles and applying the principles and then complying with the provisions. But it's been a process, a journey. When we first did a detailed assessment 5 or 6 years ago, you could say that firms were perhaps claiming full compliance when it wasn't really there, or when we challenged what they were classing as compliance. It's not there. So, but by having those conversations and explaining what we think compliance looks like, or what they're claiming as compliance doesn't really quite fit what we think, you can come to a mutual understanding and get them to move a little bit. Maybe we then understand a bit more how what they're doing does get to the right outcome. We started this work in most detail with the largest 6 firms, which means you can spend quite a lot of time with each of the firms. Now we're extending. I said the code now applies to about 12 or so firms, and so that makes it more difficult to start at. Partly it's new for them, some of them, so they've got to work their way through getting it to work, which takes time, and partly it stretches our resources. So it does get there, I think, but it's not perhaps not as easy as ticking boxes, but then finding the right boxes to tick, I think, would be quite challenging as well. Helen, do you want to answer the commitment versus compliance question?
Yeah, another very good question. Something I learned as I've gone along, I'm honest. I think when I first started, some of the firms said to me, well, what specifically are you looking at? What's on your checklist, if you like? If I can understand what 10 things I need to do, or however many, then I can tick those off and do those, and then that's it, made the regulator happy. And I said, culture can't be changed through a rules-based, do these 10 things, and then you'll have the culture that you want. And so had to. This is what the reason for doing the conference, to get the voices and get the buy-in of, well, we want you to be committed to doing this and see the intrinsic value from doing this. But that wasn't enough, and I'm conscious there needs to be a balance. You need to have some clear principles to guide the firms, which is why we created the framework with the principles, and we're very transparent with the firms and giving them those principles. And then, so not moving to a checklist approach, but more, here are some more detailed principles that you can use to follow. And then I suppose we got there, we ensured that they did that through a supervision approach. It was very much, being a system partner, meeting with the firms individually, regularly, to understand what they were doing, and then challenging where we didn't think the commitment was enough. And benchmarking them against each other, and sharing a lot of best practice, so that they can then deliver their initiatives. So it's it's not easy, but I think the wrong solution would be to go straight to a checklist approach, and I think it's getting buy-in from the firms that that this is important for them, and therefore they have that commitment, but providing enough sort of principles around it so that there is a framework. Does that answer your question?
Thanks, Helen. So we'll go to Tomoyo and then Sadia, and I'll leave Gabriela for the last word.
Thank you very much for your presentation. The first part about governance was quite interesting. You said at the beginning that this audit market is quite less competitive. And so I think one of the important things to improve the culture and governance is to make the market more competitive, development more good new audit firms. But at the same time, I think we need a large firm to be more disciplined. And so the governance code in a voluntary basis, I think makes sense. Do you have any idea to which kind of firms independent non-executives should be implemented?
So the Audit Firm Governance Code.
We'll collect Sadia's question as well, and then you can respond to both.
Okay.
Sadia?
Similarly to my colleagues, thank you for sharing your insights and your knowledge so freely. There were two things that you mentioned that I thought it was important for our working group to acknowledge, and that was the first one, that you can't, y'all's philosophy that you can't build culture through rules, that it needs to be through commitment. I think another speaker actually asked for more insights into that, but I think that's something that will take longer than a reply to the question. The other thing was that you'll acknowledge that this is not going to eliminate conduct issues, and that's just to keep the expectations of our working group and myself in check as we go through this project. There were two things that I wanted to borrow your insights on, and the first one was, I noted that you'll moved from 4 firms to more firms, and whether that played an influence on how your framework changed as you all expanded your scope from one type of firm to a more multi-diverse or multi-sized firms. The other one was, were there any regional or jurisdictional issues that played an influence in the development of your code? And then as we acknowledge what those were, then we can, as the working group, acknowledge what global issues we'd have to look at when we roll out something of this nature. Thank you again.
Okay, so I think the first question was which firms do have to have independent non-executives, and the answer to that is all of the firms to which the Audit Firm Governance Code applies. So the latest version of the code applies to firms that have 20 PIs or one FTSE 350 company as an audited entity. That is, I think, 12 firms in the UK. The 4 or 5 of those 12 firms, the smaller ones, have only just come into scope. So they are in the process of recruiting their independent non-executives. The provision in the code says you should have 3, but we are very amenable to explanation that a smaller firm would only have 2 to start with, because of the size and scale of their audit practice. It doesn't seem to be the right kind of level of engagement to have more than 2 at that point. Then the question about when we've expanded from the fewer firms to more firms, has the framework changed? No, it hasn't. Well, not as a result of that. It's changed because it's evolved and we've responded to feedback and looked at what's worked and what hasn't worked. But no, the code is there. It's not a lighter code for the smaller firms or anything like that, other than obviously the options to explain against some of the provisions, like having fewer INEs than the 3 that the code says, to make it a little bit more scalable. And were there any regional jurisdictional issues that played a role? Not that I can think of, but obviously we were only working in our one jurisdiction, so we were working within the laws and regulations that we have. So nothing occurs to me, but I'm sure once you start trying to do something multi-jurisdictional, you're going to come up against things, even if it's, but in the Netherlands, this is much more ingrained in law, isn't it? Their audit firm governance model, I think. So ours is a little bit more flexible because it's just a code.
Thanks, Claire and Helen. I think Gabriela had a card up, so I'll hand over to the chair.
Well, thank you very much, Chana, and thank you very much, Claire and Ellen, for this terrific presentation and very insightful. Actually, I had some questions and comments, but given that we are running very late, I will keep them for a conversation that I hope we will have face-to-face or something when I'm in London, because I'm very interested in bringing this conversation forward. Just one very brief comment that there's something that I think deserves to be highlighted, which is I think your first slide about your 4 phases approach and the role of the regulator. And this is extremely important because not all regulators have that approach, are most focused on supervision and enforcement, while the role of partnering and facilitating is as important as the rest, mostly in this area of culture, governance, and related with audit firms. So very happy to see that and happy to speak about that further. Thank you very much for this presentation and for the insights that you brought us. And we will have to stop now for a short break. I'm sorry apologize to the board because it was supposed to be a half an hour break, but I'm sorry, we are going to make it 15 minutes just to stop because we have someone else waiting to present. Claire, Ellen, once more, thank you very much, and I hope that we will have the opportunity to speak about all these many times. Thank you.
Brilliant. Thank you so much.
Bye-bye.
Bye.
So we will break for 15 minutes more. So we will be back at the hour. Okay, 12 in the US. Thank you.
You see? Maybe it should be.
Turn it off. That's 13.
That's so when you're in here,
It is correct. It's just the position of the mic. See? So thank you to all board members for coming back to the meeting. I'm sorry for that we are running late, but these were so impressive, terrific presentations to kick off our reflections on firm culture and governance that we could just not stop. And of course, we did not want to prevent the board members from making questions and comments. So it is what is necessary at this point in time. And I appreciate your understanding and your patience waiting for the break. So we will now restart the meeting, and I'm going to go back to Chana to guide us through the rest of this morning.
Thanks, Gabriela. So we are going to have Richard Fleck, who's going to give us an update on our fact-finding exercise. Carla?
Thank you, Chana. So as an introduction, Richard is no stranger to the board. He was on our board from 2015 to 2020, and out of that, 4 years as deputy chair. Richard was also the task force chair for non-compliance with laws and regulation, long association, role and mindset, and the non-assurance services project. So Richard will be taking us today to various case studies, and I'll hand the floor to you, Richard. Thank you.
Thank you very much indeed. It's nice to see so many familiar faces, albeit remotely. And I will try and go through my presentation relatively succinctly, because I think it follows on well from what you've heard before. Can we go to the next slide, please? I'd like to start just by setting out the working group's current thought processes in relation to this project. We see it as having four elements to it. The first is to look at case studies, to identify instances where firm culture or leadership has led to ethical failures. And my presentation today will focus on what we've learned so far under that heading. Then from that, we need to work out what characteristics are common to those ethical failures, which are attributable to firm culture or leadership. And then, having done that with the benefit of outreach, academic research and discussion with others who've tackled this problem in the past, we would aim to identify ways of addressing the characteristics and countering their adverse effects, with ultimately looking at possible solutions. And as I say, today from me is primarily about the first step of this. I think it's very important to emphasize, as others have today, that ethical failures occur across all the service lines, particularly in those accounting firms that have multidisciplinary practices. We've seen it in Australia with the tax issue, which involved disclosure of confidential information to gain clients. We've seen it, as I'll come to in a minute, in financial services with market manipulation because of the incentivization structure of the bank concerned. Of course, ethical failures do occur in the course of audits, but as again, I will hope to show, the most notable ones do not involve incompetence or, so to speak, bad auditing. They involve overriding leadership, making bad decisions. Next slide, please. So the first case study I want to touch on goes back all the way to 1973 to a secondary bank that's not one of the main lending banks, called London and County Securities. And its failure led to the collapse of the secondary banking sector in the UK from about 1973 through to about 1976, with very significant systemic consequences. This was a case where the audit partner concerned identified transactions which were being implemented to cover up flaws in the business model. The flaw in the business model was that, as all bankers now know, it's dangerous to lend long and borrow short, because your losses result from the mismatch in the terms of the respective borrowings. The company concerned window dressed its accounts by charging very high commitment fees on prospective borrowings, which were then cancelled or reversed after the year end, and transactions between related parties with back-to-back guarantees from the company concerned, London County Securities. The client complained to the senior partner of the audit firm. Hamoud Banner was in those days, probably about a Big Ten firm of accountants, and it subsequently merged with Deloitte. The chairman complained to the senior partner. The senior partner's response, when faced with threats about the future of the audit and the relationship, removed the audit partner who'd identified these issues and replaced him with another audit partner who acceded to the company's accounting approach and gave a clean audit opinion. I think this is a clear example of where the auditor's integrity and independence was compromised by the firm's leadership and its desire to retain the client. Next slide, please. All of us know about the collapse of and demise of Arthur Andersen, but some may not know the background to how, in many ways, this all started. Andersen Consulting, now Accenture, was outperforming Andersen Accounting very considerably, and inter-practice tensions developed, which then led to the separation of the two arms or parts of the organization. In 1988, 1999, accounting sought to address the differential in performance by setting each audit partner the objective of securing 2 additional non-assurance engagements from each audit client. This strategy obviously carried with it the risk that audit partners would feel a need or pressure to build personal relationships and even cooperate with a client in its approach, and in order to build the goodwill necessary to secure the additional engagements. And quite clearly, this set up a risk to independence, self-review, and various other issues of that nature. But what I want to just draw out of this particular example is that it probably would have been perfectly acceptable if the leadership had recognized the potential risks and addressed them head on, putting in place protective measures. So demonstrating the cultural leadership, which the way it was approached did not. And it highlights, I think, that the leadership of firms needs to think through what the implications are of the decisions they make, the strategies they adopt, and address those as part of their overall leadership and tone at the top. If we then go to the next slide, which takes us to the first of the 2 very well-known cause célèbre involving Andersen, namely WorldCom. WorldCom, between 2001 and 2002, capitalized the costs of line leases, describing them as prepaid capacity. In effect, what this meant was that they were taking the costs of running the business ahead of the date when the business was being operated and capitalizing it on the balance sheet rather than through the P&L. And as a result, WorldCom reported in the first quarter of 2002 a $130 million profit as opposed to one of $395 million loss. Now, the interesting thing about this case study is that the correct accounting treatment was identified by Andersen UK in the course of auditing WorldCom's UK division. And in preparing the accounts for consolidation, it adopted the appropriate and correct accounting treatment. And it also included in the interoffice memorandum to the US an express explanation of its thinking on this subject and its view that the accounting approach being adopted in the US was incorrect, and that these costs, the costs of the line leases, should be expensed on the P&L account. The US firm in Jackson disregarded the advice from the UK and reversed the charges in the intercompany memorandum, and so avoiding the charges to the P&L account on consolidation. They also ignored memos from various WorldCom executives who were concerned at what they saw as the inflation of profits. In this instance, the improper accounting was discovered by the Vice President of the Internal Audit Department. And despite all of this, the leadership of the Jackson office, who were very close indeed to the CEO, Ebbers, and the CFO, Sullivan, the leadership overruled the advice and continued with the existing accounting. Self-evidently, this is an example of the leadership subordinating the proper conduct to the value of the relationship. And as we go on to the next slide, we see yet again the same issue, but again from a slightly different perspective in relation to Enron. Enron, as you may all know, was the largest seller of natural gas in North America. It filed for bankruptcy in November 2001. But it had achieved its very considerable market success by aggressive revenue recognition policies and misusing mark-to-market accounting, which is, again, same issue, accelerated its income, and it hid through special purpose entities billions of debt as a result of projects it had entered into and which had failed or not progressing, but which was carrying the debt. And those special purpose entities were not consolidated on Enron's balance sheet. AA was pressured to accept Enron's accounting because of the desire to maintain and match the earnings expectations of the market, and Houston's leadership overruled advice and following review by the AA Chicago technical partner. Again, this was the concerns were expressed by Sharon Watkins, who went on to become quite a significant whistleblower in subsequent after the demise of the company. And after notwithstanding the fact that she'd reported her concerns to the CEO and to Anderson, those concerns were disregarded. I think most people think that the driving consideration throughout all of this saga was the fact that the Houston office received over $50 million in fees from Enron, and this was very significant not only to the success of the office, which was it was very highly regarded because of its performance, but also to the leader of the practice in Houston, who was earmarked for significant promotion and leadership positions in the overall organization. And as we say in the bottom bullet, if that's what you call it, auditor independence and integrity was compromised by this focus on the importance of Enron as a client and on financial performance. The next slide, please. The next one is different. This involves Barclays Bank, one of the major clearing banks in the UK, and it was embroiled in the manipulation of the LIBOR interest rate. LIBOR is an average interest rate calculated on the basis of interest rates that are reported by banks from all over the world. And just to put this in context, the LIBOR underpins approximately $350 trillion in derivatives. So it's a very significant market influencer. Barclays Bank was criticized, and subsequently traders were prosecuted for manipulating the LIBOR market by inflating or deflating their rates so as to profit from the trades they'd already made, and in order to enhance their creditworthiness. So when they had the opportunity to put forward the average rates for the day, they did so by reference to their own trades with a view to making a profit, rather than reporting specifically the interest rates they had actually charged or been charged. They also reduced the volume of the trades they were doing so as to enhance their creditworthiness by indicating that they had less at risk than was the reality. The significant thing for us, I think, is that afterwards, just as Imran indicated, Barclays commissioned an independent report, which was undertaken by a leading lawyer, Anthony Salt, and his conclusions are at the bottom. And I just would like to just draw attention to the three key elements. The first on the left was he concluded that there was no sense of common purpose and there were no clearly articulated, understood, shared values. And this was evidenced by the fact that all of the various service lines competed with each other for profitability, rather than focusing on the good of the company as a whole, because it was the performance of each service line which drove all sorts of aspects of the employment, including pay, promotion, and so forth. And as he said in the second middle bullet, play was emphasized above any aspect of people management. And in addition, rather than being seen as a means of driving culture, people management was considered predominantly as a tool to increase business performance, subordinating, therefore, cultural values to financial performance, business performance. And lastly, and somewhat significantly, pay contributed to a sense amongst a few that they were somehow unaffected by the ordinary rules. And that's a comment that was attributed to the highest performers, namely they thought that they could walk on water and do whatever it was that they wanted to do in order to achieve their financial objectives. Now, those are the 5 case studies that I wanted just to draw out. But just to indicate, if you go to the next slide, there are a whole lot of other examples. We heard some from Imran. I'm sure we'll hear more from countries from all around the world. But I just want to draw attention to the ones on this slide, because again, they show the significance of the fact that this isn't one particular service line problem. So McKinsey got into trouble because they advised pharmaceutical companies on a marketing strategy for opioid painkillers, which played down the risks attached to those painkillers and didn't step back, if I could put it this way, and think of the public interest implications of subordinating negatives in the pursuit of the positive and greater sales. PwC came for criticism for their failure to identify financial irregularities in the audits of Colonial Bank, despite a large number of red flags, and likewise EY in the audits of Wirecard. The PwC instance in relation to British Home Stores is different. This was the result of the approach taken to auditing pension funds and the pension surplus that occurred as the markets improved, which enabled the individual who had acquired control of British Home Stores to take very substantial sums by way of dividend. As a result, when it collapsed, it was not in a position to fund the pension liabilities and of the pension scheme, and a large number of employees faced the loss of their pension. In the end, the individual concerned put £500 million back into the company, into the pension scheme, sorry, in order to redress that situation. But again, an instance where there was a failure to look at the full implications of the proposed treatment and to subordinate that to the ethical implications. The same issue in relation to pension schemes occurred in relation to a takeover by a small private equity group of a car manufacturer in the Midlands, Leyland, and that also led to pensioners losing their pensions. And the justification for the treatment was that they owed a duty to the company, to the client in that case, and didn't have the responsibility to look at the wider implications for pensioners and other stakeholders. Salomon Brothers, back in the 1980s, had a phenomenal bond trading practice, which they ensured continued using insider trading, false information and schemes. And lastly, Drexel Burnham got into the similar difficulties in maintaining their junk bond activities. So what I think we are trying to draw out of these examples is that the values of the organization got subordinated to the business aspirations, and in the process, the ethical ethical failures occurred, as you can see in whether ranging from criminal activity through to simple ethical failure to look at the public interest from, as somebody said earlier, this step back approach. Next slide, please. So I do want just to spend a moment on the distinction between an audit failure and a cultural failure. And for audit, you can read any one of the professional services. Obviously, audit failures, if they involve a public interest entity, have the potential to impact the public interest. But not all failures are due to deficiencies in culture or leadership. They can arise because people get given the wrong information, errors in estimating, failure to understand the business model, or just simply an incorrect application of an accounting standard. And none of those necessarily mean that there has been a cultural failure or a failure of leadership. And so I think the important point about this is that we shouldn't just assume or translate audit failures into the territory of cultural failure or leadership failure. Next slide, please. So what are the lessons that we're taking away from these case studies so far? The first one is that excessive focus on financial performance and individual reward can very often lead to unethical or illegal behavior. The second is, as we all, I think, know and accept, the leadership of a firm or company determines that entity's values and has the potential to significantly influence what is and what is not acceptable behavior. And the third bullet requires a little bit of explanation. Leadership is the product of the governance of those organizations. You get the leadership that your partnership agreement, your limited liability agreement, your firm adopts. And if it adopts solely a financially driven performance as one of the criteria for the government being the leader of the organization, then you are bound to have that or you're likely to have that as the predominant characteristic or feature of the leader's approach going forward. If, on the other hand, you have people who come up through all aspects of the business and understand the business, then as they go through to being on the governing body, then you have a better prospect of having a broader appreciation of the implications of strategy and the sort of culture that the organization has, And this is highlighted by what happened at Arthur Andersen again. The SEC, and this comes direct from the head of accounting at the time, the SEC's approach was dictated not by the fact that it had had egregious audit failures, and a number of them, but by the fact that they had a lack of confidence in the leadership of Andersen. And that led to the view that its culture and values were beyond recovery. And what some of you may recall that it was proposed that Henry Kissinger should play a part, become involved in the leadership of Arthur Andersen, I suppose somewhat like the independent non-executives in the UK governance code, and would have play a role in helping the Andersen sort itself out and set the values and culture that it needed to go forward. Henry Kissinger thought that the audit practice should be self-contained is a strong word, but it should have clear independent leadership. Andersen rejected that and showed that it was not willing to change in the way that was thought to be appropriate. And as a result, the SEC did not step in when proceedings were brought against Andersen by the district attorney in New Jersey. And I repeat that story because I think it highlights how significant culture and values and leadership are to the way in which society views these organizations, and how, if that's not right, it goes to the absolute core of the organization. So last slide, please. So the way we're viewing this is to try to ensure we are able to identify the issue that needs to be addressed. And we're at that purpose today, I've tried to emphasize the difference between an audit failure and a cultural failure, and to go through 5 case studies. And we will obviously go through a large number of other studies, not least because of the interesting ones that were provided by Imran, the examples that are arising in Australia, and the ones that exist elsewhere in the world. Our current thinking is that firm culture is driven by a combination of things. I'll take the bottom one first: incentivization, and including remuneration and advancement, the tone at the top, and the way in which the governance structure is set up in the relevant organization. And that is what we aim to deal with over the coming months before the June meeting. And then we will turn, well, obviously at the same sort of time, we'll be looking at how all of this relates to the IESBA Code of Ethics. And I think Jeff and Carla will be talking about that later on. And these questions are what will be the thrust of future outreach and research. And with that, I pause, and I hope I've managed to make up some of the time that was requested of me.
Thanks, Richard. Yes, you have made up time, and we have time for a few quick questions. Crystal?
Yes, thank you for your presentation. You are expressing something quite strong, which is all these cases are not cultural failures. They might be of other natures. Don't you think that if they become at the stage of bad examples that you present us, it's because the culture let them prosper in their organization? Prospering of a bad practice, of a misunderstanding, of a misconduct is also based on cultural aspect, I would argue, okay, to get to a scandal. And the other aspect is here on this slide, where you say what drives firm culture. I would add that it's not only the tone at the top, but it's effectiveness, meaning it's not only a talk at the top of companies, it's also demonstration of the walk.
Can I quickly answer that, Chana?
Yeah, go ahead, Richard.
I'm certainly not saying that these are not instances of of defective culture. I'm saying they are examples of defective culture because they are putting ahead of the public interest and the performance of the functions in a professional fashion, other factors and considerations which are of a personal or self-interest nature. So forgive me if I've not been clear. Certainly all of those instances were, in my view, and I think in the working group's view, examples of cultural failure and invariably also of leadership failure. On what drives firm culture, those are just three of the headings that we have so far identified. It's not meant to be comprehensive, but just to give you a flavor of the thought processes that we've so far been spending time discussing.
Thanks, Richard. Laurie?
Yes, thanks, Richard. Just on this, what drives firm culture? I mean, there's a whole bunch of things, but one thing that I think is a key bullet to add into that is the frameworks and processes. And this came up in the previous presentation. I think it's critical. The frameworks and processes around the supports to the speak up culture.
Absolutely.
Because those have to be in place, and they are more now today than say 10 years ago or so, but to what extent those are. The other thing I would suggest the task force working group focus on is like there's a plethora of failures that are out there. We know that, and I think there are some themes and lessons to be drawn from all of those. But I think also look for the positives that drive culture, either from cases, things that are noted out there. I think the FRC mentioned that they had identified some of those, but there are probably others, because I think we need to think about how we build those into the expectations of the code. It may help, rather than us create them from somewhere. I think there are a lot of success stories out there, and I think we need to look at those as well, because in some sense, we have to drive culture in a very positive way. The negatives are a piece of what went wrong, but I think we also need to think about how our tone is about this in bringing firms along and practitioners along in understanding what works, if that makes sense.
Absolutely. Sorry, Shana, just do you want me to get the other questions first?
Okay, yeah, let's get a few more. David?
Thank you. Thank you for the presentation, Richard. It was really helpful and informative. One of the things that came to mind, and I think it came out in the presentation from the FRC when the comment was made about individual versus company or entity or culture, or however we want to define that. And I think it's come out for me a little bit in what Richard presented as well. I'm wondering how we reflect on the code as it relates to individual behavior versus individuals that start acting as a collective. Because there could be dynamics that we need to think about with respect to how should the code be defined and created in a fit for purpose manner when an individual is acting on their own, so to speak, as opposed to, for example, you've got leadership of an organization and collectively, perhaps individually they would behave differently, but collectively perhaps it's different. And then does that shape potentially how the code needs to be defined to address that as well? So I just thought I would share that perspective for the working group to think about.
Thanks, David. Richard, do you want to respond to those two questions?
As far Laurie, totally agree with you. I totally agree with you for two reasons. One, because actually it's much easier to communicate things if you can give a positive explanation rather than simply always being negative. But the other reason is that a large number of the positives will end up by being the obverse of the negatives. So they are likely to drive what one is looking for firms and or professional accountants to do. So you're likely to be promoting them. So looking for examples that are positives that have worked and hold those up as the way to behave is clearly going to be a part of the way in which we develop the ultimate outcome of this work stream. David, I think that raises an interesting question. It's certainly the question of individual versus organization or group is certainly something to be thought about, because there are different considerations at play within collective organizations, not least the role of the leadership, but also groupthink and aspects like that, whereas those are not necessarily applicable for an individual. And so you're right, we need, as we go forward, just to reflect on how the approach we're taking whether it adequately addresses the position of individuals.
Thanks, Richard. Andy?
Terrific. Thanks, Jana. Thanks, Richard. I think it's very important for the board to hear those examples that you had given us. And I think, on some level, some of those are deal to, procedural audit standards failures. But I think the bigger issue for us right now is the cultural aspect. And up until just this meeting, when I heard you speak, I was thinking of, I don't remember all of my training that I got as an audit senior, but I had a 1-week audit senior program. That's over 40 years ago. And one particular moment that I remember, which I would have thought was audit standards, but I think it's really culture. And so in your fact finding, I think this is an aspect of culture, is that they showed the seniors some sort of inquiry. I don't remember even what the issue was, but the management was telling the audit senior, our auditors next year won't ask us these questions, because the auditor was asking some telling questions. And so I was thinking, well, that's a technical area, but no, I think it really was evidence of the firm really having a cultural aspect, that they wanted the seniors to role play the answers, not from the standpoint of the technical, but in terms of standing up to the client, standing one's grounds in the face of conflicting pressures, our role and mindset. This goes in the early 80s, though. So in your fact finding, I think it's important to try to separate and identify, this is the point of this, is the fact finding between the training and education that's maybe technical in nature, which is important, but those kernels of it within there that reflect firm governance and culture, because I really credit Arthur Young for making sure that the audit seniors who influence the staff, who then become managers and partners themselves, understood the role of standing up to an important person at the financial management of the audited entity. So anyway, so thanks for sharing those examples. Those case studies have lots of lessons.
I think I'll take that as an observation, Richard. We have a couple of more, and then we have to move to the other presentation. So sure. Quickly, Sunam and Vanya.
Thank you. Thank you, Richard. My comment is about a gap in awareness of ethical behavior, or understanding that all professionals have the duty to the public, not only to the client. But because of the big firms' multidisciplinary business model, there are many service lines. I believe currently there is a gap in awareness of ethical behavior between the people in the audit department and non-audit, and also between PAs and non-PAs. Okay, currently I believe there are a number of, or vast majority of non-PAs work for non-audit service lines. So there should be a consistent level of understanding or awareness of ethical behavior. That's my observation and comment. Thank you.
Vanya, and then I'll let Richard respond to both of those.
Thank you. I don't exactly have a question, but it was very interesting for me to hear your presentation, because I owe my master degree to those scandals exactly. I would offer you my thesis, but it was just published in Portuguese. But back then, it was very clear for me, and it stated in my thesis that not everything that was done by those companies that you mentioned were exactly legal. Some of them, they made use of some breaches in the regulations. The technical regulation was fixed afterwards, but the lack of ethical behavior was at the core of what happened. So it is very good that IESBA is right now looking at these aspects and trying to build something to prevent this kind of behavior to occur in the future. So congratulations.
Thanks, Vanya. Richard?
Thank you for both of those comments. Sunam, your point is well made. I think within the working group, there's a recognition that one of the challenges of this project is to work out how to ensure effective observance of the code by all those service lines and the executives working in the service lines throughout the accountancy organization or firm. That is one of the challenges, and we will be coming back to that without doubt as we go forward. Thank you, Rania, for your comment on your thesis. I apologize for my inability to read Portuguese, but the point you make about ethical standards filling gaps in whether it's legislation or regulation is fundamental to the whole issue of ethical values and leadership. As somebody said earlier today, you can't develop rules to cater for every type of breach of ethical behavior, and it's the concept of culture and the values involved in your culture that fill the gaps that inevitably arise out of rules, legislation, regulation, or whatever. And so at the heart of every organization, the cultural values are what sustain it and enable it, hopefully, to avoid the disasters that befall others.
Thanks, Richard. Thank you very much for your presentation. I think there were some interesting things we had to discuss further in the working group. So now I'll hand over to Carla to introduce our next presenter.
Thank you, Chairman. Next slide, please. And thank you, Richard. And the next slide. For the next session, we very much welcome Professor Karthik Ramana, who is a professor of business and public policy and director of Master of Public Policy program at the University of Oxford School of Government. He's also a fellow at the St. John's College. Professor Karthik is an expert on business government relations, sustainable capitalism, corporate reporting, and auditing. He also studies how organizations and leaders build trust with stakeholders. His scholarship has won numerous awards, including the Journal of Accounting and Economics Best Paper Prize and Harvard Business Management Review McKinsey Award for groundbreaking management thinking. So I'll pass the floor to Professor Karthik. Welcome.
Thank you. Thank you for having me. And I appreciate that I am joining in the middle of the conversation. So I'm not quite entirely sure how what I will say will fit into everything you've heard and the conversations that are going to obviously continue after I leave in a few minutes. But I was planning to just speak for a few minutes, and then it sounds like there are lots of questions. So perhaps people can engage with me on some of what I say. Let me clarify from the introduction that I am no longer the director of the Master of Public Policy program at Oxford. I stepped down after a 7-year tenure in that role last year. So I'm a professor at the University of Oxford, Blavatnik School of Government, and this year on partial public service leave to the PCAOB, where I serve as senior advisor. And I should offer the standard disclaimer that the views expressed here are solely my own and do not necessarily represent the views of the PCAOB board, individual board members, or staff of the PCAOB. With that, let me dive in to say a few remarks about this issue. So I come at this from the perspective of an academic who has been interested in accounting and auditing practice, particularly as it relates to trust building in society. And we live in a time of deep division in society. We live in a time where perhaps in some societies, we haven't been as divided since just before World War II. And this, of course, poses all kinds of serious problems, both within and within countries and across, of course, across countries as well. And so there's a particular interest in organizations that can build trust in the context of these of this polarization, of this deep division that we're experiencing. And at least on paper, auditing is a profession that should be in the business of trust. Though, of course, some surveys of how much people, ordinary people, trust auditors don't suggest that auditors do particularly well on this dimension. So there's clearly a need for this. If we're trying to understand what is the sources of polarization, I'll have a book coming out in October of this year called The Age of Outrage: How to Lead in a Polarized World, where I broadly talk about three sources of polarization in the world today. The first is what we call fear for the future. So this could include things like climate change, like shifting technological landscape and its impact on the employability of large swaths of the population, but also issues associated with demographic shifts and the fact that our societies will look very different even in 20 years than they do today. So there's sort of, a great deal of fear for the future. There is also a great deal of people feeling a sense of having been dealt a raw hand. And what I mean by that is there's a sense, rightly or wrongly, that the rules of the game in society have been somewhat rigged. This is especially the case in richer societies, Western societies, which feel that where many people feel, about half of the population roughly feel that globalization and the economic policies it brought in terms of offshoring and the like has been sort of a net negative for living standards in these countries, at least on a relative basis. Now, there's data to dispute that sentiment, but the sentiment itself is very real, even if the underlying economic forces that the sentiment points to is not real. But there's this sense of the raw deal that plays a huge part in how people sort of perceive sort of the trustworthiness of institutions in society. And in this context, the role of auditors is especially relevant in the sense of it's not that auditors are seen as perpetuating the raw deal, but they're seen as not having done enough to have stopped that raw deal from having occurred as it has over the course of the last 30 or 40 years. And that has contributed to a sense of distrust in auditing. And the third broad feature or sort of perhaps determinant of polarization beyond a fear for the future and the raw deal is what we call ideologies of othering. And this is sort of a growing sense of seeing the world as us versus them, sort of this Enlightenment rhetoric of human advancement through the pursuit of rational knowledge is increasingly coming under attack. And there are people that are capitalizing on this for political gain and setting up not just the contest of civilizations as being against each other, as Sam Huntington predicted, but also setting it up as a contest of intra-civilizational conflict between the us and the others. And So that's a sort of third cause playing into this. So all three of these factors are material in driving polarization and the lack of trust in society. And again, where audit firms and auditors more broadly become implicated in this is in the way they have perhaps allowed for this raw deal to occur to the extent that is in fact real. And also in sort of a lack of trust or a lack of a sense of their ability to address some of the fundamental factors that will cause this fear for the future. So are auditors, for instance, doing enough on climate change? Are auditors, for instance, doing enough on the risks that AI poses and the like? So these are some of the issues that are at the heart of this. As we think about sort of, what drives a culture of trust from external stakeholders towards auditors, part of the sort of the issue at play is the lack of a culture of challenge within the audit firms itself, and a sense that the audit firms perhaps are too complacent or too exist too much in sort of some sort of co-opting relationship with the clients that they audit. And you can sort of think of this as what we call the 3 C's: competence, character, and commitment, as being sort of at the source of distrust. Now, of course, from time to time of those 3 C's, character or the lack thereof plays a part. But we don't think that this is a systemic issue in the sense of it's not that the average auditor is a bad person. So lack of character is not what is driving this. So I think we can safely set that 1 C aside as being perhaps the exception rather than the rule. And that leaves us with questions around competence and commitment. And on competence, there's a sense that auditors lack the training, particularly when it comes to being able to detect sophisticated or subtle attempts at rigging the rules of the game or rigging the way companies go about their business in a way that effectively exploits, say, customers or investors. So that lack of competence does play into the lack of trust. Or the perception of the lack of competence plays into the lack of trust. And the third C, which is this sort of sense of commitment that the auditors are seen as not possessing when it comes to chasing after instances or suspected instances of wrongdoing. So put it differently, you can think of this as them just not being incentivized or aligned enough to pursue issues when they are sort of come into play. So that just overlay that framework of the 3 C's onto the 3 drivers of polarization in society. And the third thing that I want to talk about is what drives the culture of challenge in audit firms. So just before the pandemic, I wrote a public report having studied the practice of challenge in one audit firm in particular. And there, in that report, I identified 4 things that are important in driving a culture of challenge within the firm. The first is being really good at, in terms of hiring the right people. This is to go back to the competence and the character issues. So if your hiring model is somehow broken and the best people don't make it into your organization, or as I found in that report, the best people who do come into auditing almost immediately want to transition away from auditing into consulting, then you end up in some sense with a sort of selection bias with the pool that is left behind. So people is one of the first issues there in creating a culture of challenge. The second is what we call shared beliefs, which is what are the water cooler stories that are told in amongst young audit sort of juniors when they join the firm and when they sort of experience or hear about sort of the so-called heroes within the firm. And for the purposes of that assessment, I had at the time asked for one instance of a whistleblower within any of the big four firms who had been a whistleblower prior to their promotion to partner and had subsequently been promoted to partner. And at least within the context of the United Kingdom at that time, no one was able to supply even a single instance of such an individual. And so the kinds of stories that get told in the context of these audit firms with juniors. So as part of this report, I spent some time with audit juniors to understand what were the sort of the stories they share when they are in these sort of social settings. And they are stories around, making a quick transition to consulting. They are stories that effectively de-glamorize the value of challenge in auditing. And so that is part of the problem of shared beliefs, which is the second dimension to building and sustaining a culture of challenge. The third dimension was on alignment, which is the fact that pay and promotion was not seen as being aligned with actually asking difficult questions of clients. In fact, in many cases, we found that audit partner compensation depended on client CFO satisfaction, which is absurd. If the role is to serve the investors of that client rather than the CFO, then why should the CFO satisfaction factor into the bonus pay of the relevant partner? But this is, in fact, still the case in several practices. And so this remains a challenge, the lack of alignment in this context. And then the fourth dimension beyond the people, the shared beliefs, and the alignment were processes to normalize what would otherwise be seen as the awkwardness of challenge. Challenging people within any context is seen as somehow antisocial. It is seen as somehow against sort of basic human norms. If we are, in fact, social beings, we don't want to come across as confrontational. And so it becomes very important that if you've got certain functions that are in the business of asking difficult questions, you create rituals to normalize that kind of challenge, to reduce the awkwardness associated with the challenge. You create rituals that allow you to disagree without being experienced as disagreeable. And that's really important. So for instance, as academics, we are often encouraged to present our emerging ideas in workshops with other academics. And you can be the best of friends with the people who are participating in the workshop, but when you enter into the workshop setting, the ritual of disagreement has been normalized, and you expect for your ideas to be ripped apart by your peers, because you know that from that process, it emerges stronger. And in the context of the audit practices, we found very few of these rituals that normalized disagreement. And so the practice of disagreeing with clients, therefore, remained awkward, and that remained a huge concern. So on all of these dimensions, people, shared beliefs, alignment, and processes, we found severe deficiencies in the way audit cultures currently are conducted. The final thing I'll note is, as part of this, we also looked at the performance of non-executive directors, particularly audit committees and audit committee chairs. And we found sort of a remarkable degree of passivity on their part when it came to, sort of engagement and empowering of the auditor to be to disagree with the CFO, to raise challenges with the CFO. Perhaps that's because boards are seen as sort of, friends of the CEO, and that is just not something that boards routinely engage in. But we were surprised that many of the audit committee chairs that we spoke to, even at some fairly large organizations, didn't so much as know the names of any member of the audit engagement team outside of the audit partner. When you think about how much of their own personal reputation is put on the line from serving on a corporate board, not mention the liability that carries, the fact that they didn't even know the names of these audit engagement team members outside of the audit engagement leader struck me as quite sort of odd. And again, speaking to that somewhat passive role that they've taken in overseeing this culture of challenge. So that gives you a quick whirlwind tour of where some of my work in this space has taken me. Again, just to quickly reiterate, given that I don't have any slides for you, we see this as being connected to the problem of polarization, increasing polarization in the world, driven by three factors: a fear for the future, a sense of the raw deal, an increasing sense of othering. We see the need for the trust-building intermediaries in society, including auditors, as being a need that drives competence, character, and commitment. And as we think about, in particular, the absence of or the decrease in that trust-building function of the audit firms in society, we think that that's due to an absence of a culture of challenge or a weak culture of challenge in many firms, which is connected to poor performance on 4 dimensions: people recruiting, the shared beliefs or stories created, the alignment in terms of incentives to be in a position to challenge, and then the processes that normalize the otherwise awkwardness of challenge. And we also see that externally, non-executives seem to be fairly passive. So with that very quick summary, let me stop there and turn it over to the chair of this meeting to see if they want to facilitate any questions from the group. Thank you.
Thank you very much for your presentation and welcome to this meeting. And in the name of the board, let me apologize for running late, but the former presentations went a little bit beyond schedule, so I apologize. This is a very insightful and inspiring presentation, and I'm sure that the board members will want to engage with you with some questions or comments, but I'll pass the floor to Chana, chair of the working group, who will run this conversation.
Thanks, Gabriela, and thanks, Professor Ramana. I have a question. When you said your research about the culture of challenge, which countries were part of your research where you think there's a weak culture of challenge?
In those findings, it was largely related to the United States and the United Kingdom.
Okay. Any questions from other board members? Mark?
Thank you. Really interested in what you said about the risks that are posed by greater polarization. And it may be a slightly unfair question to ask, but recently we've seen reports of audit firms where private equity is taking significant ownership stakes. What do you think that potentially does, sort of through your polarization lens, that we might have to consider? Thank you.
Okay, and do you want me to take the questions one at a time, or do you want to accumulate them?
Okay, let's get another one from Laurie.
I'll be very brief. Thank you. I thought that was fantastic. And in particular, I'm interested in your thoughts on what drives the culture of challenge in firms around the world, because I think that's a very productive thing for us to be thinking about how accounting and consulting firms can do a better job in that space. One thing that struck me as interesting is when you were talking at the beginning about trust and breaches of trust and the lack of trust. And I've done a lot of reading around this. This is a huge problem right now. I think it's a particular problem for accountants because we have a special place in society in that we both hold ourselves out and we have a special position of trust in society. And I think when there is a breach, the backlash is much stronger than a breach by kind of anybody else who I would say has an average level of expectation of trust. So I just comment on that, Professor, and I don't know if you have any thoughts about that, but that's particularly important. It seems for our profession to make sure people understand that and we address that.
Thanks, Laurie. Maybe we get Ken's question as well, and then
Yeah, I'll be brief as well, Chana. And really, my question as well is on this concept of trust. And I just wondered, Professor Romana, for your research, whether you've pulled any sort of observations or insights in terms of the extent to which that concept, the consciousness of trust, the extent to which it permeates, first of all, the audit side of a firm's business, and secondly, the non-audit side, and whether in fact there is a differential, if indeed there is that level of consciousness between the audit versus a non-audit. So how aware of, or let's say even the partners, but beyond the partners, even throughout the entire organization of a firm, are people really conscious, very aware that they are in the business of trust, and therefore that is driving their sort of thoughts and their behaviors and their conduct?
Excellent questions, and thank you so much for engaging on all of these. Let me start with the second question and sort of, take it from there. I think the short answer is yes. If you set yourself up with an expectation that, this is what you're going to be doing, you're going to be building trust in society, and this is why, in some sense, the audit profession has a legal mandate in many jurisdictions. I mean, listed companies don't have a choice. They have to buy the product. And when you set yourself up with that kind of expectation that you're going to deliver service and value, then when you don't, you have a sort of, a deeper and sharper fall. So I think partly that is a self-inflicted wound on part of the audit profession, in the sense of, people would be less concerned about the lack of trust with used car salespeople, because used car salespeople are not setting themselves up in the business of trust building. And in fact, people go into that environment expecting not to be cheated. So, or expecting to be cheated, rather. In the context of accounting and an engagement with an audit opinion, the expectation is that, the highest standards of skepticism would have been brought to bear in this setting and in producing the audit opinion. And the fact, and when in fact it turns out that that wasn't the case, then there's sort of more of an issue there. On the third question of, to what extent are the firms more generally outside of the audit side of the profession aware of this role in trust? I think they're aware of it, and in part because they're aware of how it is a basis on which they're able to get themselves into corporate boardrooms. I mean, they wouldn't be in corporate boardrooms if they weren't in the business of selling trust intermediation. And I think the challenge, of course, becomes that then it's how to resist the temptation to coin that trust, which is what is often experienced. But again, whether that's true or not, it is experienced this way, that the non-audit side of the business is seen as something that corrupts the audit side of the business, in that it provides a strong commercial incentive to coin that trust in a very short run. And that is a challenge. And then to use that short run problem to go back to the first question about private equity. Well, one reason for private equity versus listed equity is for patient capital. And you say, well, private equity can make these sort of long-term bets and provide patient capital that's needed for a particular line of business or a particular sector, or even a particular idiosyncratic company to be able to do what it needs to do. That's in some sense the upside of private equity. But the downside of private equity, and again, this is part of how private equity is experienced by many people, rightly or wrongly, is that it is in the business of asset stripping. It is in the business of tax evasion. It is in the business of basically making a fast buck, and where managers involved in private equity companies are often seen as, the 2 and 20 rule, for instance, that they use is often seen as exploitative and extortionary rather than value creating. So to the extent that the best version of private equity is what is driving the interest in acquiring audit firms and the provision of that kind of patient capital, which is, by the way, what the intergenerational partnership model was intended to do as well. To the extent that that is, in fact, what's behind the interest of private equity in audit firms, then it can be a positive thing. But to the extent that what might be called the popular perception of private equity, which is that it is a exploitative and sort of opportunistic force for certain financial insiders to extract value from retail players, to the extent that that is the version of private equity that's driving the interest in the auditing oligopoly, then of course it's very bad for the profession. My own personal view would probably lean more to the latter than to the former. But I have no sort of substantive scientific evidence to back that up. I just don't think that private equity is going into this with all the best incentives and all the best motives.
Thanks, Professor, for your responses. We have a question from our chair, Gabriela.
Thank you very much. This is more a request for further clarification on one of the topics that I found extremely interesting in your presentation about these three sources of polarization that you see impacting the lower trust or lack of trust on auditors. The first, I understood it well, the fear for the future, the perceived incapacity of the auditors to control some of the factors, AI, climate change, etc. The second is the raw deal, but the third one is the one that is bringing me some additional curiosity about how you see this what you call the civilizational conflict between the us and the others. And where do you see the auditor being taking a position here, and how is it impacting the trust on auditors? That's if you could expand a little bit further on that, it would be very interesting. Thank you.
Yeah, that's a great question. So in two ways, it's responsible, but neither are direct. To clarify, the first is, one politician put it to me this way. He said, "Look, in any society, about 10% of the population is intrinsically racist, and you can't do anything about it." And it may not be about racism. It could be other things. It could be sort of, misogyny or some other form of sort of just, what we would consider morally unacceptable bias. So according to this politician, about 10% are just intrinsically like that, and there's not much you can do about it. But as these other two factors that we talked about, the fear for the future and the sense of the raw deal, as they become more salient in the minds of the 90%, then more of that 90% are drawn towards the ideology of othering. So that 10% of society that might be intrinsically racist suddenly swells to, say, 40% of society that starts harboring these sorts of thoughts of othering. And that then becomes, of course, a pretty severe problem in society, because when you're dealing with 40% of people that start viewing the solution to society's problems as drawing sharp lines of us versus them, that then sort of, creates conditions for serious conflict, even violence. And so that is an issue insofar as the audit firms are implicated in the rising sense of not being able to address the fears for the future, or are implicated in the rising sense that people have been dealt a raw deal. That then sort of drives more people into this camp of othering. So that's one way in which the audit firms are implicated in the ideologies of othering. The second way is that they are perceived, to the extent that this kind of othering is growing, they are perceived to be part of the elite that are, part of the forces in society that ostensibly care more about, for instance, here in the United States, where I am right now, I'm currently speaking to you from Houston. There is an increasing fraction of the population that feel that traditional leaders on both political parties, establishmentarian leaders in both political parties, care more about foreigners than they do about Americans. And this then feeds into part of the sort of polarization. It feeds into the kind of populism that you might see as a result. And auditors as a elite subclass in society are seen as part of that sort of disconnected establishmentarian elite. So that's where, again, they're sort of implicated in the sort of othering that we're talking about.
Thank you so much. Very interesting. Chana, back to you.
Thanks, Professor and Gabriela. So the last question, there's one there. Okay, last two. So Vanya, your question, and then we'll go to Paul.
Thank you, Sinead. And thank you, Professor, for your presentation. Two things that you mentioned surprised me quite a lot. The first one was your pointing the lack of training in auditors, because within the professions, audited firms were always perceived as being good schools, because the professionals are always being capacitated to deal with the day-to-day aspects of the profession. So it was surprising, quite surprising. And the other things that you mentioned that surprised me was the fact that no whistleblower was ever promoted, because as Lori has just remarked right now, we deal with trust in our profession. So any kind of whistleblowing is a service for the company itself, because you'll be pointing to a vulnerability that must be dealt with in order to avoid bigger consequence to the company. Because if we lose trust, we lose our capability of doing service for the market. So it was amazing. Do you have any kind of recommendation for us regarding these 2 points?
We'll get Paul's point as well, and then Professor, you can respond.
Thanks so much, and very much building on that direction is, you made the point that the pushback on auditors is almost expected because they're in the business of trust intermediation. But can there be a different approach that if you don't have someone holding themselves up to that higher standard to ask the right questions, push back where they need to, then what happens if they're not playing that role? Thank you.
Okay, great. So look, on the first issue, there's no doubt that audit firms spend a lot of time training auditors, particularly people early in their careers and so forth. And of course, institutes of professional accounting have all of their training programs and so forth as well. The question is, what are they training them for, and are they training them in the right things? Certainly the focus of that training over the course of the last couple of decades has become more and more on sort of application of rules and checklists and so forth, and less on the deployment of human judgment. Where auditors really add value or added value in the past, I mean, the historical origins of the modern audit was in the exercise of judgment on really difficult questions of business strategy and how management's call on those questions are adequately reflected, to use the sort of term, fairly presented in financial statements. That was the great intellectual challenge in auditing, and that's why really smart people wanted to go into auditing. And in fact, the smartest people in commerce wanted to go into auditing because you would engage with not just the intellectual challenge of your business, you would engage with the intellectual challenges of business as a whole, because an auditor would function in many sectors. As we've moved away from that judgment-based model into one where the focus is on the application of rules and checklists, the work of auditing is less intellectually satisfying. And so fewer and fewer people seek that as a fulfilling career from the perspective of keeping their intellect challenged, and that therein lies part of the problem with the training, that auditors are indeed trained a great deal. They're just trained in some of the wrong things. As to the question about whistleblowers, I would love to be proved wrong on that. I am still looking for exceptions, because the moment there is that exception, boy, what a wonderful water cooler story it would make. And that would, in some sense, be part of the narrative that you want people to create. As of now, I'm not aware of one, but I'm always looking for that exception. What can we do to promote that was the broader question. And I think it is about, creating and normalizing the kind of need to disagree without being disagreeable that I spoke of earlier. For instance, we heard earlier this week that Uber just settled for hundreds of millions of dollars with taxi drivers in Australia, I believe it was, in part because of its aggressive use of, or its aggressive interpretation and abuse of taxi cab laws in sort of, its first growth phase. This was in 2018, et cetera. Uber says now that it's a very different company and so forth. But at the time, it was clearly engaged in what might be considered morally ambiguous decisions, certainly, but also illegal decisions. And that was, in fact, part of the need for the settlement. And the question there is, what did the auditors know about that? How could the auditors possibly have been in a position where they were signing off on Uber's financial statements without knowing that there were these tremendous contingent liability risks associated with Uber's break things and ask for permission later model? And so it's those sorts of scenarios where the auditors should reasonably have known that something was amiss and didn't apparently do anything. Those are the sorts of issues that shouldn't continue to perpetuate, because as long as they do, we don't have the water cooler stories. Now, imagine if the alternative history was where some audit junior saw that Uber was engaged in this thing called Project Blackball, where if you were a taxi cab commissioner, the app that you downloaded onto your personal phone was a different app than everybody else, so that you would never be able to find an Uber and therefore never be able to hold the company accountable for violating taxi cab laws. Imagine if, as an young audit junior, you found that, and the audit firm encouraged and created the channels for you to raise and surface that all the way to the board. And eventually, if the board didn't make the right decisions, to surface it as a whistleblower to the regulators. And that became the water cooler story. That would change the culture with an audit firm so drastically. But that's not the story we hear. The story we hear time and time again is, after the fact, the auditor could have reasonably or should have reasonably known this, but apparently none of them did anything. That's the challenge. That's the problem that needs to be solved here. And of course, that I just used the Uber example because of the salience of the recent settlement in my mind. There are, of course, tons of other such examples you could use. You could use that with WeWork, which recently said that it would not be able to continue as a going concern. And only 3 or 4 months before that, the audit partners from the Big Four firm that were doing the engagement there didn't raise any issues. So how is it that was missed in just the context of less than 6 months, right? So these sorts of things are so abundant. These sorts of issues are so abundant in society that it feeds into that lack of trust.
Okay, no more questions. Thanks, Professor, for your excellent presentation. And I'll just hand over to the chair, Gabriela.
Thank you so much, Professor Romana. This was a tremendous, terrific presentation. And I think that we are richer now than we were 1 hour ago, for sure. This is also about us and the others, because listening to the others and not being just discussing among ourselves is the best thing that we can do. Thank you for giving us all these elements and food for thought for the future work of this board with respect to firm culture and governance. Thank you so much, and thank you to the board.
Thank you for having me.
So thank you all for the attention paid to this to these presentations, and I think it couldn't be either way. Even if you wanted to rest a little bit, it was not possible, because if there was something in these presentations that was clear, is that we should not rest upon the problems and the issues that we have heard about, but mostly about what it is our responsibility to try to do, at least, and to try to build, to revert a little bit the situation, and to be constructive as an ethics standard setting board. So we are a little bit late, not to say something different. We should restart at 2. I suggest that we start at 2:15 again? No.
Well, I'm just looking around the table, and some expressions of apprehension in terms of gulping down lunch. I was gonna suggest, Chair, perhaps to ask about to reconvene at 2:15. So it's a 50-minute break, lunch break, 2:15, and hopefully we'll be able to catch up in the afternoon session in terms of the time, if that's okay.
Okay. See you at 2:15. or maybe start. Thank you. Thank you for coming back, and sorry for my very slight for being slightly late. We are now moving to a slightly different part of this session on firm culture and governance, because Chana, I think that you may confirm this. We are now going to listen to you presenting the draft mandate for the group of terms of reference. Not yet?
No, not yet. I'm going to talk about the Australian Senate hearings, and then after that we'll get to
Okay, so I'll give the floor to Chana to lead also this part of the meeting. Chana, the floor is yours.
Thanks, Gabriela. So, as some of you are aware, there are Senate hearings going on. There are multiple inquiries happening in Australia, which was initially due to the PwC tax leaks, but there are a number of other cases as well. So if we go to the next slide. So the two main federal ones, one is the ethics and professional accountability, structural challenges in the audit and assurance and consultancy industry. That's a joint parliamentary committee one, and then there's an inquiry into management and assurance of integrity of consulting services. So both of these inquiries, wearing my day hat as the CEO of the IESBA, we had to front up to both these inquiries the last 3 weeks. Next slide, please. So some of the broad themes that I have sort of put together from both inquiries. One thing is the partnership structure and the resulting lack of transparency in reporting and accountability of the Big Four is a concern for the senators, because the partnerships come under state laws and have limited reporting mechanisms. The issue that the Senate is grappling with is that when you look at the operations of the Big Four, these are essentially multinational corporations. And so they're sort of wondering why it doesn't have more robust financial reporting and also the disclosure of remuneration. Interesting, the next two down the line, BDO and Grant Thornton, do operate as corporates and also prepare financial statements. So the UK model of limited liability partnerships as a solution has been brought up by a number of respondents to the inquiry. So we wait to see where it goes. The second one is conflicts of interest. So there are multiple examples of conflicts of interest not being properly managed. And interestingly, most of it is outside of audit. The most famous case being where KPMG advised on both sides to a New South Wales government entity. And one team said it's over the 10 years, it would result in a loss of 5.3 billion. And another team said it will be at you'll earn revenue of 4.7 billion. So there was like a 10 billion difference. And ultimately, the New South Wales Auditor General refused to sign the accounts until it was written down by 19 billion. So that has got a lot of traction, the management of conflicts of interest. Then the next point is the significant growth in consulting to the public sector. So over the years, the percentage of consulting done to the public sector has really grown in the Big Four revenue. In some cases, it's even up to 25%. And that also means that there'll be probably a lot of non-accountants who are involved in providing that consulting services to the public sector. Of course, we also have to keep in mind that the other consulting firms like Accenture, McKinsey, and BCG are also providing consulting services to the government. The fourth sort of interesting one is the profession's obligation to act in the public interest. So the PJC chair has sort of focused on this paragraph. And one of the things she put to us was, this is the very first paragraph in the code, but she says, a lot of the senior people in the firms don't understand what that means. So she's challenging the profession on it. Do you understand what that means to act in the public interest? Then the fifth one is sort of related point, the level of understanding and the level of compliance with the code outside of the audit division, in the non-audit divisions, in the firms. And because there's a range of professions there, some of them may have not come from the traditional accounting background. So, are they trained enough on it? And there was a lack of understanding that actually the non-audit divisions of the firms also need to comply with the IESBA code. So we had to clarify that when you talk about the firm as a whole need to comply with the code. There's also, while the accounting profession on paper has the code, they're also aware that outside of accounting, the management consultants don't have a good, robust code. So that could be also an area of opportunity to promote the code. The PJC chair has gone through a journey, and Ken would remember this because we were grappling with the issue in 2019 when, as an opposition senator, she was challenging the robustness of the code, and some people had told her that the US independent standards are better than the IESBA code. So we prepared a response for her at that time, and Ken also provided input, and APSP made a supplementary submission saying that the code is robust. And then subsequently, the work done on the benchmarking has, I think, now moved the needle, and she's no longer sort of questioning the robustness of the code. Actually, she told us this time when we were giving evidence that the code is world class. So she has moved on from the position she was in 2019. Then the whistleblowing protections, one of the other senators is very keen on the whistleblowing protections and is talking about a whistleblowing authority should be set up, and that's to sort of help with junior people who might want to blow the whistle and cannot do it through the firm or the organization you are working for. So he's pushing that. There are various whistleblowing protections for private sector entities as well as public sector entities, but it's a bit mismatch. And so there needs to be some way of harmonizing those as well. So there's some work there that to be done as well. Monitoring and enforcement. Well, on the audit side, our regulator was doing about 45, 50 files, and last year it has come down to 15. So 15 files doesn't really, I don't think, cut it. And if you look at a comparable jurisdiction like Canada, they do about 130 files. So so that's on the audit side. The tax practitioners board is looking after that, and I mean they have got a lot of attention lately with the work they have been carrying out. And then whatever is outside of audit and tax is being done by the accounting bodies, and that also, I mean, the evidence to date indicate that that needs significant improvement as well. The next slide, please. So this is the highlights of APSP's evidence. We wanted to show them about the global reach of the IESBA code, because there were various parties trying to come up with solutions for the issue, and we were concerned that one of them could be to develop a standard or a code when we already have a good code in place. So we convinced them about the global reach, as well as we prepared the three-tiered structure of the standard setting framework. And thank you to Ken and Gabriela for helping us with that as well. And I think they have now got it that, and actually at the day we presented later on, the PIOB presented as well. And the PIOB provided the governance frameworks, the board appointments, and things like that. And at the end of the PIOB session, the PJCHR said that there seems to be standards in place, and that originally she was thinking about a national solution, but now given what she has heard, she's thinking that it's best to be left for international. So I think on the global reach of the code, she is convinced that there's not much more to be done on that. The second one was APSP supported the transparency and accountability. So the preparation of general purpose financial reports and getting them audited, and also advocated for the remuneration disclosures as well. Then the third one was we advocated for legislative backing for the code for non-audit services. So for the audit part of the business, there is legislative backing via auditing standard. And what we thought is, if currently the code is being ignored or treated as optional, then if it's a legislative document, then it would have teeth and people would comply. And then you can also build in consequences for non-compliance. Also on the fourth point was that the board, the APSP board, decided that in the opening statement itself, we are going to acknowledge that breaches have occurred. That the tax confidentiality breach and the conflicts of interest breach, it was straightforward. It was better to say it has occurred. And that sort of then flows on to our fifth point, which was we wanted to emphasize that it was not a failure of standards, because the existing standards would have captured those circumstances anyway. So I think they are sort of they were happy that, and they asked us a question also. So you are saying that the current standards would have captured it, and we said yes. And then we also told them about the IESBA's firm culture and governance project, and that the TOR will be coming to this meeting for approval. The next one is the audit and non-audit services and operational separation issue. And so at a very high level in Australia, for the big four, audit revenue is about 15%, maybe another 5% for NAS to audit clients, and 80% is various services for non-audit clients. And our concern was there were some influential commentators, both ex-competition chairs, who were pushing for audit-only firms and operational separation. And we were concerned that, they are looking at the 5%. They're not looking at the 80%. So we put to the committee that we don't think operational separation is the answer. Then the next point is APSB recommended the establishment of independent monitoring and enforcement body. And it was a similar recommendation that was also included by the Australian FRC as well. We also talked about the development of professionally agnostic standards, and this was in light of the committee looking around for what's a good code. And if they think that the Australian version of the IESBA code APES 110 is the answer, we were sort of trying to tell them it's already happening, that it's been expanded beyond accountants. And that's one of, like we have now got a raft of questions on notice as well that we are dealing with. And that's one of the other questions that they have asked us as well. Then the next slide. So the next slide is the key shortcomings. This was identified by Dr. Ziggy Switkowski. So he's the independent expert who was appointed to look into the PwC matter. His report is on a matter of public record. And so these were the points that he said were the central themes. So the first one was lack of independence and external voices within the ultimate governing body. So he explained this, that inherent in a partnership model is the lack of hierarchy, as in a sense every partner is equal. There's also the issue of senior partners versus junior partners, and the career progression of junior partners may be influenced by the senior partners. So he said, accordingly, independent thinking may not always be rewarded. So he said that these complexities and structural circularities created impediments to the PwC Australia Board of Partners' willingness to question and challenge the CEO and the senior leadership. Then the second point he made was excessive power conferred to the CEO. So the CEO is elected by the partnership, and the board of partners was unable to remove the CEO. And he has done a lot of internal interviews and so on. And he said the CEO was not perceived to be accountable to the board. Culturally, the accepted view was the CEO runs the show. And during a long period of commercial success, this had translated into a reluctance of the partners to challenge the CEO. The third point he made was disproportionate focus on revenue growth and market leadership as strategic imperatives. So he explained this as there was considerable focus on the firm growth and revenue growth at the expense of the firm's values and purpose. And from the interviews from the focus group meetings he had conducted, it appears that the mindset was growth at all costs, and with a spotlight on revenue. Revenue was king, and partners who exceeded the targets were described as rainmakers, and some rainmakers were also described as untouchables, to whom the rules didn't apply. The fourth one was the decentralized business model without sufficient visibility of the enterprise view. So there was a focus on building 3 world-class businesses: consulting, financial advisory, and assurance. The growth agenda was executed via a decentralized operating model, and there was an intentional pivot away from an enterprise focus. So this, he said, led to a failure to maintain capability and capacity at the center for oversight and decision making. So that's where you lose sight, and sometimes, and the tax matter could be something that was managed in a silo, and there was no central oversight. The fifth one was complexity and fragmentation contributing to ineffective structures and processes. So he said there was a proliferation of policies and processes without clear connectivity. Data was collected in pockets with limited mechanisms for aggregation. He said there were glossy PowerPoint presentations which gave a false impression of comprehensive and disciplined structures when the reality was much less tidy. The sixth point he made was unclear responsibilities and accountabilities created gaps and risk. He said responsibilities and accountabilities were not well defined or documented, and connections, delegations, and escalations were not clear. Partners seems to have misplaced confidence that the matters are in hand and trusted that there was coverage, but multiple unclear and blurred accountabilities created gaps. The seventh point he made was the overly collegial culture, which inhibits constructive challenge. There is a high degree of trust in partnerships and a preference for harmony, particularly in maintaining relationships and loyalty, as that would impact career progression. So in practice, there was little constructive dissent and a reluctance to challenge blind spots. This had contributed to the partners' willingness to tolerate poor behavior of rainmakers. One point he made was, he said that the audit, and this is sort of quite different from what we heard from the morning, he said the audit division reflected best practice. He said in the audit division, challenge was tolerated. The audit division was willing to learn from mistakes. So the three service lines, when you look at it, his view was that the audit division actually reflected best practice. So that's sort of, I think next one is just questions. So I'm happy to answer questions.
Thank you very much, Chana, for this comprehensive debriefing of what's been happening in Australia and the conclusions reached so far. This was really comprehensive, but I believe that it doesn't speak about most of the many things that are being discussed there because it's so much. And thank you also for being doing what is possible and necessary to make sure that the IESBA code is at least considered among the responses that the Australian government is looking for. And in that respect, I think that as Chana demonstrated, there are some developments, interesting developments and progress made, because it was very recently, probably the approach was slightly different, or there was a risk that it would be different. And it's nothing about us wanting to be famous, but about being sure that we provide a robust, important, significant product, and that having a global framework, it's always better than having to deal with local initiatives with the inconsistencies and ineffectiveness that sometimes brings. So thank you for the immense effort that you have been doing, you and Nancy, in that respect. For those, I don't know if you mentioned that at the start, but for those who are interested, the hearings are public, so you all can listen to what's been happening there and listen to what Chana has been supporting and responding in that respect. So thank you very much for that. Very interesting developments. And well, as Chana said, it would be interesting to see if any of the board members have questions to Chana. Sorry, Mark, please.
Thanks, Chana. It's really interesting because certainly the key shortcomings in that independent report for the advisor to the inquiry, those are failings that get picked up in any sort of corporate failure type situation. There's nothing that marks them out as different in any way because of the profession it comes from, because of the focus that's there on public interest. And I do wonder, and you know, sometimes when regulators undertake inspections of audits and they find things wrong, there's a root cause analysis to work out what the underlying issues really were. And I wonder whether these are the root causes, or I wonder whether these are more a series of assertions about, you know, this is a conclusion based on something. So I wonder whether there's a sort of slightly challenging piece of navigation for us into actually making sure that we're not necessarily just responding to the sort of loudest comment, but we actually work out what the underlying root causes we're trying to address here.
Yeah, Mark. So, I mean, this was the independent expert who was commissioned by PwC to do the work, not to the inquiry. I think he's sort of identified this as sort of the underlying causes. I mean, revenue was one of the major issues. I think if you look at the history, that, you know, the previous two CEOs was from the tax division, which was very revenue focused. So I think revenue and incentives play a part in it. I mean, the 7 things I sort of went through very quickly, but in the actual report, those are like 7 chapters. I think I agree with you that, I mean, you could easily apply what went wrong in that situation to Enron as well. Similar revenue-driven culture. I mean, that's why it was interesting that he singled out the audit division for best practice, and where challenge was tolerated, dissent was tolerated. The audit division was willing to learn from mistakes, which he didn't find in the other divisions.
Okay, Ken, please.
Thank you, Gabriel. I just had a question, Chana, relative to the recommendations that IESB put across to the parliamentary committees carrying out the inquiries. And one of the recommendations is the establishment of an independent monitoring and enforcement body. Could you share, if at all possible, some insights into IESB's thinking in terms of the scoping or the at least the remit of what would be then this monitoring and enforcement body? In other words, was IESB thinking that this would be essentially just an oversight body for the professional accountants, or would it have a broader remit to cover all consultants, let's say, that are in the business of actually providing services to the government? And maybe this related question is the other recommendation I can see from your slides here, which is a recommendation about enhancing transparency and accountability of large firms, and clearly that would concern the accounting the firms. But there is a related question as well in terms of the other sort of larger consulting firms outside of the accounting profession. And you mentioned a couple, I think, McKinsey and BCG and perhaps others. So just a bit of thinking in terms of how your board has been reflecting on those recommendations.
So I'll address the second one first. I think all the large firms have come out and to varying degrees said that they'll prepare financial statements. And I think PwC went even further and said by 2026, they'll do full general purpose financial statements, which will be audited. And I think there are varying degrees. Some have said the use of large proprietary companies' financial statements. So that's sort of a level down from full general purpose. But basically all 4 have sort of said they will do it. It's a bit like what Imran showed in the morning when suddenly something happens, everything becomes possible. So I think that part is probably not too difficult, preparing the financial statements, and particularly the next two down are doing it anyway. Because the issue with changing the partnership to a corporate is that I think there are stamp duty issues, which can be quite significant. So a tax issue that is quite significant. BDO and Grant Thornton did it years ago, so they would have paid whatever was applicable at that time, but they're already operating in a corporate structure, so it doesn't affect them as much. So that's why we suggested the limited liability mechanism that the UK uses. On the monitoring and enforcement, I mean, it's an issue that has been raised in the Australian FRC's audit quality report as well. I mean, it could be, I mean, at the moment, the audit mandate is with ASIC, but ASIC doesn't seem to be interested in doing a lot of reviews. So it's up to the government to decide is what ASIC doing is enough, or do they want to do more? And then also to capture the non-audit parts of the business. We had not thought to the extent of do we catch the other ones as well, but that would be a matter for government like the BCG and McKinsey. It's sort of having an independent review, a body that can independently review the engagements, because I think that's where the firms have started off from audit, but now audit has become a very small component, and they're doing a lot more other things, and those need to be checked as well.
Okay, thank you, Chan and Ken. David, please.
Thank you, Chair. Just a question. Thank you, Jana, for walking through that. It was really actually quite insightful, and I can imagine it got quite animated a little bit as well at times. One thing that you said that is really, I'm reflecting on quite a bit. So I've spent most of my career in business, and the whole idea of revenue pressure is something that exists everywhere. And there's a very fine line sometimes between reasonable pressure and excessive pressure. So part of what I wondered is, with respect to the conversations that are happening at the Senate level, and I think Ken alluded to this a little bit earlier with monitoring and compliance. So that part I understand. But what about the discussion around the support mechanisms? And I think the FRC alluded to that a little bit earlier, to be able to support individuals, whether they're in business or in audit or anywhere else. Is the Senate reflecting on what kind of support mechanism could exist so that people potentially have a place to go and raise questions and raise challenges before it becomes a problem, not just one after the fact when we're talking about enforcement? So I just wondered if there was any conversation around that.
Thanks, David, for the question. Yes, and that's where there is a senator who is really pushing for the government to create a whistleblowing authority, so that if you don't have anywhere to go, particularly if you're a junior employee, you're starting your career, and it seems that within the organization you're not getting any traction, then you can go to this authority that they're thinking about. But that would be quite a sizable investment from the government as well, to create such an authority. But I have seen that consistently he's asking everyone, what do you think about the creation of such an authority? And generally people are supporting who are coming before the Senate.
Yeah, thank you for that. I think it's really interesting because I'm also reflecting on, for example, the Canadian body is the one I'm familiar with, as well as the UK. They offer support for individuals. So it doesn't reach the level of whistleblowing, but it's actually more of a support mechanism where you can phone and say, look, I've got this ethical dilemma I'm dealing with. And it's a very safe environment in which to raise it before it reaches the level of being problematic. So even in the context, I think, of the discussions in Australia, certainly whistleblowing is a mechanism that needs to be there, but it's almost something in between, if you know what I mean, like more of a support or a consultative.
I mean, the accounting bodies, depending on which one you're a member of, also have like senior members you can reach out to, like ethical hotline, and they will discuss things with you in confidence. So that's another mechanism you can access as a member of one of the bodies.
Okay, thank you for the question and the answer. And I don't see anyone else, but let me just not to make a question, but highlight a topic which I think it's important for us to have clear, which is something that you mentioned at the start of your presentation about the Australian government or Senate or whatever, looking for a response that includes not only the firms, but also the big consultants like Accenture, Boston Consulting, McKinsey, etc. And the fact that, as you mentioned, we are starting to go in this direction of exploring the profession agnostic or expanding the scope and of the standards and etc. The impact of the code is also relevant in that respect, because probably if it wasn't like that, they would think it would be too short for what they are looking for. So I think that if anything, this somehow confirms our intuition that this is starting to be important for policymakers, for those who want to find solutions which put everyone in the same situation when providing the same services. Well, and that's it. I don't see anyone else. Does anyone else want to make any comment or any question to Chana? If not, Chana, back to you. Thank you very much for the presentation.
Thanks, Gabriela. I'll hand over to Carla now.
Thank you, Chana. Next slide, please. So we've had discussions and heard with various presenters this morning, a lot of themes that was being thrown around. We've heard the pressure to achieve financial targets, and that David said whether it's reasonable pressure or versus excessive pressure. We heard poor leadership and tone at the top exhibited by ineffective governance structures. And there's huge emphasis on a culture of silence and fear on top of incentive misalignment. And a little bit thrown in there, the lack of ethical training and awareness. So where does that put us? Before we move on to discuss the draft terms of reference, Jeff and I would like to take you through what's already in the code and what are sort of questions we need to be thinking about. Next slide, please. So slides 65 to 68 are basically extracts from the extant code where we made reference to culture, where it's organizational, firm in various parts of the code. So there's a few paragraphs in part 1, a few in part 2 and part 3. So if you don't mind moving to slide 69, please. As we're not in a drafting mode just yet today, we're quite advanced in that process. I'd like to mention that where we stand in the code today, next slide, thank you, is that it does recognize the importance of organizational culture and individual responsibility, especially those that are seen as leaders within the organization to set the right tone and the right culture. There is some mention of drivers of ethical cultures and the link to IESBA as mentioned by Imran this morning. But that begs us to be in a position where we ask about what are the other considerations? What does the code really say about ethical culture? And we need to think about the responsibility of a firm as the extant code as it stands place much importance on the responsibility of the individual. Jeff, do you have anything else to add?
Thank you, Carla. Not a lot, really, but I think these slides really we want to demonstrate to the board that the code is not completely silent, of course, on firm culture and governance, but there is a focus on individuals, as we've heard this morning from our UKFRC presenters, and this is something that the working group will continue to look at in Q2 as we gather more information. We will also start to look at, of course, whether we need to strengthen the code, looking at, as Carla mentioned there and on the slide, the responsibilities of a firm and what culture really is. And in addition to looking at the code, of course, we'll be looking at other ways, as Richard has mentioned this morning, other ways of trying to address the issues outside the code, perhaps in addition to, and that's something that the working group will work alongside as they gather more information and try to get better understanding, on how the code can come in. For instance, we've heard this morning from UKFRC, they have the audit firm governance code. Now that these are principle-based code now, so some of the questions that the working group is looking at, well, that sounds really great, but how does that, how does our code currently will work in that kind of setting? So that we're pretty open book right now. We're not saying that it has to be done in a certain way. So we want to be as open as possible. So these are what we have currently, the key provisions in the code on culture and governance. But what we're saying is the working group is remaining very open-minded as they get a better understanding of the issues, get a better understanding of how they might be able to be addressed, and then we can start thinking about, perhaps where the code comes in with a fairly open mind. So I think we just want to finish talking about the code before we kick into the terms of reference. So I'm going to pass it back to, assume there's no, I don't know if there's any questions from board members, but we want to move very quickly to the terms of reference. So we'll be on time for the next speaker from the Australian Taxation Office. So perhaps I'll just pass it to Chana. Thank you.
Thanks, Jeff. So Carla, you'll bring up the Word document. So this is where we get into the terms of reference. So we are going to jump straight into the objectives because I think everybody knows about the background to the project. So we have a few points on the objectives. So the first one is we are trying to gather an understanding of what factors contribute to breaches of ethics and independence requirements. Then second point is reviewing the extent provisions, which Jeff and Carla just did. So those, as you can see, there's not a lot in the extent code. Then over the page, we could consider the development of NAM, and that's something the working group will consider over the next couple of months. And then D is about raising awareness, and Carla will go through the various outreach activities shortly. And that would give us an opportunity to talk about it. And then finally is developing a report for the board by the end of this year with recommendations. Then C is about the focus of the project. The focus of the theme of the work stream will be on ethical culture and governance in firms. So that is our focus. I'll hand over to Carla to talk a little bit about the approach and our engagement with stakeholders. Or is it Jeff?
Oh, no, I was just gonna add, basically, when we look at the objective, as what Chana have explained, there are two elements we're looking at this year. Number one is, of course, the research, the information gathering, the coming up with a report and recommendations. But the other element is what Chana was talking about is to raise awareness of the project, because we want to demonstrate that the code does play an important role in this space, as we've seen from the Australian Senate hearing. So we want to make sure that we maintain that profile of this work stream and really let our stakeholders, the broader group of stakeholders, understand that when we're looking at, audit/accounting firm culture, the IESBA code at a global center setter does play an important role. So those are two elements. And of course, as Charles mentioned, the focus. As we've heard today, we've heard a lot of examples from the audit business line, but as you would know, that this project the focus is broader than that. Is look at whole of firm, all the business lines, the whole firm's practice and the whole firm's culture and the governance structure. So I think before we move to approach, we just want to see if the board has any comments or feedback or question on that part of the draft terms of reference, the objectives and the focus.
Thank you, Jeff. Mark, please.
I was really struck by the couple of occasions that we've landed on ISQM1 in our discussions, because to my mind, one of the great strengths of ISQM1 is it brings accountability in. So for instance, there has to be, the named most senior individual in the firm who has responsibility for quality management. And I wonder whether the working group might consider the extent to which what we've currently got and what we may need at some point in the future has got appropriate tension for accountability within it.
Thank you, Mark. Do you want to react, or can we collect a couple of comments and questions? So Amarjit, please.
So I am a little confused. I have a long list of items. So would you like me to go through it now, or you want to finish your presentation first and then I jump into it? I may need about 10 minutes or maybe less.
It is on the objectives and focus.
Yeah, objectives. Yeah. I mean, in the main TOR. So I'm in no hurry. I could even send it to you and you could look at it. So whatever.
I think if there's substantive items, I think it'd be better if the board hear it, because otherwise we won't have a chance to address it.
Sure. I'll be quick with it then in the interest of time. So actually, I was thinking about it. These topics are of great interest to conduct regulators like the one I come from. So it became a note. I mean, I was just putting down my thoughts. So let me just take you through that. So I have, about 6 or 7 buckets, if I may say, in terms of what could be the approach. And also, I think somebody cautioned in the morning that we are not looking at solutions at this point of time, but some of this does get into solution. So just bear with me there. So first is, on culture piece, I think we need to look at it from while we do this work. So I think we should have outcome orientation, if I may say that. The challenge is, how do we bring about greater seriousness about culture? And experience in various jurisdictions very clearly tells us, including the latest crisis that we just discussed in Australia, that there can be huge disconnects between what is stated in an organization's mission, taglines, employee handbooks, vis-a-vis the actual conduct. So while we think of revisions to the code, we would be tempted to bring in more prescriptions. That is fine if there are inadequacies, and presumably that seems to be the case. At the same time, I think it would be perhaps more helpful to have an outcome orientation as well. So the questions that we should ask ourselves, what are the outcomes that we wish to seek on the ground, and how can our revised framework be designed to help us get there? That was one, and that leads me to the second point. How can we enhance clarity and certainty? So this is linked with the first point of greater outcome orientation. So the current code, I looked at it, and it contains broader expectations from the leaders and senior managers for promotion of an ethical culture. The following could be examined during the review, and you'll have to excuse my regulatory mindset. I've worked far too long with the regulators. So are these expectations and also the ones which we wish to add as a part of this review, are these measurable? Are these monitorable? Are we very clear on definitions? Can there be a metrics around these expectations? And do we want to be principle based or we want to be a little more granular? So, and my personal view is perhaps truth lies somewhere in between. If you are too high level, it doesn't really help. And we really don't want to get into a checklist approach also in terms of becoming too granular. Third point is transparency and individual accountability. Can we bring in more transparency through enhancing disclosures? For example, the value system, which is espoused in various audit firms, how does it get practiced? Can we develop some sort of a disclosure matrix around that, which could be disclosures to the regulators or disclosures to public? How can we enhance the individual accountability, not just the firm accountability? Can we bring in more focus on individual accountability? And there could be various ways of doing it. We can get into those. Fourth point, I think this is very close to my heart because I believe, having worked in regulation making for a long time, I'm very clearly of the view, unless you monitor the implementation, it doesn't really take you too far. So can we look at making recommendations on an implementation and monitoring strategy for the code? Expectations from various stakeholders, in various jurisdictions may be spelled out. We could also do a quick reality check through a survey, perhaps, how the current code is getting implemented, and that could perhaps give us some. I'm saying only on the ethical side, on the code that you showed in your slides, only on those limited parts. What are the gaps between the intentions of the code and its actual implementation? The next point is on supervision, enforcement, and credible deterrence. This is again coming from my regulatory mind. Can we think of making recommendations on supervision of conduct and culture by local regulators? So if I can give you, my own experience, we don't have much on how to supervise the culture part. We do have comprehensive inspection strategies, but more on the rules implementation or more on the compliance side. So potential risks related to conduct and culture, we've seen this, they contribute to the origination of integrity risks and the prudential risks. To elaborate how much the culture of the enterprise and or conduct of management and employees could adversely impact on the financial position or integrity of the enterprise in the short or the long run. We could also think of making recommendations on an enforcement strategy, how to bring in credible deterrence. In fact, IESBA did a very interesting piece of work about 10 years back. We could look at that. So the main thrust of that work was deterrence occurs when persons who are contemplating engaging in misconduct are dissuaded from doing so because they have an expectation of detection, and that detection will be rigorously investigated. Today, you don't have, that sort of, for want of a better word, fear in the minds of people in audit ecosystem. Just last 2 points, just bear with me. One is, which has already been discussed, I think it would be very useful for this group to do a compilation of global practices. And as Laurie said in the morning, I think compilation of global good practices is also as important as bad and avoidable practices. We could also think of, can we do some collaboration with reputed universities, academic institutions in terms of developing case studies? Last point, how technology this is miscellaneous set of points and I need to add more to it. 2 points as of now. We need to look at how technology is impacting culture in both good and bad ways. And another point, how new models of work, and this I've been just mulling over, like work from home, does it impact the culture? Because you are, sort of disconnected from human interaction. And how do organizations maintain their value system in these new models of work? I have another points, but I'll just pause with that, and maybe I'll send you all of this. Sorry for rushing through this.
Thank you very much, Amajit. I'm not going to respond, but I'll let Chana respond. But thank you very much. I think that many of your questions and suggestions go back to the basics of everything that we do, not only to this project, but Chana, it's on you to provide some feedback if you're able.
So I might deal with Mark's point. So Mark, you're sort of saying at the global level, we have IESQM1 and it creates accountabilities, but what about the non-audit divisions and what about accountability there? Ironically, in Australia, we have a quality management standard for the non-audit divisions of the firm, which is modeled on IESQM. And previous to that, we had, for the whole of firm quality management, which was modeled on ISQC1. So it has been then seen, and I think we are one of the few jurisdictions. The other one I'm aware of is the US, where there's a quality management standard for non-assurance services. But that didn't seem to have stopped what happened. But that's something, yes, we will have a look at as we look at IESQM1. Amajit, a lot of interesting observations. Some of them, I think, is more towards the outcome, and that's something we are trying to keep away today. And I think some of the other ones fall into the bucket of those who monitor and enforce. And here, while those are important considerations, we are setting the standard. So we are sort of more from the standard setters perspective that we are looking at things. So, we'll take your comments on board for the working group to have a look at, but I'm not sure any of it would have an impact on the objectives. Is there anything that you think would have impact on the objectives?
Well, I haven't really linked it back to the objectives, but I thought the objectives are very broad. The first one, I think, probably would cover anything and everything, but if something is potentially missing, we could see if we need to modify objectives in some sense.
Yeah, so what we could do, can I suggest to Gabriela and Ken that that the working group anyway has a meeting on Tuesday, whether we have a look at Amajit's comments and see whether that would change our objectives, or is it more on the monitoring and enforcement side, and then maybe bring it back on Wednesday for a quick 10-minute session. Is that acceptable?
I think it's always good to have some kind of reflection on suggestions that are made to the board. So whether it's 10 minutes or 2 minutes or 1 hour, but I think that the working group should definitely look at these comments and see from these comments which one, if any, may impact the scope of the work, and come back to the board with some reflection.
And Saadia has a hand up as well.
So several times today we were reminded of our responsibility to the public interest. And this kind of reminded me of a project that we did not too long ago on the role and mindset. And I was wondering if the working group would consider those comments or those provisions, and those are written for the individual. But maybe what we're doing now is writing very similar framework for the firm and for an organization. The other thing I was reminded about is the first sentence is written in the negative, but we were also reminded to look at best practices. Is there something that we can look towards gathering information, understanding of factors that contribute to staying within the lines and encouraging others to stay within the lines? This is a brand new project, and it's my second point. There's a brand new project, and we mustn't fall within the habit of thinking of amending the code or non-authoritative material, and not preempting what's to come. But we should think about where does governance lie in conjunction to a code that we already have. And I'd be interested in some new thinking about how this gets factored in the report to come. Must also not be overly ambitious because we have a tight timeline. So if there's others that we can coordinate with, ISQM was mentioned, so we can leverage off that, as well as any other standards, international standard setting body that has already done work in this regard. This will help us not rewrite something that's already been written and tried, but actually be able to leverage and partner with someone in order to make sure that it's implementable in the near future. Thank you.
Thanks, Adya. I'll take those as observations and comments. Ken?
I'll be quite quick. Really, just in reaction to Amarjit's comments, which, by the way, Amarjit, I think your comments resonated very much with me, and there's a lot of good stuff that you've said that I would not want to lose. That's my recommendation to the working group, to take all of it under consideration and reflection, as you indicated, Chana. A few of those, to my mind, would be well within the remit of the working group in terms of, for example, Amarjit, you've indicated, maybe a suggestion to the working group to think about the gaps between where the code is today relative to the impact it's making in terms of implementation. Are people understanding the standards? Are they applying the standards? And if not, why not? So that certainly would be within the parameters of the working group's work. But others are kind of a longer term, which to my mind, actually, we should not lose those because we need to think about this piece of work in the broader ecosystem. And that connects also to the recommendation that IESBA has made to the parliamentarians in terms of perhaps establishment of a sort of a regulatory and monitoring authority over the area of consulting services, etc. And just thinking about recommendations or how the standards, if they're going to be developed, would be put in place and then subsequently monitored in terms of compliance and then the enforcement, would be good. If not the working group, perhaps the task force that comes out of it, if indeed there's going to be a recommendation for a project. And if the task force can then, after having gone through all the analysis of the issues, etc., we would come up with, let's say, a series of already some early thinking or some recommendations that we could offer to some of the government authorities, etc., as they are thinking precisely about these issues of culture and governance. And the more we can, let's say, assist or help the relevant authorities in terms of thinking about their roles and responsibilities in the broader picture, the better it would be. Because as we know, standards are one thing. You do need the teeth, you do need the regulation, the enforcement to go with them.
Okay, thank you, Ken. James, please.
Thank you. I'm just focusing on the scope or the objective. So can I, my observation, I guess, is number B, and unless I'm incorrect, number B limits the review for a particular purpose, should be strengthened to deal with leadership and governance. And I just heard that there's an opportunity that the code, let's not predefine the area that we want to emphasize. So I think it might narrow the thought process of the working group, and I'd suggest that B just be a little bit broader, because A is going to say there's a bunch of things you're going to think about and find, and B says think about it relative to the extant provisions. So my simple recommendation to not inadvertently narrow the group is B says review the extant code and consider areas where the code may be strengthened to reinforce a culture of. So I'm just reducing the one target and allow you to open up your target thought process. On 5D, if you just scroll down, I'm a little confused about raising awareness of the project objectives. I mean, right now we're trying to understand the landscape and the issues. At some point, we're going to determine what the board is going to be doing, and those will be our project objectives. So just want to not get ahead of the board. I think you're probably raising awareness of the, I guess, the matter that you're exploring, the issue at hand, but not necessarily what we're going to do. And I think that will be important because we've not yet decided as a board where to go. And then finally, it says develop a report and recommendations. Of course, it could be very broad, very narrow. Can I just include, I'm not sure if you'll get answers, but I would like that report and recommendations because I think you have to include, including scope and approach for the board's further work for consideration. So I think we will get a lot of areas, but I think a working group's steer on scope of this project will be a particularly helpful exercise when the board is trying to decide how to move forward. Those are my three thoughts. I just echo Mark's final comment. In our strategy and work program, we did mention explicitly our coordination with the IESBA QM. I think they will be a valuable partner to have open conversations, especially around scope once we get into the issues. If you could just mention them as a group to consult with, as in the approach section, or coordinate with.
Thank you very much, James. Chana, I see you do you want to respond?
No, those,
okay.
I think we'll accept all of those recommendations.
Okay. Well, I have one additional one, but I'll speak at the end. Christelle, please.
Just want to, I didn't find quite, no, let's reformulate. When Professor Ramana this morning stressed certain aspects of the subject, which were very challenging and interesting, I didn't find myself in the way that we express the terms of reference, to what extent we are using this, putting some emphasis, and because he was raising the issue from the outside to the inside, if I may say so. And I felt with the terms of reference, we were more about, okay, the public interest is a sort of given. And my feelings this morning was he was raising some other aspects of the public interest. And I didn't feel in the terms of reference, I would find that we could capitalize on what he said. Maybe it's just a bad feeling. It was very, very soft things that could be linked to what he said. And I felt that maybe we could put some more emphasis on what he brought this morning in the terms of reference. But
yeah, I mean, I think some of the things he said was quite confronting, because he sort of, I mean, his example of there's no whistleblower who ever got promoted was an interesting observation. And I mean, he was sort of saying, while we think there's a lot of challenge going on within at least in the audit environment, that he didn't feel that there was significant challenge going on. So it's interesting, his view. I mean, we can have a look at it and maybe think about how we can incorporate public interest considerations. I mean, if you have any specific suggestions, Crystal, happy to.
Yeah, I'll think about that. But I think the dimension that he brought about very, very present, new aspects of impacts on the culture and expectation about culture was interesting to put in our work, I think.
Thank you, Crystal.
No, I'm okay. I'm seeing a number of cards up.
Yes.
So I think, is it Laurie or Andy? I don't know.
I think it was Laurie.
Okay, Laurie.
Not sure.
I'll be really quick. Look, I think this looks good. One of the things that struck me as I was thinking about this is, the code has historically been very audit quality and audit independence focused. We've started over the last few years to move out of that, no CLAR, certain other purely ethical provisions, the tax provision, now sustainability, looming very large, which is a very cross-disciplinary type of thing. I was thinking about whether we need to actually call out either in this or just in the work that the firm does, the impact of multidisciplinary on the culture within a firm, because there are often subcultures, right? Because those are very different skill sets and those people come from very different backgrounds. And it's a very particular issue, I think, for mid to large size firms, anybody who's running or participating in that type of firm. So I think consider whether this multidisciplinary, a look at that, and then thinking about those cases. And I saw in Richard's earlier presentation, he mentioned McKinsey, which is always the one that comes to mind for me when I think about a multidisciplinary or a consulting type failure. But there are many others. There are many in the tax space. And I think whatever we do, it's going to really need to resonate, because this is a great opportunity to start to talk to those people and bring the code to life for them. So that's it.
Thank you very much, Laurie. Robert, please. Robert Buchanan.
Yes, thank you, Gabriella. I will reserve my comments until other board members have spoken. I just wanted to signal to you that I'd like to make a public interest observation comment, but I'll leave it to you. Not being in the room, I can't see who else is wanting to speak.
Thank you.
You bring me in at the end. Thank you. I'll lower my hand and you can bring me in when you're ready. Thank you.
Okay, thank you very much, Robert. Andy, please.
Thank you, Chair. Just a couple of things just to tick off. I do want to also endorse Amajit's comments and visions. I think we definitely need to keep those for a list, if not for this project, for elsewhere. And I think responding to what Christelle said about that we heard today, that hopefully it's more than just an appetizer to get us in the mood, but that there's a way to operationalize that. I'm not suggesting that there isn't, but I would love to see some at least some dotted lines of that. So with regard to my three comments that I have, and with regard to objective and focus, admittedly, there aren't many words up there to look at. So I did want to make sure that the focus includes, because the SWP is only mentioned really in passing, I think, in that paper. But in the SWP, paragraph 92, it refers to under firm culture and governance. It says, given the link between culture and perception of the concept of audit client, the board will also seek input from stakeholders on their views regarding audit clients and the independence perspective. So I just wanted to make sure that since that's firm culture and governance, and I realize the implications of that is not on the 2024 plan, but it's on the longer term plan that I had understood when we adopted this, that in what you're doing right now, that would be taken into account in terms of get information gathering. And I just wanted to share, in case you haven't seen it, only last month, the SEC chief accountant said in a speech Furthermore, auditors should conduct engagements with a mindset that investors rather than management are the audit client. So I think it's certainly building some steam. So my next comment is to also double tick what's been, or triple tick what's been mentioned about the IASB overlap and coordination. Certainly our remit is broader than just audit implications, but I think there are some audit implications that certainly come up. And so I'd love to see them involved, and vice versa. And then finally, I just want to make sure that paragraph 7 is not as a unintended consequence or some sort of conclusion that's been made already. With the firm embracing a profit-driven culture, it almost implies, well, perhaps maybe a defensive reaction implies that there's something wrong with a profit-driven culture. And I would argue that if it wasn't for the profit-driven culture, very smart people wouldn't be involved in the public professional accountant stream to get involved with it. So I just want to be sure. But also part of the profit-driven culture is causing some professional accountant firms actually to exit auditing pies because of various ancillary costs associated with that. So profit-driven culture, and perhaps this is neutrally written, and perhaps I'm reading words that aren't there, can be both positive and have pluses and minuses in terms of it in the public interest. So I just didn't want that to be seen as as necessarily a conclusion looking for an entry point. So forgive me if my words are awkward, but anyway, I did really want to make sure that the working group does make sure that client definition is kept moving along, even though I understand the rulemaking on that is years off, unfortunately. Thank you.
Thank you very much, Andy. Do you want to respond now, or can we move to another question?
Carla is very helpfully reminding me about the clock and that we had to finish by 3:45 at least to get the next presentation in. So Andy, to your point, I think, Jeff, we knew we had to collect the information on the audit client aspect. So maybe we have not reflected it in the TOR, but we were aware that when we go out to meet the stakeholders, that we had to collect the information about the audit client, as you said, for the longer term.
In lieu of, I'm sorry to interrupt, in lieu of having detailed words in this, I don't want to interrupt it with that. I wonder if the SWP could just be referred to in a more robust fashion so that we know that it's incorporating what's in the SWP, just for consideration.
And what were your other ones? IASB, yes, I think we accepted James' point, and we will incorporate that IASB. Yeah, I mean, just speaking for myself, I think we can even lose paragraph 7. Okay. Yeah, Tomira.
Thank you. So for the objective side, 5B, saying that the possibility to it says further strengthen the code, and the code is quite detailed enough, and further strengthen gives me an impression that another section might be added or more elaboration. But hearing to today's presentation, it's more about how to deliver the tone, nuance, or like more the expression I like is commitment versus compliance. So I think to change it in a positive manner or such kind of things is helpful to strengthen the code. So I just want to avoid the strengthen meaning, adding something, making detailed, more rule-based. That's my.
Thank you for that observation. So at this stage, it's a working group, so we are doing fact-finding, identifying issues, so it could be that development of non-authoritative material is one of the options, but we are not got there yet, and that's why we don't want to get to a solution yet. Let's first study what is the issue that we are grappling with, And then once we identify the issue, then we can say, okay, what does the standard currently say? And does it address it? Like, for example, when we looked at the Australian ones, we looked at the situation, looked at the provisions of the code, and it would have addressed it as it is now currently.
Thank you, Chana. Just to be clear, thank you very much.
Okay, thank you very much, Tomoyo. Amajit, do you want to speak?
One quick point, I think we've had some fantastic presentations since morning, very rich discussions, and a lot of inputs have come. So I would strongly suggest, if we can look at all of the discussions today, because there are a lot of inputs there's some potential solutions as well. And if the way it is, the TOR, the way it is formulated now, if it sort of, you think potentially covers everything, it's fine. But in case it needs little more refinement, we can work backward from what you have on the table in terms of the inputs that we've received today. It should not become restraining in terms of getting there. That's what I'm trying to say.
Yeah, thanks, Amajit. And I think that's why your interventions and James' intervention is good, because we can keep it broad at this stage, and then later on decide on the path forward.
Sorry, just one more point. In case there are some areas or recommendations which do not necessarily fall within the remit of IESBA, but may be useful for others, I think we should be willing to make those recommendations as well.
Okay.
Yeah, that's all. I mean, okay.
We still have now Robert. Robert, the floor is yours.
Thank you, Gabriella. Thank you, Chair. And hello to everyone remotely. And an apology from Seko Modise, who was to be in New York as your observer for this meeting, but she's, for personal reasons, unable to be in New York, as Gabriella said. And so at quite short notice, Dave Sullivan, my colleague Dave Sullivan, and I will be sharing the observation duties. So you'll have Dave for most of tomorrow. But from my own personal perspective, it's a delight first to be back working with you again with the IESBA board, but also I have had a long professional interest in this topic, as Chana, my Australian colleague, is very well aware. So it's been fascinating and great to be able to be involved. Thank you. So as Chana noted in his introduction right at the start of the day, the PIOB is very supportive of this project being taken up into the new strategic working plan as a major priority, strategic priority. There's a strong responsibility to respond to the issues, and it's been a very good start, I think, made today. Noting that this is the early stage, it's the establishment of a working group and recommendations to be made further, which will be taken up by a task force using the board's usual methodology. But there's some quite significant conundrums here, aren't there, which have emerged in the discussion, and I'm sure will continue to provoke thought and will need to challenge you as you move into the project. Mentioned several times, it's important to ensure that the governance and culture focus goes right across all the service lines of the firm. This is very fundamental because, as we all know, the traditional service lines of accounting firms, including audit, have been increasingly subsumed by other service lines that aren't necessarily undertaken by PAs and don't necessarily involve traditional accounting work. And indeed, when it comes to the culture and ethics of those consulting services, the public interest isn't limited to the accounting firms, as has been mentioned several times today and has been recognised in the Australian inquiries. And some of Richard's examples also illustrated that. But then, while the board, the IESBA board, not closing your eyes to that public interest or unduly narrowing your focus prematurely, this does raise the need for the IESBA to keep the focus within its own remit, which is accounting firms. It's as defined, was the term mentioned in the paper, however they're defined. But it does need to include the whole firm, including, importantly, the network dimension, not to be forgotten, and how it's governed across all the service lines, and, of course, the impact which the non-accounting service lines have on the core work of professional accountants, which is the core focus, and how the behaviour and conduct of non-professional accountants affects that of the professional accountants and their service lines, particularly audit. And then, of course, in the context of the sustainability work, the board is already starting to look at how the code can be broadened to professionals other than professional accountants. But would that be a distraction in this topic? A point for consideration, I think, in the fact-finding work, and the chair, you mentioned that point just a little while ago as well. There's also some definition issues here. What's meant by governance? What's meant by culture within the context of ethics and ethics behaviour? And at the heart of it is needing to be clear about this conceptual relationship between culture and governance. Which drives which? That's been mentioned several times today. I think the predominant view is that governance drives culture. That's certainly the mantra within good corporate governance practice, but there's room perhaps for thinking of it as a two-way street as well. And Richard made a very important point about going right back to the root origin of that cultural dynamic and the incentives that drive the firm and the leaders of the firm at the core of the organisation. Profit important, Andy, but it needs to incorporate wider values as well, obviously. And similar points have been made by others on that. So it's just, while very encouraging of the project, it's important to get this right and to be very clear about the scoping, because, Chair, as you outlined in your introduction, there's a lot of interest in this project, and the potential impacts are significant for a large number of firms. So could I encourage precision in the drafting and the language, and the draft objectives that are on the screen in front of me now? There's quite a few different terms that are used in different ways, and could there's room, in addition to the point that James made about point B, there's just a room, I think, for a little more precision in the use of some of the terminology there. Leadership and governance, I can see right in front of me there. Leadership comes in at that point without having been mentioned earlier. So just make sure you get that precision right. And I guess another observation, which is more a personal observation, is whether the preferred title of the project, once it emerges from the working group, might actually end up being governance and culture rather than culture and governance. I can see why culture is there as the driving, the predominant factor, but if we're talking about governance driving culture and ethical behaviour, if that's what emerges from the fact finding, then think about possibly a change in title as well, just to get that signal right. Just to summarise, then, could we just ask the working group to be clear about whether it aims to recommend code development which changes the behaviour of individuals, both professional accountants and others within the firm and within the governance structure they work in, seeing the behaviour as the driver to structural change in the firm, something broader than the existing structures. There was reference to the biases of the audit payment model this morning, and I think a reference just now also to the profit driver in the model, which has been, as Andy has said, has been on the horizon for this board for some time. Is that going to be where you're going to pitch the work, or is it more ethical governance within existing structures and existing incentives, which would appear to be more manageable, I think, and more directly within the remit? But open question when one puts the public interest matrix across that. I hope that comment will be helpful. And then finally, just a comment about the global context. And there's been just a few comments in the past few minutes about that. The presentations have been diverse today, but they've all come from the English-speaking world. So it is important to expand the work without any predetermined perspective from the limited number of jurisdictions which have been talked about today, which could be constraining, as could the range of regulatory frameworks which exist, and helpful reference, I think, to the regulatory frameworks just in recent comments. There are doubtless some evolving practices across jurisdictions, and it's not just a matter of leveling up with those, but it's identifying sources of leadership and new ideas where they exist, and being open to following those. So it's challenging. A comment that was made internally in the PIOB when we were discussing this last week was don't narrow the focus unduly quickly, but do be conscious of the importance of not being diverted by matters that ultimately are outside the remit. So I hope that's an encouraging comment, Gabriella, Chair, and look forward to further development. Thank you.
Thank you very much, Robert. Very encouraging and very constructive. And of course, the working group and the board will reflect on your suggestions and comments very carefully. The idea at this stage is exactly to collect these perceptions, understanding, and elements to make the best out of this project. And on my side, Chana, if you allow me, and if you don't have anything else on your side, very, very quickly, because we are running again late. But just a very small comment from my side on the terms of reference, and this time on 5A and not 4. I also had comments on 5B, but someone else had already mentioned. On 4A, I don't know if it's too wide when we say that we have the objective of gathering an understanding of what factors contribute to breaches of ethics and independence. I think that we should not be afraid of mentioning that we are looking for culture and governance, because there can be many other factors which are not related with the culture and governance, as we saw from some of the presentations. So it might be useful to somehow be clear about what we are looking for, but you'll see better. And my second comment, because others have mentioned other things that I'd like to mention, namely on D7, that I was struggling to understand as well, namely the relation between 7 and 6, because that, however, was not clear. But anyway, you said that I don't know what this however means, but since you have already agreed to look at this, I'm not going to mention anything else. My last comment is really along the same lines of Robert's last comment. You will be surprised, because I'm always the one trying to rush things, and I'm wanting to move quickly and fast and etc. and seeing the product of the work. But this time, and in this project specifically, I'm afraid that we should not be too rushed in respect to narrowing the scope and defining the scope. We need to know a lot of things and then leave 90% of them out and take the 10% which really matter for this project, but we may not have heard and reflect upon them all yet. So, of course, we have to have some focus. Of course, we don't want to be all over the place, nor to promise to boil the ocean and do everything in everything, but really selecting what is necessary. And I would advise, if I may, the working group and the board to be very open-minded, very open with respect to what can be the outcome of this first year of work. It can be one project to change the code or improve the code or strengthen the code or whatever. It can be a standard setting project which is something different, or nothing of this and something else. So I think that we should really keep, for the time being, very open with respect to, or it could be 3 projects, one on implementation and adoption, and the other, I don't know what. So let's keep our minds open to what can be the very important results of this work. And on my side, this is all, except thanking you for this incredible work done and the discussion that you were able to foster and trigger here at the board, which is the most important thing. And I don't know if we have time for a short break, because I know that we are late for the next presentation, which should have started 4 minutes ago. We are in your hands. Can we break for few minutes?
Yeah, apparently they are not online yet. Is it the 1 hour difference that has confused them?
Oh, so that means that we can have a 45 minutes break.
No,
I'm in your hands, so let me.
Let's go for a 15-minute break, and we'll try to reach out to them.
Okay.
Because I think when we organized it,
Okay.
there was a 16-hour difference, and now there's only a 15-hour difference.
Okay. So, yeah, okay. So we will restart in 15 minutes, which means 4:06.
Yeah.
4:06. Thank you.
3:45 Eastern, because I do want to tell them in Melbourne time. So I didn't send my calendar invite because she said she was going to do it. I told her
Okay.
3:45 Eastern.
Let me email her.
Oh, my
Hi, everyone. Just to let you know, we're still just trying to get on to our Australian speakers. So what we might do is we'll start the meeting at 4:15, so that gives you another 6 minutes. And we will finish up the rest of the terms of reference part, which is the outreach and the deliverables, and give you a sense of what the timeline is going to be. And hopefully by then we will be able to get on to the ATO's presenters. Thank you for understanding.
Well, thank you all for being back. And I apologize for this change of plans with respect to the schedule. Well, there was a slight problem with the next presenters and the different time zones, which are never easy to manage. Nevertheless, we have to start because there are some people who have to leave. Chana, I think that your plan is to turn the agenda and your plans a little around, so that we are going to speak about outreach and then wait for the presenter, right?
Yeah, that's
so
right.
Please.
Yeah, so apologies. I think it's because this 1 hour time difference, because when we spoke to them, there was a 16-hour time difference, and now there's only a 15-hour time difference, which has caused the issue. So I'll hand over to Carla to talk about the stakeholder engagement and the approach. Carla?
Thank you, Chana. So this part of the terms of reference, we wanted to gather the board's feedback in terms of the approach. We've had many lessons from the other projects where we've been very intentional in our approach and conversations with stakeholders, identifying who are the relevant ones we to talk to, and obviously as we go along the journey, identifying those that we don't normally talk to, but's relevant for the outcome of the project, gathering further insight and making sure that we're covering all bases of the project in terms of who we're talking to. So the list that you see in front of you in bullet point 9 is not as aspirational. It is our intention to approach every single one of these stakeholder community at various points during the year. And the thought process is that we will speak to them in a one-on-one conversation to make sure that we'll be able to encourage a honest, open, two-way conversation in terms of what we're trying to achieve through this project. I will quickly go through this list that we have in front of you in terms of who we've reached out to so far, and obviously be very helpful if board members, as ambassadors of the board as well, be able to share the story and approach stakeholder groups in terms of having a conversation with the working group and help us connect with people that we don't normally connect with. So for example, I'll go through the list. Members of the monitoring group. So a lot of them will be the regulators, very important group of people, as we know that this project, we need to get the regulators on board in terms of where we see this going. We know that Paul Munter, who is the chair of the monitoring group, and he's the chief accountant, and SEC is very interested in this project. No doubt that we'll be having a conversation with the IESB, IESBA SAG group, which is happening at the end of April, and it consists of a few different organizations that's outside of the PA group. So we're very interested in connecting with them. Obviously, a no-brainer there, we would speak to the firms, and we already have meetings and appointments in our diaries to reach out to leaders of the firm. So we're not talking to just ethics and independence leaders, we're talking to the boards and the top management where they have influence over the organization's culture and setting the tone at the top. Very important community, the corporate governance and the investor community. We have good contacts in terms of individuals we've liaised in the past from ICGN. We also have Ellen Johnson, who's the chair of the Good Governance Academy. So it's very important stakeholder groups there. The PAOs, as usual in the IFAC, PIB, and SMPAG group. The national standard setters will be meeting soon in May, and we'll have a session with them as well. OECD, it's one of the international policymaking organizations that's made considerable development in this area, and we'll be reaching out to them as well, and also other professional organizations and academics. I'll pause here to look to the board members if there's other stakeholder groups that we felt that should be on the list. And obviously we welcome any connections you'll be able to direct us to and be able to set up for us to engage with these stakeholder groups.
David?
Thank you. So a couple of groups that might be helpful, and I'm quite happy to facilitate connection for you as well, would be to the CFO bodies. So you've got IAFEI, for example, which is the International Finance Executives Institute. You've got FEI in the US, which is really influential, but you've also got the one that I'm a board member for, which is the International CFO Alliance as well. So you'll actually get a captive audience of a lot of firms. So it might be really helpful to meet with them as well.
Yes, no, that's really good because generally those are the ones that we find really difficult to get engagement with. So it's great if you can connect us with those groups.
Most definitely.
Thanks, David.
And not only for this purpose, but we can speak later. We'll take that as a broad offer. Thank you, David. Any other comments?
Crystal, you had your card up.
I think I was on the CFO side and maybe more broadly on the customers or clients point of view. What is important in terms of governance in the firms when they are the ones who approve non-audit services and audit relationships. So I wonder, more broader than the CFO, if the point of view of the issuers could be interesting to some extent here.
That will be like trying to get at the company director community. Yeah.
And my comment is the same. This is an objective not only for this project but for others. We need to connect with the corporate world.
Yeah.
Because we have to have at least their on the one hand the information and the sensitivity of but also the buy-in for what we are doing. So this is definitely something that I'd like to refer to as well. And if I may, with respect to the regulators, I know that you mentioned the monitoring group and some of the regulators who make part of the monitoring group, but I think this is going to be regulators and policymakers are going to be a critical part of this project, because at the end, part of what is necessary or maybe necessary to do, it's in their hands, but it's also about their perspective about what may be necessary to do. We can't waste this opportunity of engaging with them as much as possible and get their perceptions and suggestions. And finally, well, I see Paul. I don't like not to be the last one, but I will finalize. And finally, some other less traditional or obvious stakeholders, which are the ones who make the noise, so to speak. But they are important. We heard in some of these presentations how much it makes part of the story of the lack of trust, the impact on the reliability and confidence, and etc. So something like I don't know if journalists or parliaments in Australia and in other places. Most of the stories that come out come from these areas. So I think that involving them in these conversations will be also important. And involving them in the conversation does not mean taking everything on board, but we need to be aware of the perceptions that we will have to deal with. And the understandings and etc. So some suggestions, but you will see better. Paul.
No, thanks so much. It was actually that point. The media and the comms, I think, are critical for perception.
Okay, so we're aligned. Anything else from the board? So, China, Jeff.
If I could just add to your point, Gabriella, about regulators, I think it's certainly top of mind for the working group. So for when we visit Singapore in a month or so, ACRA, the Singaporean regulators, very kind, has offered to perhaps see if they could connect us with all the other ASEAN regulators as well, so we can meet with them perhaps in a group setting, which is fantastic. So certainly it's something that's really important to us, as we've seen, for instance, this morning from two of our regulators, stakeholders, their role, they do play quite a significant role. So yes, thanks.
Thank you, Jeff. I don't see anyone else, so I think that you have the inputs that you need to finalize this list.
Thank you, Chair. If I may suggest that we go on with the slide deck, please. The last part we'd like to take the board through is the proposed timeline, which is very important. It links into the deliverables. Next slide. And the next one. What you see in front of you is the proposed timeline for the rest of the year. So obviously at this meeting, we're looking for the approval of the terms of reference, which the working group will take back all the feedback that we received today, and we've heard loud and clear areas of contentious issues and matters that we should pay attention to. We'll bring it back on Wednesday for final approval, subject to working group meeting tomorrow and working through the final version. At the June meeting, we have had some outreach activities, which I'll mention to the board that the outreach activity will happen throughout the year right up to December meeting. So there's not any point in time that we start talking to stakeholders. We welcome conversations at any point during the year. And in June, we hope to provide an update to the board of where the conversations got to so far and some of the issues that's come forth. And then we're hoping to present to the board a plenary report in September with the aim of issuing a final report in December.
Okay, thank you very much, Carla. Any comments with respect to the timeline? No comments. Let me just add in respect to outreach, that as I think I have already mentioned to some of you, there is already a lot of interest in this project. And so some of the outreach that had already been planned for me and staff and the board and etc. in Japan and Australia is being slightly reconsidered to try to see if we can include something on firm culture and governance under the request of stakeholders. It's not our initiative. It was not our plan so far or so soon to be speaking on this project. But of course, if there is a lot of interest in having an initial and very preliminary conversation, we will be available to our stakeholders in these regions, also because it is not foreseen that we will be back there so soon. So it's really just to show you the interest that this is creating, not only from regulators and policymakers, but also on the side of the profession. Andy, please.
Sorry, I'm juggling my electronics. I'm a little late. I just wanted to make sure, I mean, December is when we've got so much on our agenda. Is that really, can we really do it in December? Guys?
We can do it in September.
I was thinking the other way. No, it's an important, I mean, well, I guess we're not going to prove something if I guess I'm relying on everyone's judgment in terms of how thinly people are spread in the bandwidth. But it just seems that once those comment letters start coming in and we start processing it, it's going to be pretty adventurous for everyone to try to do that.
If I may, I think that we can still keep this, but with some comment like subject to the capacity and also subject to how this project or this work will develop, because we don't know. So I think that, again, we should keep very open. This should be a tentative timeline, but with some openness to approve this final report in September. or in March or whatever. I take that opportunity to let the board know, but of course, nothing has been decided yet. But it is our intention to, between September and December, probably set up some calls with the board to make sure that when we get to the December, that we have had the opportunity to discuss, if necessary, some issues and some topics. So we hope that this is going to be, of course, a very important meeting, but that we are going to try to take some pressure out of the December board meeting by anticipating some conversations.
Well, I'd love for it to be in December, because if you put it in March, I can't vote for it. So
one more reason not to delay it. Ken, you wanted to say something?
Yeah, I mean, and I'll be brief, Gabriela. I think the plan is, and Chana can correct me if I'm wrong, but the plan is really to provide the board with the preliminary report in September, and that would be the occasion then for the board to really have a substantive discussion on direction, particularly in terms of scoping of the what might be a project, if that's where the working group will go in terms of its recommendations, and for the board really to spend the time really to dissect the preliminary findings, and perhaps what might be some tentative recommendations in terms of what the board might consider in terms of action items coming out of this work stream. So in other words, all to say is I would not expect the most substantive discussion to be happening in December, because would be very late. But if in September already we can target very substantive discussion, try to iron out all the kinks in terms of the scoping issues and the focus and basically the approach in terms of the way forward, then that will give the working group the last quarter to make some refinements to the final report, and then present that to the board in December with hopefully a project proposal for the board to consider. And if the project proposal is too ambitious, then sadly for Andy, he might not be able to vote on it. If it goes to March the following year. But directionally, that sounds about right to me, and we can be flexible.
Yes, I mean, if we have the substantive discussion in September, then we can see how we go in December. I mean, it's a very important and huge project. So I think, as Gabriela says, let's take this as tentative and see how we go. I think our friends have come online, so.
Right, so let's go.
Yeah, I'm introducing. Are they online? Okay, all right. Welcome, Jeremy and Rebecca, to the IESBA board meeting. Sorry, there was a bit of confusion because the US has gone to daylight savings last week, so we got our time wrong by 1 hour. Anyway, let me introduce you to the board. So Jeremy Hirschhorn was appointed as the second commissioner of the Australian Tax Office in April 2020. He has overall responsibility for the Australian Tax Office's client engagement group. This group plays an important role in working with the international tax community through collaborating with other jurisdictions. The client engagement group improves the way tax administrations work together to address arrangements used to evade and avoid tax. And then before that, as Deputy Commissioner of the Public Groups and International from April 2015, Jeremy was responsible for ensuring that the largest Australian and multinational companies met their corporate tax obligations and providing the Australian community with confidence that these large companies were being held to account. Prior to joining the Australian Tax Office, Jeremy was a senior partner in KPMG's tax practice. And then we also have Rebecca Saint. She's the Deputy Commissioner for the Public Groups business line. In this role, Rebecca is responsible for overseeing tax administration and compliance for public and multinational groups. She plays a key role in the tax avoidance task force, leading compliance programs that ensure the largest businesses operating in Australia pay the right amount of tax. Rebecca also leads the advisor strategy, which focuses on the role and intermediaries play in supporting large businesses. Rebecca also participated in IESBA's global tax roundtables in 2022. Over to you, Jeremy and Rebecca.
So thank you very much, Channa. And just to check that we're coming through. Can you hear us?
Yes, you're coming through.
Excellent.
Yeah, we can hear you.
Excellent, thank you. So look, thank you very much for the opportunity to address the board on this topic of firm culture and governance. Look, we see IESBA as playing a critical and much needed role around the standard of firm governance and culture as an international body, because we see this as an international issue, particularly as the firms become international firms. So in Australia, we've seen the consequences, and we're living through the consequences that can occur when culture and governance breaks down within a firm. And we've had a pretty busy year on that front with multiple parliamentary inquiries, investigations, and law reform. So why are we here as the Australian Tax Office? So we are a revenue collector. We do not have a direct role in regulating the profession. In Australia, we have the traditional role of the professional bodies. In tax, we have an organisation called the Taxation Practitioners Board, which specifically regulates some tax advisors. But obviously, how the large firms operate is very important to the tax performance of large corporates in Australia. And so the ATO has played a significant role in trying to positively influence ethical and professional standards in the big firms. So what do we think that we bring to this discussion? So we see the big firms through the lens of their tax division behaviour, including how they operate internationally. We also see interactions of the firms with government, both in consultation and as a purchaser of services. And as I said, issues of ethics have been at the forefront of public debate in Australia over the last year, so we've had to spend a lot of time thinking about that. Now, my hope today, Channa and board, was to really, it's probably really to raise questions or areas where we think there are tensions in a firm, which, and I think all the firms are striving to be ethical firms and have many excellent people in them striving to be ethical. But really to draw out some of the areas where we have seen pressure on those firms achieving those aspirations. So I've got about maybe 6 or 7 areas that I might touch on, but I first wanted to mention this concept that we have of a systemically important firm, because we think that once a firm gets to a particular size, it fundamentally changes how it has to think about itself, and indeed how society thinks about it. So our concept of a systemically important firm is a firm which has the ability to have industry or economy-wide effects in a local jurisdiction. And we would say that once you get to that size, public interest, that linchpin of the ethical framework, is much more important, because you can actually change, you can change how things work. With being systemically important brings a greater demand for transparency and public accountability. And really, when I look at the big firms in Australia, we actually see them systemic across 4 markets: financial statements audit, tax advice, private sector consulting, and also government consulting. And you get this tension where around, often you hear the phrase, are they too big to fail? But possibly also, does a firm get to the size where it's too big to actually manage its conflicts? So I might just touch on a few of the areas that we have seen where tensions arise. So I think we've previously spoken to IESBA around conflicts between tax and audit services, where obviously audit independence is critical. It's critical, particularly where the in-house finance function may itself be involved or conflicted in terms of the events which give rise to an accounting issue, and that tax falls potentially right within that, where if the finance function has been involved in a tax position, it really needs a truly independent view. Under Rebecca's leadership, we have introduced something called the Large Market Tax Advisor Principles, which all 4 of the big firms have signed up to in Australia, which are really, we would say, a credible standard for the tax function of a large firm. Now, but moving beyond tax, I think one of the things we've seen in Australia is that there are different conflicts that arise that have to be thought through deeply when a firm advises government. And it's very different when you're advising a government how to change the rules. And that's whether you're paid or unpaid. And this really brings public interest to the fore. If you are participating in one of these processes, public interest should be your absolute driving force. But it's actually potentially non-reconcilable with duties to normal clients in the affected industries. And I think we saw that in Australia. The other point which has arisen in Australia in a different context is that when you're providing services to government, the client may not be the procuring officer and it may not be the head of the procuring agency, but the client, the true client, may be the broader government or the people. And so this can itself bring conflicts which need to be managed. A second aspect to draw out is where there are different cultural perspectives and challenges in an international firm. And I think this is a real, again, why I think it's so important that IESBA plays in this space, but I think this is actually a real challenge for the firms. And the first one is, are you truly an international firm or are you just a network of firms? And are you saying one thing to your clients and another thing to regulators when things go wrong? Now, what this leads to, I think, is around ethics, potentially, is lowest common denominator issues. So what happens in an international engagement where there are, in a sense, different norms or standards in different jurisdictions, or even just different attitudes? And we see that quite often in tax. The different countries and societies have different norms in relation to tax compliance. And there's a really interesting question which arises, which is which public interest, which standards are those that should prevail? And I would put that if you're truly an international firm, it should be the highest standards. But if you operate as a network of firms, you may have a challenge that you slip to the lower standards. And I think what we see in practice is what happens if the local arm of a firm is not satisfied with the ethical position of another member firm, but is actually forced to deal with them. The next point I'll touch on is that there are absolute challenges with incentives. And I think really our perspective would be that incentives really matter. Financial and indeed internal recognition incentives really matter. And that seems to be very hard to have a balanced scorecard type incentive system. It often seems to us to be very revenue-based, not even profit-based, let alone risk-adjusted profit-based, but it does seem to be very revenue-based in terms of both hire and fire decisions. But perhaps more importantly, and I'll touch on this later, revenue seems to be very important for promotion into management roles, which brings its own problems, which I'll come to, as I said, I'll come to. The next point, and this is a question again, is as the firms change in their weighting. So in Australia, the big four firms have a very high weighting to non-traditional businesses. They have very big consulting arms compared to their audit and tax arms. And I sometimes describe this, are they audit firms at their heart or only at their start? And it really brings the question is, does a critical mass of lateral hire partners, particularly in the non-traditional businesses, who are seen as very successful because they're bringing in lots of money, does it actually change the mindset of the partner and indeed the firm? Does the sort of the self-concept of partner and partnership move from being a steward for the next generation to being a highly paid executive? And the flow-on implications for how a firm thinks about ethics. And I think there is a risk that even in a firm which takes this very seriously, you run the risk of an audit or traditional business which is highly focused on compliance and ethics, but then is isolated and almost ring-fenced within the broader firm, and a consulting business which may have a shorter-term focus. I might now move to governance. And I think governance is something where it is being examined very closely in the Australian context. So if you start off with the position that partnership with joint and several liability is ostensibly a very high form of mutual self-regulation. The partners have a great interest in ensuring that the other partners behave well. The question that is being considered in Australia is, does this break down when a firm gets to a certain size, especially if liability limitation schemes are in place? Does the discipline of joint and several liability fall away? I think we see this in a movement to more corporate style models of governance. You know, we see CEOs, governance boards and the like. But indeed, does this stick when a board or a CEO actually relies on the votes of the partners that they are meant to manage? And are there problems with the CEO being able to deal with problems from high earning, well-connected partners within the partnership? You know, can a powerful partner block effectively be immune from this form of governance? Going back to what I said, I think there are specific governance risks where promotion to management is based on a revenue base. What you end up with is potentially disproportionate senior ranks from successful or what are perceived to be successful business lines. But often, and I think we've seen this both in Australia, but we've seen it in other jurisdictions too, is when problems emerge. It may well be the people who are responsible for those problems who are now in the management positions that are meant to resolve those problems. The last point that I wanted to raise before maybe open for discussion and for Rebecca to add any points that she would like to, is I think a part of an ethical framework is to ensure that there are effective consequences and internal and perhaps external signalling of those consequences. Now, I think what we have seen is that often these matters are attempted to be managed in-house. There are challenges with transparency, certainly very limited transparency externally, but often no transparency really internally. You know, the partner is let to leave with dignity, perhaps even celebrated on their exit. Now, obviously, there is a challenge there to balance fairness to the individual, but I think it's fair to say often there is little signalling to others that there are consequences for breaches of ethics. And really, the last question that I would note to the board is, particularly, I think maybe this is particularly in a big firm, is there is a tendency to ultimately become rules-based, only focusing on the rules and law breaches, and lose sight of the ethical overlay, effectively shape yourselves around a lower standard. And I think this is obviously a challenge for the firms. It's also a challenge for a standard setter such as IESBA. How do you ensure that the firms do not just become rule-based, but actually remain principle-based as well? So, look, I'm conscious that I've spoken a lot non-stop. Rebecca, if there's anything you wanted to add immediately, or maybe if I throw open to the board for any questions or clarification.
Thanks, Jeremy. I think it'd be great to open up the discussion.
Okay, thanks, Jeremy and Rebecca. So we will now open it up for questions, reactions from the board. Yeah, Mark.
Thank you. So it's quite an interesting challenge that you raise, you know, because we've long had this concept of systemically important firms, and you know, I can accept the fact that there is a tension, there is a concern that something grows too large to effectively manage conflicts, but in a sense that is a wider failure of the regulatory regime in place in a jurisdiction, and not necessarily just one that can be solved through anything that we can do in terms of the code of ethics and in terms of thinking more widely about ethics and independence related issues. So I do think that there is a challenge for IESBA to respond to, but equally I think as a board we have to be careful not to take on a wider problem that's not within our jurisdiction, as well as thinking about, you know, what can we genuinely do to address some of your 7 challenges that have come out through your observations.
Yes, and Mark, look, I would say I think this is a very hard challenge, and there is an interesting question as to where it sits. Does it sit in hard regulation? You know, in competition law, antitrust law? Or I think there's also a question about for the firms themselves, do they, should the firms themselves be thinking about what happens when you become too dominant in a market, or in a sense, economy shaping? Is there a natural limit to your size, which I know is very hard for any CEO to limit their business size? But on the other hand, I think at the very least, it changes how you have to think about conflicts and how you engage. I think as the CEO of a systemically important firm, I think the concept of conflict moves away from an engagement by engagement conflict check. I think you have to think about your effect on the economy much more deeply. But I agree, it's hard to know where that challenge sits. Does it sit in an ethics context, in a competition law context, or some other regulatory context, or does it sit on the shoulders of the management?
Can I just add to the comments that Jeremy's made there? And I think it is a great question, and I don't think that the answer resides with any one body or jurisdiction alone. I think, though, there's always going to be hard limits to the extent that regulations are going to be able to prescribe rules around some of the issues that we've observed, and indeed new issues will arise over time. So I think, perhaps the role for IESBA is more about, well, where is that grey space, and how does the profession and firms within that profession actually have processes and cultural or governance settings that allow them to identify when these new unregulated sort of questions, difficult conflict questions arise, to make sure that they're actually dealing with those quite openly, transparently within firms, and meeting the ethical and societal expectations that communities have around how these firms should be thinking and approaching these issues. So I think it's probably a bit of a mix. I think ethical standards will really drive the approach of firms and professionals to some of those very tricky questions for which I don't think regulations are going to be able to provide all of the answers.
Gabriela?
Thank you very much, Chana, and thank you very much, Jeremy and Rebecca, for accepting to speak to this board today. It's really a pleasure, and it's a privilege to have you here and to listen your perspective about a lot of things that concern us. I don't have exactly a question, but just two reflections on which I think you will not have a response. But anyway, I was particularly impressed by your comment about international frameworks versus local or jurisdictional frameworks. What if a jurisdiction has to deal with something because the firm is international, but has to deal with something which happens in another jurisdiction, or it's ruled by another jurisdiction where the benchmark or the framework is not the same. This is really a puzzle for us to solve for everybody, because we can say that this and taking this systemically relevant firms approach that you started by mentioning, I would say that all or almost all the firms which are systemically relevant are international by nature and definition. So we could think about, for instance, these firms being subject to an international framework, which should help solve somehow the problem. But then we have a contradiction or a tension between the framework, which is international, and the enforcement, which is by nature jurisdictional. So I think that there is a lot of value in exploring the value and the importance of having international frameworks in this respect, and we have seen others advancing some of these. It's not easy, but it's certainly valuable. But then we have this enforcement problem to be solved until the day where we have the same framework to everybody, which should be really an objective, but we are still far from it. The other reflection is on the incentives and on this practice of promoting partners or management or whatever people, depending on the revenue. Well, I fully understand what's in your mind. My question is, what, if anything, and probably something, can the IESBA or any standard setter do in that respect? Do you think that this is an area where we should do some work, reflect, make something with respect to this kind of incentives?
Yes, thank you, Gabrielle. And look, really, I'm glad that we have experts like the board to think about these problems, because I think they're very hard. They're very hard problems. I had been reflecting on how you might even start with some of these issues, particularly the international issues. And I don't, to Rebecca's point before, I don't think that they are the sorts of issues that you can have hard and fast rules, either in regulation or in guidance from a body like IESBA. But I do think there is at least a role for IESBA to, in a sense, call out these challenges, even if you are not prescriptive as to how the challenges are met, but to call out the challenges, and so that both local and international management of these firms consciously think about their solutions to the challenges. I think our perspective would be that it seems that these are challenges that people have not necessarily thought deeply about, and so stumble into problems. Whereas if they had thought about them beforehand, at least they would have made a conscious decision. So I wonder if there is an element of putting out some of these challenges and then, some research, some consultation, but maybe at the end it is really just explicitly putting these challenges on the table and saying that we maybe expect management of systemically important firms to think about these and come up with a position rather than prescribe that position.
Thank you very much for that perspective, which I very much subscribe to. Chana.
Rania?
Thank you. So I just wanted to share with the board and with Rebecca and Jeremy a burning thought that I've had all day. A recurring theme that we've had throughout the presentations throughout the day was about this focus on profits and this now Rebecca mentioned the impact on society, Jeremy mentioned the impact on the economy, and so it brings to my mind the conversation that has been had about the corporate world and the need to shift from a focus on profits to the discussion around the triple bottom line and ESG. And so I'm just wondering, is this the sort of conversation that is being initiated or is perhaps called for firms, accounting firms? Just, I would be interested to hear your reactions to that. Thank you.
Yes, I think these are good points. I think what we're certainly seeing in Australia is a recognition that these firms are so important to the economy and the country, but are actually much less transparent than comparable corporates. And so there is certainly a discussion about how, as important entities in the economy, should they be held to the same levels of transparency, public transparency, as a normal listed company, even though they are private. So there's certainly a transparency point. My perspective would be that a firm which lives to the ethical standards set by IESBA is probably aspiring to a higher bar in some ways than a traditional triple bottom line or ESG type mindset. I think the challenge is how to achieve those aspirations. But there is, I think, certainly a fear that the big and from our government representatives, our senators, there's certainly a fear that the firms have become, in a sense, too corporate in their desire for profit, and have maybe lost connection with their professional ethics roots. But Beck, I might pass over to you.
Yeah, thanks, Jeremy. And I agree with those comments, and it just sort of reflect on the process that we went through with the Big Four in Australia in terms of developing the large market advisor principles. Now, these principles sort of provide a governance framework that all of the Big Four firms have adopted in terms of their tax advisory practice. Now, this was a completely voluntary exercise, so we brought the firms to the table and facilitated the development and ultimately their adoption of those principles. Now, there were two key drivers that we put to the firm for the need for these principles, and it sort of goes to the heart of your question. Really, the two key drivers was the recognition of the role that these firms play in the community, and in particular in their size and scale in terms of government consulting, and also The second part being they had a really important role in terms of helping to build and maintain community confidence in the tax system, both directly in terms of the advice that they were giving large corporates, but also indirectly as market leaders, other firms would follow, and certainly other tax professionals would follow their lead quite often. So I think that the two key drivers really go to the heart of a recognition that there is some societal expectation that the firms will provide a level of transparency around how they're managing some of these areas where there's a great deal of community interest in Australia and certainly a great deal of interest at political levels. So I think it is a bit of a step in the right direction in terms of a general recognition, at least in this particular area. I think the question that remains is whether that isn't much broader than just that area that was addressed, particularly by the large market principles.
Thanks, Rebecca and Jeremy. If there's no questions, maybe I'll ask a question from Jeremy. Jeremy, from what you have observed in the last few years in Australia, do you think it's a case of a few bad apples?
So I think, Chana, that's an excellent question. It's very interesting because I've been, I spent the first half of my career in a big firm, and I've spent the last 10 years in government. So and one of the things I would say at the start is that I think the private sector has a tendency to blame problems on an individual or a small group of individuals, and the public sector has a tendency to blame things on systems and processes. And there's probably a bit of, the truth is probably somewhere in the middle. My perspective is that when things go wrong, it probably requires a few individuals or, groups of individuals to do the wrong thing. But fundamentally, they are operating within an incentive structure. And my perspective of the recent events in Australia is that there were very strong incentive structures and very weak disincentive structures for the sort of behaviour that we saw. And to me, it was not a few bad apples. It was actually basically bad, I think a bad incentive structure, which overemphasised revenue and winning new clients. It required people to respond to those incentive structures, which they did. But fundamentally, and look, it's in the public domain. There were things called rovers, partners who are set up to rove the world for new clients. That structure basically incentivised a certain sort of behaviour that was, a senior management decision. Some people responded to that incentive structure. They probably made some bad choices. Well, they did make some very bad choices. But also, I think it was a failure of the management structure to respond to it when the problem started becoming apparent. And part of that failure of the management structure to deal seriously with it was that problem that I spoke about before, which is there's a real problem when people get promoted off the back of being successful or ostensibly successful when, in a sense, their position is responsible to the thing which they now have to manage. And so I would say this is not a problem of a couple of rogue partners. This is fundamentally a problem of bad incentive structures, or let's say unbalanced or unconstrained incentive structures, which actively rewarded a certain sort of behaviour without safeguards, which a group of partners, and again, like not one or two, but not, still a small number within the context of a large firm, they responded to those incentive structures. They did what they were meant to do. And then a failure, obviously, of management when the problem started emerging. So I would definitely, so Channa, that's a really long answer. The short answer to your question is I do not see what happened in Australia as a problem of a few bad apples.
Thanks, Jeremy.
Thank you very much, Channa, and Jeremy, thank you very much for your insightful presentation to IESBA. I think the various points you've raised, certainly, at least in my book, will constitute a lot of food for thought. And I'm sure for the working group as well, as they're going to be pouring to the analysis of the issues and the factors, the root causes, etc. So there's a lot there to analyze and really think deeply about. I suppose I had a few reactions to what you've shared with the board here. First of all, your observation that some of the large firms have really grown into to such a large size that, at least in the Australian context, they are effectively systemically important in bodies or organizations, and therefore, to my mind, when an entity gets to that level of size or significance, there is a question as to whether it ought to be considered a public interest entity. And depending on which body in Australia sets the definition or the delineation of which entities are public interest entities, I'm not sure whether it's the IESBA or the Australian government. The question to my mind is, could some of those large firms be considered effectively public interest entities and therefore submit to statutory audits and audit disclosure and transparency requirements that would go with that? So that's, I suppose that's one question. The second question I had was really, your observation that essentially when the firms are providing services to government entities, they are effectively putting themselves into a sandbox in which really the public interest almost kind of plays a larger role relative to their serving other clients, private sector clients, for example, and therefore they're almost kind of in a different dimension. And I suppose my question is, maybe it's twofold. How would, or I don't know if you've given it any thought on your side, but how would you almost kind of describe the public interest in that sense? And maybe you alluded a bit to that in your reference to essentially the client being government, and therefore the public at large, or the people, as you might have used that term. And secondly, would you see a perception of a difference of understanding between the consulting side of a firm's business versus the audit side in terms of how they understand the concept of the public interest? Because in the audit context, clearly, auditors are very much focused on serving the broader interests of investors, and there is a whole system of accountability and transparency of reporting on the audit side, but much less so on the, let's say, on the non-audit to consulting side. So a couple of thoughts I had there. And I had a third question as well, in terms of your reference to lowest common denominator. And I just wondered if you could elaborate a little bit, because you mentioned that in the context of referring to firms as international firms versus collectives or networks of firms. And I think you were looking at it through the lens of the services it provide on tax. And you made a reference to a tendency for the firms to maybe play towards the lowest common denominator. And I just wonder if you can elaborate a little bit on that, so it's a bit clearer in terms of my understanding of your point. Thank you.
Yep, shall do. And so I'll address each of those 4 points. the first round, public interest entity. So I think indeed Australia is inevitably moving to a state. I mean, there's going to be a policy decision, some recommendations, but I think fundamentally, I think each of the firms now has acknowledged that locally they are effectively a public interest entity, and will have to have sort of the reporting standards of a corporate, and perhaps even the governance standards of a corporate. But I would say, and this goes to what these firms truly are, it's actually that they internationally operate as a public interest entity. So this is the clash between how the firms, in a sense, truly operate and how they represent themselves as clients versus how they represent themselves to regulators. That, in fact, I think, and this is obviously an international question, not a local question, that merely reporting on the Australian arm of a global firm is only reporting on a segment of a public interest entity, not the whole public interest entity. So I think in the domestic level, yes, to me, it's a inevitability that these firms will be seen in jurisdiction after jurisdiction as the equivalents of public interest entities. The big question to me is when and how do we address the fact that they act as the network is really acting as a single entity, which itself is of a global public interest. The second point you raised was around when you're in the sandbox of consulting to government on the rules. So, and here I draw the distinction between just like, let's say, normal services to government, whether that's an internal audit, whether it's an operational improvement consulting, normal consulting versus consulting on policy and setting the framework under which the clients will ultimately operate. Really, the challenge, and I don't have answers on this one. I would just say, if you are in the room changing the rules of your society, public interest must be at the fore, and it must, if you are to be in the room, it must be over and above the interests of your clients. If you cannot be in that position, then you shouldn't be in the room around setting the rules. And indeed, the point I raised is, if you have a dominant advisory position in an industry or intend to have one, it's a very dangerous position to be in, to be advising government on how to set the rules for that industry. It's not a traditional conflict issue. The third issue you raised was around the concept of public interest and consulting firms versus audit firms. And again, none of this is meant to be a negative comment in relation to consulting firms, but I would say that consulting firms, from my experience, rely on either their internal culture and the discipline of the market to set up, in a sense, their operating rules, whereas audit firms have had a long history of ethical standards, which are, in a sense, industry level standards. I think there is a risk that the consulting practice, as I said, and particularly in the, a growing consulting practice has the potential to fundamentally rebalance the weight of a firm so that it thinks of itself as a consulting firm with an audit division rather than a firm which is subject to ethical standards, which has some consulting, which is also subject to those standards. And I do absolutely agree with your point that auditors have had to grapple with the fact that their check comes from management. Their appointment is by the board, but their duty is to the capital markets, to the shareholders. auditors have had to grapple with that forever. Whereas I think for other businesses, it's often who pays your checks, the discipline of the market. Your fourth point was around lowest common denominator, and to draw out an example of that. So look, I'll draw out a specific tax example, because tax is what we have discovered, the tax office, we're very interested in tax, of course, is that tax and what is an ethical position in relation to tax very much differs jurisdiction by jurisdiction. And so and often the rules, so the regulations or the standard expected of an advisor differs jurisdiction by jurisdiction. So in Australia, for example, we would have a cultural expectation that an advisor would only give an opinion to the standard of something being reasonably arguable, which is about as likely or not to be correct. And the firms would say that their desired standard is higher than that it's a more likely than not standard. Under for example, the US regime, that is that the advice must be plausible, which is a much lower bar. Now, when you get a cross-jurisdiction engagement, those tensions come out. What standard should the advice be at? What's the ethical overlay that should play? If I make it even more rich, imagine it's a 3-country engagement, which involves a conduit jurisdiction, which aggressively allows tax concessions or incentives for profit shifting to that jurisdiction. How do the ethics play out in that multiple jurisdiction engagement, where every country would say we are actually operating completely within the norms of our country, but for one of the member firms, effectively the overall engagement is at a much lower standard. And so to me, there's a really interesting question there. I wish I had answers to it. But to me, it comes to the heart of what does it mean to be a global firm? And if you're a global firm, I think it means you should be operating at the highest level. But in practice, I think if you still view yourself as a collection of member firms, the tendency can be to slide to the lowest common denominator. And the final point, recognizing that it's very hard in a jurisdiction to have a higher standard than your competitors. And so it's very hard to maintain just through commercial pressures, it's very hard to be pure if others are operating at a lower level. I hope that addresses some of your points, at least in part.
Yeah, that is true until the day that the competitors who have a lower level have a big problem with a legal problem, reputational problem, etc. So I think that this is an idea that we should also start highlighting, that if it's not obvious that you can have an advantage by having a higher ethical level, this is not immediately clear, but it's clear that this is something that allows you to avoid some problems. So it's really a risk management instrument or something alike. But if I may still, Chana, do you allow me, and Jeremy, can you just respond, or not respond, but there is something that still on the incentives, on the wrong incentives, or the incentives to do the wrong thing. Yes, we have bad apples, or not just the bad apples, people doing the wrong things within the organizations because the system is wrong. Everything that you said, I fully agree. But then what we have seen in some of these big cases is that you have the problem, you have someone in the organization doing the wrong thing, but then the organization does not take action after having been aware of the problem, so that it could be stopped early enough not to be as impactful and as dramatic as some of these scandals and problems have been. And I think this is also a matter of size and impact of the problems, and not only of the problems themselves, because some of these problems could have stayed at a very low level of impact should the organization itself had the initiative, taking the actions that they have, that they are required, I'd say, to take as soon as they are alerted for one of the problems. And here, it's less clear to me what is the lack, what is incentive, the positive incentive that is lacking to the firm, to the management, to those charged with governance, to do what they have to do as soon as they identify internally a problem.
Yep, thank you. And can I maybe make, again, I don't have really the answers, but a couple of observations. So one of them is that I think often it is the problem that the person who was the start of the problem is now the person in governance who is meant to address the problem. And it's very hard within the politics of a firm to admit that something you started has gone wrong. So I think that is I think a common factor in many of the scandals. The second observation I would make is that I think, and this is not just the firms, but I think it's also corporates. If we look at some of the corporate scandals, that if you go to the old traffic light thing of the green, the orange, and the red, that there's a lot of focus on the reds by management. But actually the things that they should be focusing on more are the things which are, I call them the super greens, the things that look like they are going unexpectedly well. And I think, again, a common theme of many scandals has been that at the start, it looked really successful. And, if I was to make, again, sort of an observation to the managing partner of a firm, it would be that your greatest risks are in the parts of your business which are going unexpectedly well, because there's something going on that you don't understand. And to me, that, again, so I've been reflecting on that question, how do you stop these things early? I think it is actually that management should be thinking about not just about the things which are clearly going badly, but also about the things which are going dramatically well. I'd also say, if my advice to the governance board of a firm would be very, very careful to be fully on top of issues that might emerge from the part of the firm that your senior management has come from, because that senior management is likely to be conflicted in thinking about how to resolve those problems.
Thank you very much, Jeremy. Chana.
Thanks, Gabriela. So I don't think there are any more questions. So thank you, Jeremy and Rebecca, for joining us. It's pretty early over there. Sorry for the confusion, but thank you very much for your insightful presentation and some of the challenges that you have been dealing with over the last few years.
Yeah, thank you very much, Shanna, and thank you very much to the board for the opportunity. Hopefully, some of our experiences will be of use in your very important work.
There will be for sure. Thank you very much. And I suspect that this is not going to be the last time that we speak or revert to you to get some insights and some precious information. Thank you very much for making yourself available to be here with us today. Thank you. Bye-bye.
Thank you.
Okay, so Chana, anything else on your side for today?
No, that's it. So what we will do is we will reflect on the feedback we got from the board on the terms of reference. There's a working group meeting tomorrow afternoon, and after that we will circulate a copy for the board's review, and then with Ken and you set up a time on Wednesday to discuss the revised TOR. Thank you everyone for your input and insights today.
Thank you very much, Chana and Working Group, for offering us this incredible opportunity of these days, of these presentations and of these discussions. And thank you to the board for the very attentive and attentive way you heard and listened to these presentations, but also for your very insightful contributions and dialogue. This is exactly what this board is supposed to do. I'm really amazed by this day of discussion on the kickoff of the Firm Culture and Governance Project. Thank you very much. I think we are now, we now have a lot of material that we were missing still this morning, and that will be extremely useful to move forward with this project. I also want to thank Robert Buchanan for having spent the night with us, because I understand that you saw the morning, the dawn coming, and I can't imagine what it is to be there for, I don't know how many hours, 8 hours, 9 hours, listening to these presentations virtually over during the night. Thank you very much. But I just hope that it was
most stimulating. Thank you very much. Most stimulating.
Thank you.
And well done. Congratulations to the board on, as you say, Gabriella, a rare day of being able to really reflect on the big issues, and so it's a treasured day to be able to do that. Thank you, and thanks for being part of it.
Thank you very much, Robert.
I'm still awake.
This is also
still awake.
Yeah, that's a good sign. So this is also part of our gradual transition to a more strategic board. I think this is exactly what in the future we will be doing most of the time, which is thinking carefully about the direction to take, having a strategical discussions and move forward on the basis of the contributions of the board members to the projects and initiatives that we will advance in the near future. Thank you very much for today. I think we are over, and tomorrow we'll start at 9. I wish you a good rest after this long day, and yeah, thank you very much.